thanks for having me. And on behalf of the patients I serve, really appreciate the opportunity to tell you what we're doing.
Thank you. Dr. Stanley Crook from In Lorem. Thank you.
Coming up on the other side, Tesla shares up more than 30% in the last 3 months, but still down 17% year to date. The EV maker set to report after today's closing bell. We're going to tell you what to expect, maybe how some folks plan to trade it after this.
Guests.
Well, Tesla is set to report earnings after the bell today. In focus, of course, is the normal automotive story, but also Tesla's autonomous vehicle plans. Joining us right now with what he's expecting is Tim Higgins. He's the Wall Street Journal business columnist and a CNBC contributor. And Tim, fill us in. What are you looking for?
I think investors are looking for a lot of commentary and color from Elon Musk about the status of those robo-taxis that were launched in late June in Austin, Texas, in a very limited fashion. There's just a few out there. He's expanded it a little bit, looking for how's it going, what's his expectations. This is where a lot of people are betting on the future of the company here and these few little robots that are out there in the world.
That's going to be important in part because the company is kind of going through a transition period. Elon Musk is back at work. They've moved out some of their executives. In the last quarter, they actually reported a 20% drop in the auto revenue. And that was something that people were kind of focusing. So how much of this is going to be on the present, what they're seeing with their absolute issues in terms of car sales, How much of it is that future component, Tim?
Yeah, clearly the car business is hugely important for the now. But today's call with analysts after the results drop is really going to be a vibe check, right? How is Elon Musk doing? How's his tone? Is he excited? Investors looking for kind of that growth story, the return to a growth story, which you're not seeing in the delivery results for the cars. They're betting that the future of the company is going to be in robots. And so we're in this really weird period, and hence they're looking for things like, is he excited again, or is he, is he upset? Is he really locked in? Because he's been so distracted in the last few years. Tesla investors are hoping that now he's back to what some are calling the wartime CEO. And it's not clear yet that he's 100% focused, or even, he's so busy if he's 10% focused. They want to know where his mind is.
Yeah, and they're going to want to know about the robo-taxi early efforts in Texas, what they're seeing from that. What are the reports that you've been hearing in terms of how that's going so far?
Well, he's had folks in it, real people. I mean, they are somewhat associated. They seem like they're fans or they're Tesla customers, and they've been somewhat positive. People are on X, his social media platform, talking about how great this service is. But it hasn't had the huge test yet that Waymo's had. Alphabet's robot taxi service, which is operational in a lot of cities. I'm in San Francisco. You can hail one of these. You pay money. It's a business that is growing, and Tesla is still in those really early stages. And the bigger question is going to be kind of going forward is operationally. How do they get to the next cities? How do they grow that beyond just the small area in Austin that they are? It gets to the question of how is it a business?
Right. The other part of that, though, is XAI. A lot of excitement around that, too. You expect we'll hear a lot on that front or not?
Well, they're separate companies. There's this kind of fever dream among some investors that maybe Tesla would acquire this startup that Musk started a while ago. But Musk recently on X is saying he doesn't see that happening. He wants to bring a vote to Tesla investors with the idea of maybe they can invest in XAI like SpaceX, his rocket company, is supposedly doing. There's some synergies there potentially, but it's hard to imagine a scenario that Musk would want XAI under Tesla. It exposes that startup to all the challenges of being a publicly traded company under Tesla. And as we all know, there's been some kind of challenges with XAI in these early days. Its chatbot, Grok, having some controversial comments that trended on X.
Don't you think long term, I don't know, I understand right this moment not wanting to do a transaction like this, but long term, given just the way large language models work and what Tesla has and what XAI has, and also just the need for cash, the big cash burn. I'm not saying it's going to happen today. Maybe they need to solve some of the other issues first. But you don't think that long term, at 3 years from now, it'll be one institution?
It's at this point, Musk has kept his company separate. There's a lot of overlapping operational things that go on. He shares people, he shares resources at times, but there is some advantages in his world to keeping it a separate company.
Yeah, not the least of which is ownership. Tim,
Absolutely.
Thank you for joining us this morning. We appreciate it.
Thank you.
It's just past 7 a.m. right now on the East Coast. You're watching Squawk Box on CNBC. I'm Andrew Ross Sorkin along with Becky Quick. Joe is off today. Among today's top stories, the big one, President Trump landing a trade deal with Japan, setting tariffs at 15% on Japanese imports, also lowering tariffs on autos. That agreement also includes Japan investing $550 billion in the United States. The news sending the Nikkei sharply higher overnight. We're still trying to unpack some of this and get the details. Not yet completely clear what that $550 billion investment really looks like. Take a look at the futures, though, right here in the United States. You're looking at green arrows across the board. The S&P 500 up about 23 points, the Dow up about 214 points, and the NASDAQ up close to 40 points. I want to get over to Dom Chu. He's got a look at this morning's pre-market movers. What's on tap?
Hey, good morning, Andrew. Good morning, Becky. So we're going to start with a check on some of those big global automakers, as you just reported, after the U.S. reached that trade deal with Japan. Japanese auto manufacturers like Toyota, like Honda, like Mazda, Mitsubishi, all closed up in Japanese trading by double-digit percentage amounts. The tariff on those auto imports from to the U.S. from Japan expected to be lowered to that 15% mark from the current 25% that's being levied across many countries. The European auto stocks, by the way, are also higher in that halo effect on the hopes that the EU can reach a similar deal with the White House, a template type situation. The EU trade chief is expected to speak with Commerce Secretary Howard Lutnick later on today. Let's now turn to shares of Texas Instruments, down just about 10-11% at this point on a disappointing third quarter sales forecast. The chipmaker did report better than expected earnings and revenues for the second quarter, but on the call last night, executives struggled to win over analysts concerned about the ongoing tariffs and trade war issues. Oppenheimer, for instance, said that management's tone on the call was quote-unquote moody, with Cantor Fitzgerald also saying the company was more cautious than about 50 days ago when they projected accelerating quarterly revenue growth. Today's move is nearly wiped out, by the way, all of Texas Instruments' 2025 gains on a year-to-date basis, so keep an eye on TI. And then we're going to finish with shares of Hilton, lower by just about 2% right now, despite the hotel chain reporting a beat on the top and bottom lines. They also upped their full-year earnings guidance as they expect travel demand to accelerate. Those shares are up roughly just about 8 to 9% this year, so keep an eye on those movers. Andrew, I'll send things back over to you.
Dom, thank you for that. Meantime, I'm going to get over to Eamon Javers. President Trump is going to be delivering a keynote address at today's Winning the AI Race Summit. He's going to be his first major speech on the topic since the start of his second term. Eamon is in Washington, and he joins us again this morning.
Yeah, good morning, Andrew. We're expecting the president to roll out what they're calling an AI action plan this evening in a speech at the Mellon Auditorium here in D.C. The White House hasn't put out much detail on it yet. We're expecting some later this morning, but officials are touting this as a big speech by the president. We're expecting three pieces here. The first is on infrastructure and easing the rules around building new data centers, as well as additional sources of energy for those data centers. Second is innovation, where we expect the president to make some moves toward blocking states from regulating AI on their own. And finally, what they're calling global influence. The president is expected to emphasize the importance of spreading American AI worldwide in a bid to keep Chinese AI from becoming a global default. Now, this is going to be the keynote speech capping off an all-day summit hosted by the Trump Boosting Business and Tech All-In podcast, which features Trump's AI and crypto czar David Sachs and the Silicon Valley group, the Hill and Valley Forum. So we'll be over there later today, and we'll bring it all to you. Back over to you guys.
Okay. Eamon Javers, thank you, sir. Appreciate it.
You bet.
When we come back, we're going to get into the business of Mr. Beast. He has the most subscribers on YouTube, and season 1 of the reality show Beast Games breaking viewership records on Amazon Prime. We're going to talk to the winner of those games and the CEO of Beast Industries in just a couple minutes. Squawk Box, come right back.
only in theaters.
Some sad news about a longtime friend of Squawk Box. Larry Bossidy has died at age 90. The former chairman and CEO of Honeywell was one of the first corporate leaders to guest host Squawk Box back in the 1990s. He joined us on the air many times, sharing his perspective and peppering guests with questions until just a few years ago. As a boy in Pittsfield, Massachusetts, Bossidy dreamed of being a professional baseball player and was scouted by the Detroit Tigers when he was in high school. He attended Colgate on an athletic scholarship and joined General Electric back in 1957. He spent more than 30 years there as a key player building the GE we've come to know. He had a successful stint as CEO at manufacturer Allied Signal in the 1990s, which then merged with Honeywell, making him the chairman of the combined company, and when he returned as CEO after a failed merger with GE, cementing his reputation as a corporate turnaround artist. He also served on a number of blue-chip corporate boards like JP Morgan and Merck, and insights from those experiences made him a valued addition to our conversations right here on Squawk Box. Larry and his wife Nancy had 9 children, and we extend our condolences to his entire beloved family, which included dozens of grandchildren. He was a man of loyalty and integrity, both in business and, more importantly, in life. And he was a dear friend to us here. In fact, the most to Joe Kernan, who joins us right now on the phone. And Joe, I know this one hit you pretty hard.
It did. It did. Hey, Andrew, I knew Larry for over 30 years, both professionally and as a friend and a golf buddy. And he was simply the best. He had a big presence. Everybody knows that. He was good looking. At least I thought so. Good looking. And he led. He led in whatever setting with such charisma and forthright resolve. And what a sense of humor and love of life. He especially loved his wife Nancy, his kids, and all of his grandkids. Many grandkids. Guys, he used to tell us, you guys probably remember, he knew all their names, but maybe not all their birthdays. But that was a while ago. He probably ended up learning all their birthdays by now, I would imagine. He also loved this country, and he loved American business. And he loved the companies that he worked for and that he eventually led right down to his core. And God, he was funny. He was so funny. If you got him laughing, he'd get going and be laughing so hard you didn't know if he was going to be able to stop. And everyone knows this, I think. He might have been the fastest human to ever play the game of golf and the most competitive. When I had the privilege of going on a golf outing with him to a great place, whether it was back here in the Northeast or somewhere down south, he had a tendency to monitor my wine intake the night before at dinner. Kind of kidding, kind of. But it was just in case I was going to be his partner the next morning, even if it was just for one of the 9-hole matches out of the 36 holes. He didn't want anyone dragging around the course. And no one dragged, because to get around the course in 2.5 hours, well, we needed to be the first off the tee, which meant we needed to be the first to order breakfast in the dining room so we could be the first on the range. Frost delays were a complete nightmare for Larry. He even used to recommend decaf for me so I would not get the yips. He was as competitive as the day is long. He was handsome. He was truly a man's man. I always told him he reminded me of the great actor Bill Holden in Bridge on the River Kwai. I thought he looked like him. He just did, and I told him, and he always laughed. I have incredible memories, and will miss him a lot. And he's truly one of the men in my life that I admired everything about him.
Joe, I can hear you tearing up as you're talking about this, and I know he meant a lot to all of us, but especially to you, because you spent so much time with him. You knew him so well. We talked a little bit yesterday, you and I, just about some of the things that he cared so much about, that he opened up about here on the set, because he was a three-dimensional person. A stalwart leader, a very competitive guy, but also a guy with a really big heart.
He was a huge philanthropist, too, with the Inner City Foundation, Sanctity Fund, and there was one time when I was trying to do some things, and I called a lot of the really well-heeled people we needed to try and help me with the charity, and Larry stepped up immediately. He was a special guy. He was a he was a hard ass. He was fantastic. You know why he was so great at leading and at business, and you could all you got to do is pull any of the tapes of him as a guest host, and he wanted it a certain way. And like I said, I out of all the men I've met in my life, he's one I truly admire, just about every aspect.
I just want to say, Joe is not always an emotional guy, and so to have this emotion, Joe, it's great to hear from you, but also just to hear your, we all saw Larry in his fulsome glory, oftentimes sitting here giving some of us a hard time, depending on the day and what the issues were. But he was a man of heart.
You should have seen if I let him down, or if anybody on the golf course. He was he wanted. He was so competitive, and he was good, and he was man on a 5-foot putt. If he needed to make a 5-foot putt, you could pretty much just bank on it, because he would do it. Played with many times, probably 10, 12, 15 times for a couple of days at a time. He was awesome.
And again, as you mentioned, tough guy, but man, led with his heart, led with his faith, and always put his family first, which we all completely admire and appreciate.
Mm-hmm.
Yeah. Joe, again, thank you for calling in. I know this meant so much to you.
It did. It was. We'll miss him. I will miss him very much.
Yeah, we all will. Again, Larry Bossidy, a leader at 3 Fortune 100 companies and a good friend of this program, died at the age of 90.
B+.
Welcome back to Squawk Box. Mr. Beast is the most followed individual on social media. His YouTube channel has the most subscribers. Season 1 of the reality show Beast Games shattering viewership records on Amazon Prime. And the Beast Industries business empire includes chocolate bars called Feastables. If you have kids or you just like chocolate, you probably know about it, philanthropy, and so much more. Joining us right now at the table is the president and CEO of Beast Industries, Jeff Hausenbold, and Jeffrey Allen, the winner of season 1 of Beast Games. Good morning to both of you.
Good morning. Good morning.
You didn't bring Feastables with you.
Not today, but I'll ship you some if you need.
I was just in a Walmart and there was a huge display, like massive, and people were just okay. You've been in this gig now. I shouldn't even call it a gig, a job for the last year. How did this happen, and what are you trying to do to what was a one-person company that's now turned into a massive business empire?
Yeah, it's been a great partnership with Jimmy, aka Mr. Beast, over the last 15 months. And as you said, he's the most popular person in social media. 855 million unique viewers around the world have watched our content in the last 90 days. And what we're trying to do is take that fandom, right, that connectivity, and that relationship that Jimmy has with his viewers and fans, and do good in the world and build sustainable, profitable businesses. So you mentioned Feastables, our chocolate brand. It's not just better tasting chocolate that's better for you. We're using that platform to change the lives of kids in the cacao farms. There's about 1.5 million kids that are in child labor. So we're in Ghana and Cote d'Ivoire, where most of cacao comes. We're building schools, we're building wells, we're helping the community so kids can have a better outcome through education, and their parents can be paid a living wage.
How did you find him, or how did he find you? I ask because, by the way, you've worked at a whole bunch of companies, including SoftBank and others. By the way, you were on this broadcast, I want to say a little over a decade ago, at a very different kind of company.
Yeah. I was running Shutterfly at the time.
Yep.
And touching people's hearts and helping people share life's joy. And what we're doing at Beast Industries is kind of the same thing. We're creating content that's entertaining, but also inspiring and educating. We're trying to make kindness go viral, and we're trying to build sustainable businesses that appeal to Gen Z and Gen Alpha. And I came to Jimmy, one of the board members and investors introduced me 15 months ago, and we just clicked. And we had a shared vision of how to create the next generation of Disney, diversified media and entertainment empire.
Okay, so here we got the winner. Off air, you say, I'll say it on air. He's a handsome man.
He's great.
He's a handsome man. You won this whole thing. 1,000 contestants.
Crazy.
$10 million.
10 million.
What was this whole experience like?
It was an absolute adventure of a lifetime. I'm in my 40s, got silver hair. Like, I don't get to do crazy stuff like this often. But more than winning $10 million, more than having kind of the small kind of modicum of fame, is like I have a platform to talk about my son's rare disease. There's only 400 people in the world with his condition, creatine transporter deficiency, and to be able to partner with Jimmy and the Beast team to be able to tell the world about this condition and try to get some emphasis on it is huge.
And just go back for a second. How did you get to be a contestant? How did you think about this? Like, give us go take us inside.
My oldest son, Jack, huge Mr. Beast fan. So like a couple years ago, he's like, "Hey Dad, I want to start watching these videos with you." I'm like, "Okay, I'll watch it." I saw him on Rogan. I'm like, so I watched it. And then I saw Beast Games season 1, apply for it, Beast Games. And I go, gosh, if I can get on this, I can tell Lucas's story, who has the rare disease.
Right.
And maybe I can go far enough to try to win some money. And lo and behold, I won the grand prize.
Did you think you'd even had a chance to become a contestant, though?
If you look at my application video, no. Like at the time, I'm like, it's like not Mr. Beast, it's not edited well, there's no kind of fanfare to it. But in retrospect, I look at it and go, oh, this is me. This is me with my son talking about kind of our plea. Unfortunately, I got cast and the rest is history.
Okay, so what is happening now? What are you doing now with all of this, the fame and the attention that you can hopefully bring to the disease?
We are investing into research. There's a handful of researchers all over the world who are doing this. Not many, but they're mighty. And so now we are just doubling down. And our ultimate aim is, whether it's small molecules or gene therapy, is to find a treatment for kids like Lucas, but ultimately even for kids who aren't even born yet, because rare diseases and science is a little bit slower than I'm used to, but you have to push the rock uphill.
Beast Games 2 just finished filming.
We just wrapped.
So when are we going to see that?
Later in the year. We're so excited. Beast Games 1 was an incredible hit. #1 unscripted show in Amazon's history. #1 in over 80 countries. Over 100 million people watched it. Season 2 is going to be even better. And part of the success of season 1 was contestants like Jeff. Like we have 1,000 people. I couldn't better script out of central casting a winner than Jeffrey, right? He was engaging, he was a team player, he was strategic, he had luck and charisma, and then he's using his winnings for something that's good. And it's just amplifying what we're all about.
Big media question for you. How much, when you think about the Beast Empire long term, how much of it is going to be on places like Amazon, which I wouldn't call traditional, but are more traditional than necessarily YouTube or TikTok or other forms of social media? What does that sort of look like over time, as I think the rest of us are all trying to figure it out?
Yeah, you watch your show every morning, and two key themes keep coming about: the rise of AI and the creator-influencer economy. And we're sitting at the intersection of both of those. And so we're going to continue to be on the forefront of the evolution of the entertainment industry. But we're so fortunate to have great partners like Google and Amazon that are incredible technology platforms that reach billions of people around the world. We're going to continue to create content on YouTube, on Amazon, on other platforms that is short form, long form, unscripted, and scripted. We just want to reach as many people around the world as possible.
So, but it's about everybody. You're not going to be picking one or the other. You think you can't be exclusive in this new realm?
I think it doesn't make sense from a business standpoint because each one of those platforms have a different strength and a different audience base. So we're going to create content for those audiences and be able to continue to be ubiquitous.
Look, you guys are so well known and so many people want to invest in you. Do you need the money? It feels to me like you guys bring in so much. Would you ever go public? Would you ever take on additional investors?
Yeah, we never say never.
Yeah.
Part of the benefit of being public, it gives us a bigger platform to talk to our fans and the retail investors and to be able to give them an opportunity to enjoy this incredible ride from a financial standpoint. Jimmy's about democratization, right? About reaching the common person around the world. 70% of our viewers are outside of North America. And so if we can help our fans be part of that journey in a way that also helps them financially, that's kind of an interesting angle.
Intriguing.
Yeah.
That's intriguing. I had not thought about it from that perspective.
How much do you think that the whole franchise and his brand, it goes to what you've done and winning as well, has this sort of philanthropic piece to it? Because he's supported so many other philanthropic efforts as part of everything that he seems to do. And how much of that is sort of embedded in the company? What does that actually look like for the investors to the degree that you end up doing things that might not always be economic?
Yeah. Philanthropy is the heart and soul of everything we do. We're trying to take views and make kindness go viral. We want to be able to help people give back because, as you know, gratitude and giving is the essence of life happiness. And so it could be something small like picking up trash in your neighborhood to solving a rare disease. So we want to use this platform to amplify in a fractured world is that it's about kindness and connectivity and community. And we think it's actually great for the shareholders because it resonates with our targeted demographic of Gen Z, Gen Alpha, and it differentiates us from all the rest of the entertainment players.
And I'd say the one thing I would add is the biggest takeaway for me, obviously I won 10 million, I got a little bit of fame, but I meet strangers. These are children who come up to me. Their first question isn't, how's Mr. Beast, how much money? It's, how's your son? Have you found the treatment? And that's the most moving thing and most inspirational thing for me is Beast Games showed me a different side of humanity, gave me a ton of hope for humanity, and I'm super excited to see what you guys do in the future.
Can I ask you one final question? And this goes to social media. So we all talk about doom scrolling, and you sit there, you watch all the stuff that is, by the way, is not always about kindness. In fact, the stuff that seems to often go viral, maybe not as viral as Mr. Beast, maybe this speaks to all of this, isn't always about the stuff that you want kids to learn about. And the question is, do you think that there's a moment or a way that we're going to somehow change all of the way this works longer term? We've been in, like, is this a transition period? I'm hoping it transitions to something that looks a little bit more like what you guys are doing rather than where we are.
It's partly why I joined Jimmy on this journey is his content brings people together. Part of our success for Amazon Prime Video was what we're called a 4-quadrant show. We bring people together over 25, under 25, men and women. We don't do politics. We don't do American-centric humor. We're universal in our appeal. And we live in this more connected society than ever before. People are lonelier. They have higher degrees of anxiety and depression and loneliness. And we think our content, our platform, and Jimmy's voice could bring people together.
Okay. Jeff and Jeffrey, thank you. very, very much for coming.
Thanks for having us.
Thank you.
Appreciate it. Congratulations.
Great. Thanks so much.
And, it's an important cause. We'll keep our eyes on all of it. Thank you.
All right, when we come back, a big afternoon for earnings on the way. We're going to find out what the street will be looking for from Alphabet when it reports to its AI strategy. Also, IBM is reporting after the bell, and that stock is up by more than 15% over the last 3 months, 15.6%. Squawk Box will be right back.
Time now for today's AFLAC trivia question. Which is the only U.S. state that does not require car insurance? The answer when Squawk Box returns. And now the answer to today's AFLAC trivia question. Which is the only U.S. state that does not require car insurance? The answer? New Hampshire.
Check out shares of Hasbro this morning. Earnings coming in at $1.30 a share. That's much better than the 78-cent estimate, and that's on revenue of $980.8 million. That topped expectations of $880 million. Now, gross margins were 77% during the quarter, also ahead of estimates. Hasbro also raising its earnings guidance for the full year. 77% that's a big number.
It is. It is. We're also watching shares of AT&T this morning. That company reporting earnings and revenue that beat expectations. Also, postpaid phone net adds beat expectations by a wide margin. The guidance was in line with estimates. The company says that it's reinvesting gains from tax benefits from the One Big Beautiful Bill, both in its networks and to fund its employee pension plan. That stock right now, though, down by about 3.6%.
Okay, coming up, animal spirits in the world of mergers and acquisitions. JP Morgan's got a new report out on just how hungry companies are to play Let's Make a Deal. We're going to play Let's Make a Deal right after the break. And then online betting platform Polymarket returning to the U.S. And we've got a big exclusive interview this morning with Polymarket's founder and CEO. That's coming up at 8:45 a.m. Eastern Time. You don't want to miss it. Come on back.
AC Plus.
Welcome back to Squawk Box this morning. Global M&A activity surging in the first half of the year, according to a new report from J.P. Morgan. Total deal volume topping $2 trillion, an increase of 27% from a year ago, thanks to a rise in mega deals. Joining us right now is Anu Iyengar, J.P. Morgan's global head of mergers and acquisitions. I got close.
Not pretty good.
Not perfect.
Pretty good.
Tell us what's happening. There had been a whole sort of sense that, given the tariffs and everything else, negotiations going on, that people weren't going to do deals, that people weren't going to make investments, and yet it appears that there's some deals happening, maybe more than we expected.
Yeah, and my hope today is we can reconcile the sentiments and the headlines to reality and data. Because the sentiment and a lot of the headlines has been the M&A market has been challenged. And yes, you've had a little bit of a roller coaster, but the second half of May and June and the pipeline that we see right now is really robust. And the mega deal trend is pretty unusual. 59% increase in 10 billion plus deal volume, 57% increase in the number of deals, 10 billion plus.
How much of that is a function of what may be a perception that the regulatory environment under this administration is going to be easier than the administration before?
There's a little bit of that in the conversations that are happening right now. But when you look at the type of deal activity, whether that's in the US or Asia, Asia has been a big bright spot. take privates happening. Because at one level you look at it and say the S&P 500, all-time high, you showed a couple of the earnings this morning, really good, but yet there are opportunities of companies which are mispriced. So at JP Morgan, we were very fortunate. We were in the middle of 3 of the largest take private transactions, whether that was ADNOC Santos in Australia or Sycamore Walgreens and 3G Skechers in the US. So there are still opportunities on both sides, right? You feel really good about where your stock price is, you have access to plenty of financing, and you feel like now's the time to make a bold bet on regulatory.
One of the big issues that has challenged the M&A market was that a huge component part of the merger world was private equity. And there have not been a lot of exits. Private equity has been unwilling to sell, in part because I think there's a sense that the prices are not where they want them to be. That's also created a lockup in terms of just capital across the entire world. How do you see that playing out now?
You're right. Like some of the things I mentioned have been a little bit of an exception in terms of private equity is willing to deploy. But it's now been 2.5 years where we are all waiting for the kind of unlock of private equity assets. The way the unlock has been happening is in every flavor of minority deals. So whether you call them continuation funds, minority deals, partial exit, fund-to-fund transfer, every version of it that has the same theme. You partially sell, partially continue to own. So I take a little bit of a mark, I satisfy my LPs, give some money, and leverage a phenomenal secondaries market.
So you actually like this secondary market. I mean, there's a whole view that this sort of churn is not actually good for the market, that it's a sort of an artificial way to deal with this sort of hot potato problem of just moving things from one place to the other.
Yeah, it could be. Depends on the asset and depends on why you're doing it, right? So there are some assets where there is a reason to continue to own it and you have conviction and belief in it. For those type of assets, this type of trade is not unusual. But if you're doing it because you don't have any other form of exit, and then it's just a matter of passing it on, the market is largely of the first type. But if there is too much of the second type that happens, then that would be a concern.
One of the things we've been talking about this morning is the need for more energy to power the data centers that are out there. And I know that both AI and the data centers, all that energy demand, that's playing into what you're doing too. What do you see on that front?
Yeah, that's been a big theme, right? Because it's gone from people saying, oh, I kind of need to understand it and I need to at least say the word AI on my earnings call to be like a real thing, right? If you look at the amount of money that has gone to startups this year, 2/3 of that has gone to AI.
Wow.
Almost every company has some form of CapEx investment going into AI. All of that requires, as you said, pretty big investment in data centers as well as energy transition. So both of those we expect to be drivers, and then you've seen this trend of people saying, what am I acquiring when I acquire AI? Am I acquiring AI capabilities, talent? What am I acquiring?
Which raises a whole other question.
Yeah.
There is a phenomenon that we talk about now almost on the program every day of acqui-hires and what's described as reverse acqui-hires.
Yeah.
And what that means long-term to the M&A market, which is one of the things that I've been thinking about is in a world powered by AI, if I can turn you into a superwoman and me into a superman, that maybe unless a company has genuine physical assets, but in the services space, I don't know if you're going to need in the future to buy entire companies. You may just decide I'm going to pick off the top 10 people. I'm going to pay them extraordinary amounts of money to leave. I don't have to pay a premium to the shareholders, and I don't have to deal with the regulators.
Yeah. Life doesn't work that easily usually, but the need and search for talent is something that has been on the rise across everywhere, right? Whether that's the C-suite here in the US or you've seen in Europe, particularly in the UK market. Because especially when you have so much data, imagine the amount of information that all of us have to cull through. Like the minute you go off camera, you have to read a ton before you get back on camera, right? Figuring all that out and the judgment that you have to apply, I don't care what AI tools you have, there is still judgment that needs to go on top of it. in the current foreseeable future. Who knows how it advances but this need of getting talent is also not a new thing. I mean, we're in the investment banking business. We are all about getting talent, right? And so we understand that, and I don't think it's also a way to circumvent, because that is the capability that you're buying. Oftentimes, when you're thinking about doing any merger deal, you think as much about, do I have the capability to run the business I'm buying? Do the people who run that business, will they stay with me? And will they perform at the highest caliber that they're currently doing under my organizational culture? So figuring out talent and navigating it has always been an integral part of M&A.
Fascinating. Thank you, Anu. It's great to see you this morning.
Great to see you as well.
Appreciate it.
Thanks for having me.
When we come back, while global M&A is surging, family office investments have cooled off. Robert Frank is going to tell us why. That's next, right here on Squawk Box.
Insurance.
All right, welcome back, everybody. Investments from family offices actually slowed down in the first half of the year. Robert Frank is here to tell us why some of the wealthiest investors in the country have been pressing pause. Hi, Robert.
Good morning, Becky. Great to see you. Well, family offices pulled back their deal making in the first half, waiting for a little more clarity on what the tariff situation is going to look like. The total number of direct investments by family offices and startups fell 32% through June. That's according to exclusive data from Fintrix. Now, their investments fell in just about every sector, including their normally favorite areas of tech, healthcare, and life sciences. Now, the one segment that did see an increase from family offices, you guessed it, was AI. Companies like Sandbox, Genesis AI, and Anduril all attracting a lot of family office capital in the first half. Now, among the most active family offices through June were Peter Thiel's, He made 9 family office startups investments, largely in aeronautics and AI companies. And you have Eric Schmidt's family office called Hillspire. They invested in Relativity Space and a company called Imprint Labs Biotech. And Lucas Walton's family office, he's the youngest Walton heir. He invested in sustainable energy and agricultural companies, including carbon upcycling and a company called Firefly Green Fuels. They make sustainable aviation fuels. Now, for more on the biggest family office deals in the first half and where the wealthiest investors are putting their money, you can sign up for the Inside Wealth newsletter. New one out tomorrow morning at cnbc.com/insidewealth. That's cnbc.com/insidewealth.
Drop of 32% was more than I had expected, just based on what I'd read in the intro leading up to some of this stuff. How quickly can that change? Because that was through June 30th. This month could make a lot of difference. We're hearing trade deals getting announced by the day. You think that's the type?
It could, and the reason that companies like these startups love family office capital is, number one, it's very patient. Number two, it's flexible, and number three, it's fast. So these folks, because it's usually one person making the decision, right, if they feel more comfortable in the environment, which I think they will in the second half, it also depends on which companies are out there fundraising. And with private capital and private credit providing so much in the marketplace, there may be a little less need by startups for this kind of fundraise. They may just get it straight from private credit. So if we get more offerings and these family offices are more comfortable, which I think they will be, we'll see more in the second half.
Okay. Robert, thank you.
Thank you, guys.
Coming up, Alphabet on deck. We're going to talk about it. Our next guest is going to tell us why he's focused on any comments about its AI strategy. And we're getting a few more details about the trade deal with Japan. We're going to have a live report from Washington. Squawk Box returning after this.
Now.
We're going to be getting two of the Mag 7 finally reporting after the bell today. Alphabet and Tesla, two of the mega cap stocks that are reporting after the bell tonight. Right now, though, we're going to focus in on Alphabet. Joining us right now with what to expect is Paul Meeks. He's Harvest Portfolio Management CIO. And Paul, you think the street expectations are pretty decent in terms of what you'd be expecting from Alphabet, too.
That's right. The key with Alphabet, until further notice, is their digital ad business. And despite all the geopolitical madness we've seen from the economic stats, that the macroeconomic environment is still supportive. So I don't see any problems there. They're expected to grow their EPS 15%, their revenues 11%. But here's the rub, and here's what I'm really worried about that hasn't really been discussed much. If you take a look at the consensus estimate for the quarter that we're in, the quarter that they will be guiding to tonight, it is for year-to-year EPS growth of only 7%, and that is a real pedestrian number, and it signifies a pretty dramatic slowdown in EPS growth. And so I think they'll be solid tonight. I'm a little bit worried about that guidance, to tell you the truth.
Meaning if they don't raise guidance, that would be a reason to sell off?
Well, the stock is already showing that there are some at least structural problems with the business. And so if you think about it, you go from this quarter at 15% year-to-year growth to a 7% figure, and that's probably EPS growth that's even less than the average company in the S&P 500. That bodes ill because it looks like 2025 could end with a whimper rather than a bang, but we'll see. The key thing with this company is not what they report tonight, it's their guidance, as I mentioned, and also they have to be bold, they have to really create and promote a AI winning narrative, and so far, let's face it, they haven't. And is that a operational problem, an R&D problem, or is it just a public relations problem?
Well, that's a good question. I mean, the narrative that's out there is that Google search is losing out to all of these AI large language models, whether that be Perplexity, whether that be ChatGPT, Grok, pick your poison on it. Do you think that's the case?
I do think that's the case. Not a short-term issue necessarily, but clearly a long-term structural issue, and particularly Perplexity AI, these AI native searches is where we're all going. It's not necessarily on the come, that's happening now. So they are definitely losing share. How do they counterpunch is key. I also am very interested tonight, particularly since Tesla has the robo-taxi trial in Austin, Texas. Give me an update on Waymo. Also give me an update on YouTube, because that's becoming increasingly important. And we'll see what happens. The other thing that's key is for all of us that are involved heavy in the AI infrastructure building trade, are they going to raise their CapEx guidance or even sustain their CapEx guidance? And their guidance for this year, and of course now we're in the third quarter of the year, was for $75 billion.
What do you want them to do as an investor, Paul? You think it's important to chase after this and make sure that they're winning in that space, or you want them to conserve capital?
No, I'd like them to be aggressive, even if it requires perhaps acquiring a Perplexity AI or one of these other large language model platforms. But we obviously are in the age of AI, followed by quantum computing. And in quantum computing, I expect Google to be a big player, but that's a couple years off. But yes, right now it looks like maybe it's just PR that they're losing pace in the AI race, and they got to catch up or get ahead.
Paul, I'm going back and forth. It sounds like you are a believer, but you're a show me the money guy?
Yeah, that's true. I'm always a bit of a cynic, and the company is well managed, and I do think that this might be more of a PR positioning problem than an operational issue. But let's hear what they have to say. There is no doubt that Perplexity AI and some of the others are taking share. So it's happened. How, as I said just now, do they counterpunch? Really important.
Very quickly, you own this stock, Paul?
Yeah, I own the stock. And of course, I've held it for years, so it has a crazy low cost basis. but I haven't added to this position, even on debts, for quite a while.
Okay. Paul Meeks. Thanks, Paul.
Thank you.
It is 8 a.m. on the East Coast, and you're watching Squawk Box right here on CNBC. I'm Becky Quick, along with Andrew Ross Sorkin. Joe is off today. Treasury Secretary Scott Bessent making some comments this morning about the trade deal with Japan. Eamon Javers joins us right now with more on that. Eamon, good morning again.
Yeah, good morning again to you, Becky. Treasury Secretary Scott Bessent was on Bloomberg TV in the past hour, making some headlines, as you say, including giving some new context on the trade deal with Japan that's been elevating markets this morning. The Treasury Secretary said the Japanese were able to get down to a 15% tariff level because of what he called the innovative financing mechanism that they proposed. He said the Japanese will create a Japan-U.S. partnership where the Japanese will provide equity credit guarantees and funding for major projects in the U.S. And he said that will be additional capital beyond the existing Japanese direct investment that's in the United States. And ahead of his meeting with the Chinese in Stockholm next week, the Treasury Secretary said, we're in a very good place in those negotiations. And he said items other than trade could be part of the talks, including Chinese purchases of sanctioned Iranian oil and other security issues. And he said there's not going to be an in-person meeting between Presidents Trump and Xi before Labor Day, but the deadline of August 12th for a trade deal could roll forward, as he put it, by about 90 days. Now, on the Fed, Bessent said he was somewhat surprised that Mohamed El-Arian called for Jay Powell to step down. Bessent said he wants the Fed to conduct an internal review of what he calls mission creep at the Fed. And he said that process is underway to replace Powell next year, although he declined to comment on names of potential Jay Powell successors. Back over to you guys.
Okay. Eamon, thank you very much. Eamon Javers.
Let's get over to Tom Chu. He's got a look at some of the global automakers and a bunch of other stocks this morning that are making some big moves. What's going on?
Absolutely, Andrew, Becky. So again, those automakers, especially the Japanese ones, are in focus after the U.S. reached that trade deal with Japan. Japanese manufacturers like Toyota, like Honda Motor, like Mazda, like Mitsubishi, like Nissan, all closed up double digits roughly overall in Japanese trading, given those auto imports to the U.S. from Japan and those tariff rates being expected to lower to 15% from the current 25% that is levied across many of the other countries that we're in trade negotiations with. By the way, if you go across the other side of the world to Europe, those European auto stocks are also higher on hopes that the EU can reach a similar deal with Japan with the White House. So it's a template type situation. It's Stellantis, Volkswagen, BMW, Mercedes, Porsche, all gaining in European action. Meanwhile, on the earnings side of things, shares of AT&T are lower by just about 3.5% right now, despite better than expected earnings and revenues for its most recent quarter. The telecom giant also raised its outlook to reflect savings from Trump's sweeping tax and spending bill. Those shares are still up more than 15% so far this year to date. And then we'll cap things off with a quick check on the growing roster of those so-called meme stocks that are showing extreme bouts of volatility, due in part to prominent mentions on internet messaging boards. A lot of the attention has been centered on Open Door as of late, which is down about 11% pre-market after a 10% loss yesterday, but the shares went up 900% between June 26th and the recent intraday highs that we saw on Monday. Mid-scale department store chain, Kohl's, also unusual upside volatility. 38% gain yesterday, down 2% pre-market. Donut chain Krispy Kreme, now part of that ecosystem as well. Action camera maker GoPro. Krispy Kreme is up another 32% this morning, 27% yesterday. GoPro is up 41% yesterday, and up another 41% or so this morning. So, Andrew, yes, Japanese automakers have some big moves, but the meme stocks are maybe stealing the show this morning. I'll send things back over to you guys.
Okay, Dom, thank you for that. We're going to keep our eyes on all of it. Fascinating that memes are back. I don't get it, but what do I know?
All right, when we come back, President Trump set to give a major AI action plan to keep America ahead in the AI race. The former White House Chief Information Officer and now the CEO of Fortalice Solutions, Teresa Payton, will join us next. And later, the founder and CEO of Polymarket on the growth of prediction markets and some of the hottest bets on their exchange. Squawk Box will be right back.
You download Dave.
President Trump set to lay out his vision for AI later today. His action plan is expected to focus on three major pillars. First, innovation. Second, infrastructure. And third, national security. And it will include a few executive orders. Joining us right now to talk about the president's strategy is Teresa Payton. She is Fortalice Solutions CEO and the former White House Chief Information Officer for President George W. Bush. Teresa, first of all, thanks for being here. What do you expect to hear today? How would you put it in terms of what this means for AI overall?
Yeah, what I expect to hear today is a conversation. It may include, we need to do this to beat China to the finish line. It may also include some conversations around deregulation. I was just in a meeting last week where a great presentation happened. Goldman Sachs presented on the energy demands that we have to support AI, quantum computing, cryptocurrency. And it's the equivalent of building these new data centers that, if you put it in terms that we all kind of can think of, it would be the equivalent of launching 50 rockets at the same time to the moon, just to power one data center that we're going to need to support these ambitious plans. And then the last thing is I do hope and expect that we will talk about retraining, upskilling America's workforce for the new jobs that will be created. But hopefully we're going to be starting yesterday on that, because we already see where some jobs are getting replaced.
Yeah, I guess this sets the tone. Do you think action follows immediately from the private sector?
Hopefully it does. Obviously, having executive orders and big announcements out of the White House is great to set the tone, but this is going to be a huge public-private sector partnership on a complexity and scale that we have not seen before. And whenever you talk to me about technology and something we haven't done before, that's incredibly invigorating, but at the same time, I think in my mind, governance and guardrails. You need to make sure that somebody is managing this public-private sector partnership to make sure we don't have cost overruns for Stargate, that it really delivers on its promises, that it delivers on budget, on time, and that we get the capabilities out of it that we want. Same thing with, if we're going to do energy deregulation to pave the way for these data centers, making sure there's a balance between the impact on residential neighborhoods that might be near these data centers and powering really important software that's going to be powering America's and the world's businesses.
Okay, there's a very interesting dichotomy, though. How do you protect one over the other? And if part of what you expect to hear is bringing down of environmental protections on some of these things, how do you make sure you do this, do it fast, make sure you can power innovation, but also protect the existing customer base and people who happen to be in the area?
Yeah, this is a tough one, Becky, and I really, my thoughts and prayers actually go out to the people who are going to be making these tough decisions and balancing this. It's really a balancing act on a tightrope. And on the one hand, if tough decisions have to be made around power generating a data center that's powering, massive things, whether it's for the U.S. government or for businesses, and there's a dependency on reliability and resiliency, and then you've got a residential neighborhood, and now you're thinking about, well, who gets powered today? Is it a residential neighborhood? Is it the schools, or is it this data center? So this is why our energy policy is going to be so important, and it's really a matter of national security, but also economic security. So we're going to have to see sort of an all of the above on energy, and you're right, we're going to have to find the right people on these governance boards to be thinking about the voice of everyone. So it's not just the voice of the
answer, though? I mean, if you're telling me decide between, a big business that maybe is running important national security things, that's one thing. If it's a big business that's running search queries for where do I find the best deals on travel versus the neighborhood that's there, the school that's there, the hospital that's there, what is the answer? It's, I don't know.
Yeah, I mean, you have to have the wisdom of Solomon, and you've got to have the right technology experts around the room and the right energy experts around the room. The key is making sure that we have the right throughput of energy to meet all of the needs. And then really working with sort of the energy providers to make sure that we have resiliency and reliability to make sure that everybody's energy needs can be met.
Yeah, good luck with that.
So can I just ask Teresa, what do you make then of these deals? There's a whole bunch of them now where the data center makes a deal with the energy provider effectively for 99.99999% uptime guaranteed, which effectively means that everybody else is not.
Yeah, this is a very tough situation. And this is where people who live in these areas where the data centers are being built need to be asking questions of their elected officials and need to be asking questions about their energy providers, asking them directly, how will this impact me? How will you make sure, from a resident's perspective, that we're covered, that our schools are covered? Because if you're going to be diverting resources to these data centers, what does that mean for the rest of us? Again, this is where energy capacity plans are almost more important right now than the technology plans, because the technology doesn't work if the energy isn't there. So we're going to have multiple sources of energy for reliability and resiliency, but as well for the residences and small and medium-sized businesses that may not be powered necessarily by those data centers. So lots more to come. Hopefully we'll hear today how some of these situations are going to be addressed, who's going to be responsible for those, and what sort of this governance task force. If I were advising the administration directly, I would tell them, you're going to need a governance task force on energy, on your technology security, on your technology resiliency and reliability, and making sure you don't have cost overruns, but also retraining America's workforce. So it is again, this is something that has never been done before. And it is incredibly invigorating and energizing, but at the same time, we need to make sure we've got the right guardrails in place so this is successful.
Maybe we should ask one of these large language models what the answer is and how to figure this out. Teresa, thank you for joining us today.
Okay, still to come, how Bath and Body Works has made reshoring look beautiful. The company's beauty park outside of Columbus, Ohio, is where all of the magic happens. We're going to take an inside look at that facility, and their Made in America success is next. It's quite a story. You do not want to miss it. We're coming back with it after this.
For more than a decade, Bath & Body Works has been reshoring its production from China, Canada, and Mexico. The move to do so has helped the company manufacture, package, and deliver products to its stores, which is a beautiful thing. Courtney Reagan joins us right now with more on what's been happening on this. And Court, I know you are in the middle of the action.
Yeah, we absolutely are, Becky. Right here at this facility is where Bath & Body Works puts together its foaming hand soap. So right behind me, you can see this automated machine actually takes the bottle that's made here in Ohio, fills it with the soap, puts the pump on, screws that pump, and also adds the label. There is one employee here for quality control, but this machine runs at a rate of 270 bottles a minute. All of the items that are sold in the United States are actually made here. It has been doing this for more than a decade, and it's really become a competitive advantage, especially as of late with the global pandemic snarling supply chains around the world, and then currently as we face tariffs on imported goods.
We had factories really all over the world. Pieces and parts of the foaming hand soap would travel 13,000 miles before it entered the stores. Now with Beauty Park, the product travels a distance of about 13 miles from factory into distribution center. So lead times back in the day were about 3 to 4 months to market. Now we can chase into this product in as little as 3 to 4 weeks from purchase order into store.
The shortened production time from idea to store shelves allows Bath & Body Works to chase its winners and minimize exposure to less productive products. It's a key reason that it can develop between 6,000 and 8,000 new SKUs a year. Now, more than 80% of Bath & Body Works manufacturing is U.S.-based. Half of it right here in central Ohio. This Beauty Park campus is about 10 miles from its corporate headquarters, where around 12 vendors contribute to the finished product, from the lab to the batching, filling, packaging, and the distribution. Now, the idea for Beauty Park came about in about 2010. It took 2 more years to actually begin manufacturing, and since then, hundreds of millions of dollars invested, in large part by Bath & Body Works vendors themselves, along with state, local, and federal governments, to get this project off the ground in a profitable way. Becky?
All right, Court, I'm thinking so many things. First of all, the reason we hear more companies say that they can't do this is that it's too expensive. Why does it make sense for Bath & Body Works? It's that innovation that allows them to do it more quickly. Is it a highly automated factory where there aren't as many people working, so it's not the labor cost differential that impacts it? How is this profitable for them? Why did it make sense before you even had tariffs coming in?
That was probably my #1 question too, Becky, and it's almost all of the above reasons that you cite. Automation for sure. Like I said, this machine behind me pumps out 270 bottles a minute, and there's only one employee here basically for quality control. But that was millions of dollars of investment to get that automation going, so that's #1. Think about the weight of these products. So it was actually quite expensive to then pay for the shipping to get them from overseas or further away. So that was #2. And then also all of these vendors, while they do produce for other clients, Bath & Body Works is their main client, and they decided it was worth it to invest in this business for them. So it sort of had to put all of the pieces together of the types of products that are here, the automation, the commitment from the vendors to make it work. When I asked if it could be replicated, could other retailers do this when they say exactly what you're saying, it's too expensive, they said it's possible. I mean, anything is possible, but it's taken over a decade and hundreds of millions of dollars. It's probably not as likely for apparel or electronic manufacturing, but for consumer packaged goods, it is more possible in the United States.
I am getting major I Love Lucy vibes, but there's no chocolate behind you and stuff in your mouth. So maybe we should think, Laverne and Shirley, you gotta come up with a glove that you can stick on one of those bottles behind you. How to go around the entire plant.
Exactly.
Court, thank you. This is really interesting, and
Thanks,
we'll see you again later in the day.
Coming up next, as the president's tax bills spurred spending by U.S. businesses, we're going to discuss what the administration is calling a CapEx comeback. Head to a break, a check on shares of Texas Instruments. That stock down sharply after the company's third quarter profit forecast falling short of expectations. We'll come back and discuss that and more after this. Welcome back to Squawk. Three Democratic senators pressing Delta Airlines' CEO Ed Bastian to answer questions about the airline's planned use of AI to set ticket prices, raising concerns about the impact on travelers. The airline says it's testing AI dynamic pricing to eliminate manual processes while accelerating adjustments so customers could see the same exact fares. There's been some concern that maybe they would use AI to not just deal with people who are getting a cheaper price early, but maybe because they think that you can afford a higher price or whatever they could figure out.
Profiling.
They could price that way. We'll see. I don't think we know enough about what the exact effort is underway. Meantime, is America seeing a CapEx comeback? Steve Leisman joining us along with Counselor to Treasury Secretary Scott Bessent and Joe Livornia. Steve, good morning to you, sir. Take it away.
Hey, good morning, Andrew. Thanks very much. Hey, Joe, thank you for joining us this morning.
Thank you, Steve. Thank you.
My first chance to interview you as the counselor to the Treasury Secretary there. Congrats on the job. Joe, walk us through what you're seeing, which is you went, the first thing you did, you get into the job and you go down and dirty and start looking at the Fed's G17 industrial production report. So walk us through what you're seeing in terms of a CapEx boom that looks to be out there.
Sure, Steve. So the one thing we know that to get incomes up, to get middle class wages higher, you need more capital. Capital ultimately will drive productivity, which gives you higher living standards and higher wages. So
in the private sector, I used to always look at a very esoteric series called production of business equipment, and that's essentially your proxy for CapEx, and it rose 23% in the first quarter, and not surprisingly, the series in the GDP accounts rose 24%. And then I noticed in the second quarter, while there was going to be some inevitable slowing, that Fed data showed a near 11% increase. So what that meant is over the 2 quarters, we had about a 17% annualized gain in that Fed data, which tracks the CapEx and the GDP accounts super closely. That was the largest 2-quarter gain, Steve, since the last 2 quarters of '97, if you exclude the pandemic, which is really incredible. And you might say, well, why is that happening? Well, I would say the reason is because when the tax policy was extended with the One Big Beautiful Bill, it was retroactive to Inauguration Day, and what that encouraged and incentivized is companies to invest in capital, knowing that the bill ultimately would get done. So we're seeing the benefits of the CapEx boom early, and now that the law is official, I'm expecting the CapEx trajectory to remain very strong. That in turn will continue to foster, we think, upward pressure on the very powerful Blue Wages boom story, which is basically your non-supervisory production workers taking home bigger paychecks because they have more capital to operate with.
Joe, let me, I think this idea of it being linked to the Big Beautiful Bill has some potential to it, but I want to just throw out a couple offsetting factors on it and see how you respond to them. One is that there was indeed a pull forward on business equipment spending that had to do with people running ahead of the tariffs. Do you think that's a part of it as well?
No, I don't, Steve, because if you look within the GDP accounts, what you see is information processing and related equipment, which is all the AI, crypto, all that kind of newfangled technologies. That was the big driver. I mean, that was up over 70%. That was consistent with President Trump wanting to make the U.S. the crypto capital of the world. So the investment is occurring in the areas where it was supposed to be. And now I think, also, now that the bill is now final, I think you're going to start to see, Steve, a broadening out of spending elsewhere, because the bill also includes 100% expensing for plants and factories. So if you're going to build a data center, that's going to be very powerful if you're mining crypto, for example, to get that full expensing.
Well, it's interesting you bring that up, because I remember sitting with a bunch of CFOs at our CFO council. Maybe you'll come talk to it one day. But
I'd love to.
There were like eight folks around the table, and half of them were really excited about these things that you see coming, which is why I think there's some underlying truth to this idea that maybe they were anticipating the bill coming forward. The other half, though, were afraid of tariffs. So I want to get you to talk about Japan in a second, but before that, is there a concern on your part that some of these tariffs may offset some of the business equipment that people need to bring in order to create the CapEx that you're talking about?
I don't think so, Steve, for a couple of reasons. One, I think most of us can agree that the tariffs certainly have not had the effect in terms of the price data that most economists had expected. And that, to me, reflects, Steve, the fact that the majority of the tariff has been absorbed in the margin. Yes, the importer technically pays that higher price, but the price coming in is offset by the increase in the tariff. We know the tariffs are being paid because we're getting record revenues. We could be $300 billion in the tariffs. But the inflation data so far has been de minimis, and I'm not certain that you're going to see really much of an inflation effect going forward, especially as you have energy costs and more CapEx, which tends to be disinflationary, offset any potential lingering or delayed effects from the tariffs.
All right, now I'm going to be accused of having buried the lead here, but give us your thoughts, Joe, on Japan and what it means for the economic outlook that this deal is struck, and what it tells you about, hey, maybe Europe is going to come along in some way, and China.
So as Secretary Besson had said, the China-U.S. relationship is key. They're central to Asia, and the deal was done on very advantageous terms because President Trump worked to secure, an innovation fund, if you will, where the Japanese are going to commit over $500 billion, $550 billion to the U.S. So the deal was very innovative and structured as such. How everything else transpires, Steve, with other regions, I can't speak to that. Japan certainly did its part, and the president with Secretary Besson, Ambassador Greer, and Secretary Lutnick
really gave a great deal to the U.S. Now that is now completed, so the market, which is anticipating these deals to come, as you know from looking at the equity market, which is close to all-time highs, record tights in credit markets, you know, clearly the markets are voting with their feet and saying, look, we love this, we love these policies.
Joe, I always followed almost everything you wrote as a private sector forecaster. So I want to ask you, a lot of the administration's outlook on things like the deficit, overall economy, is based on a 3% growth number. How realistic is that?
Steve, the 1.8 number that the CBO has is just absurdly low. 3% to me is very doable for two reasons. Number one, in the first 3 years of President Trump's term, the economy grew 2.8% with very low and stable inflation. And the third year growth was 3.4%. Given the fact that trend productivity, if you look at the productivity trend over the past several years, it began under Trump and it continued over the next 4 years, underlying productivity, Steve, is closer to 2%. Given where labor force is, I expect labor force participation to increase. The fact that there's no tax on overtime and tips and reduced tax cuts for seniors, those participation rates can rise. 3% to me is a very doable number, especially with the AI boom. I mean, it's really incredible what this can generate, and the payoff is much sooner. We're not going to wait decades for this capital investment to pay off. It's going to happen much more quickly. I think we're seeing it in our regular everyday lives, and therefore 3% seems to me a very doable number. And if that's the case, Steve, and you include the tariffs, you know, you've got something counted like $4 trillion in extra money that the CBO didn't count when it did its last official forecast of the deficit back in January. So if we grow at 3%, the deficit's not going to be a problem. We're going to do a lot to grow our way out.
So what would you say, though, about a Federal Reserve, then, that is keeping rates unchanged or lowering them even just a bit in the face of 3% growth, which is quite a bit above where they think potential growth is, around 1.8 or 2%?
Yeah, I would say that, you know, I've never been a big believer that too many jobs creates inflation, that, you know, tight labor market does not generate inflation, or in economic terms, you know, they'll say the Phillips curve is flat, which to me is like there's no relationship between unemployment and inflation. What it could say is that if you look at the Fed's official forecasts in March, inflation is lower than where it was in March. We fast forward to June, those inflation forecasts they revised up. Inflation was still lower than what they expected in June. We know that R-star is below where rates are at the moment. So if you're looking at, you know, growth driving inflation, that to me is a wrong mental framework. And I do think there are people on the committee that have this very similar view. But by Jay Powell's own admission, interest rates are high relative to neutral.
Joe, I want to thank you for joining us, and please come back and talk G17 and R-star anytime you like.
Thank you, Steve. I appreciate it. Thank you.
All right, guys, back to you in NASDAQ.
Okay, Steve, thank you. Up next, the founder and CEO of predictions platform Polymarket, its return to the United States, the prediction markets, and much more. And by the way, speaking of the futures, let's take a look at the U.S. equity futures. Right now, it looks like those futures are still sharply higher. Dow futures are up by more than 230 points. NASDAQ futures up by about 27. And the S&P futures up by 22. Squawk Box will be right back.
now.
All right, some news for you. Amazon is acquiring wearables startup BAI, which makes a $5 wristband that appears similar to a Fitbit smartwatch. The device is equipped with AI and microphones that can listen to and analyze conversations to provide summaries, to-do lists, and reminders for everyday tasks, and maybe listen to everybody around you too, and clip all of those sort of things so you can remember those interviews.
Meantime, CNBC is learning that Goldman Sachs and Bank of New York Mellon have joined forces to create the ability for institutional investors to purchase tokenized money market funds. Now, BNY clients will be able to invest in money market funds whose ownership will be recorded on Goldman's blockchain platform. Some massive money managers, including BlackRock and Fidelity, have already signed up for the project. Goldman and BNY believe that tokenizing the $7.1 trillion money market industry is the next leap forward. For digital assets, tokenized money market funds pay owners a yield, making it more attractive to place for hedge fund, pension funds, and other companies to park their cash. Now, BNY Mellon telling CNBC the tokenizing step is important because it enables seamless and efficient transactions without the friction that happens in traditional markets. We're about to talk to a guy who probably is focused on a little bit of all this tokenizing stuff that's going on. Polymarket. Returning to the United States, the online betting platform announcing on Monday it's acquiring a derivatives exchange called QCX. Price tag's $112 million. And joining us right now in an exclusive interview about it all is Polymarket founder and CEO Shane Copeland. Good morning to you, sir.
Thank you guys for having me.
So
round two.
You're back here in the U.S. This has been the dream.
Long time coming.
So let's go backwards. You've been operating, we talk about Polymarket as if everybody can use it, but the truth is that most folks couldn't because you had to be in Europe.
For trading. I mean, I think the way you guys talk about Polymarket's kind of like become the Bloomberg terminal for reality almost. And it's awesome. I'm humbled that every time I tune in Squawk Box, you're like, well, Polymarket, and you know, I was watching Eric Adams' episode, and the first thing he said is like, well, the Polymarket for this, and I was just like, you know, I'm from New York. I went to high school right here, and the mayor talking about our site is just incredible. But yeah, I mean, look, there's a ton of latent demand for people who want to participate in the markets, not just look at it. So for us, you know, where we sit, it was like a must-have.
And so what happens now?
So obviously, I think people are pretty surprised. It was like a big acquisition, and the simple way to put it is it's kind of the perfect asset. So it's an exchange and a clearinghouse. And you know, that lets us go and serve brokerages and FCMs, as well as retail and institutions, which is really important. They all know and love Polymarket. When I get to meet these people, they say, oh my God, Polymarket's amazing, but I wish we could trade on Polymarket. And you know, ask and you shall receive, right? So
how much does this compete like with Kalshi? That Kalshi is probably your biggest competitor, at least in the United States.
Yeah, I mean, look, it's been this crazy journey where prediction markets, Polymarket has become this cultural phenomenon, and I would say that I'm very grateful and we're very lucky that people have looked at Polymarket's success internationally and said, okay, how can we just copy and emulate this as much as possible in the US? And that was a very arduous journey, and now it's kind of been paved out. So what it makes it for us is like, hey, we can go buy this asset, and there's precedent for how to do these things, and we're going to be able to get in very quickly.
Do you get know-how with this acquisition too, kind of understanding of those markets? And
yes, I mean, look, we made a hire, Neil Kumar, our CLO, who's ex-CFTC, ex-Wilkie, excellent domain expert on this. And yeah, the folks at QCX, one of the best parts of it is that they're derivatives, OGs, and you know, a lot of the time when we're making strategic decisions, we'll talk to them about it. And
derivatives OGs, that's good.
It's a different lane, right? I think that Polymarket at its core, it's consumer, it's culture. That's what drives us. But we also are nerds about market structure. And you know, if we really want to go and dominate the market like we can, you know, you guys talk about Polymarket all the time. We say the Polymarket for this, and it's just caught on. You know, we need to go and be able to serve the markets that people want to use.
Let me ask you a question long term. Mm-hmm. If you have the success that you want, I assume there's going to be a lot more competition. And I'm assuming that competition comes from the following places. I'm assuming the sports betting universe decides, you know what, we've got this massive funnel. We got people who are already betting on sports every single night. They got their credit card, they got all their accounts there. We're going to get into this business ourselves, right? That's one end of it. There's probably the Wall Street end of it, which is the traders who are going to be doing this in another way. And then I'm assuming there's probably 5 other ways that other people will get into this business. Does that mean that you ultimately license some of what you're doing to other people? Does that mean that you get acquired by one of these people? Does that mean that you buy somebody else? What does this actually look like in success?
It's a great question. I mean, look, you can draw a lot of parallels from how, say, interest rate swaps matured, or say how the stock market matured over the past century plus. The way that I think about it is, you look at sports books, for example, or you look at these like consumer trading apps. They're not exchanges, they're not marketplaces. They're front ends for existing infrastructure. For sports books, it's sort of this commodity business, and you have the odds and you take the other side, and it's basically subject to the innovator's dilemma right now, where they take these huge margins, and now there's a better way to do it with things like Polymarket. The way that I think about it is there's a different type of user behavior that is the itch is scratched for with Polymarket, and that's this idea that you have an opinion on things and you're curious about what's going to happen in the future, and I think you're wrong and I'm right, so I want to put up or shut up, right? And when we think about product, that's what we want to build, as opposed to some sort of hyper financialized app. And I do think that there'll be maybe some cannibalization if these are powered B2B, or maybe there's some element of there's probably going to be more competition as the revenues heat up and the market's larger. But we're really just focused on delivering on product. And the final thing I'd say is, like, if you look at the numbers, I don't know if you guys have seen, like, Polymarket's gotten pretty damn big in terms of usage, distribution, brand. And I think, you look at some of these other companies that have maybe $1 billion marketing budget or near it. And you look at Polymarket, which is just this scrappy team that just is always trying to do things guerrilla and, figuring out shrewd workarounds to go and get distribution. And what's really exciting about Polymarket is because it's not so hyper financialized, people share the screenshots all the time. People go in, it's word of mouth. Like, I tune in and I hear you guys talking about it. That's incredible for us. And, you guys talk about
what's
just
the
as you find it
craziest
interesting.
bet you've seen so far? I mean, I saw the divorce, the speculation about a divorce between Barack Obama and Michelle Obama. That, like, what's the wildest thing that you've seen on the platform?
Yeah, I mean, some of these like Middle East markets where it's like you're kind of anxious about what's going to happen, and from people who are in the open source intelligence community, they go and say, hey, Polymarket's before where we get our leads. Like, it moves quicker. And to me, that's just one of the things that inspired me most before I started Polymarket, was this thing called the Policy Analysis Markets, which was funded by DARPA. And it was all about using decision markets, which is like a deviation or a derivative of prediction markets, to go and forecast what's going to happen in the Middle East. And the idea that we've been able to build up the market infrastructure and the critical mass to be able to have that in real life effectively is just mind-boggling.
Has it worked? The bets on Middle East situations there have
it's accurate.
predicted accurately?
When it happens, you see an influx of people in the countries where it's relevant to in customer service queries, right? It's like someone tells me, Polymarket is blowing up in this Telegram chat for this community, because a lot of people want peace of mind, or they're anxious and they want to know what's going to happen. That's why they tune into the news. That's why they tune into X. And now that there's this other data point, which is the Polymarket for whatever the topic is, they get to see, this is how likely it is. And it's updating in perpetuity. So instead of just reloading a news feed, you can go in there and see what Polymarket's saying day after day.
Shane, let me ask you this. There was a report on CoinDesk that you guys are weighing launching your own stablecoin. Is that true?
I don't know how that stuff gets out. We were really, Polymarket is kind of the killer app of stablecoins, because it's this global free market, and it wouldn't be possible without a blockchain and a stablecoin. And we were the first thing built on USDC. All the USDC people are incredible, and it's been awesome to just watch them completely kill it in the public market. And I would just say we started with this older version of USDC, and we now have these longer term markets, and there's a lot more usage, and it's very important that the onboarding is smooth. It's very important that we can have yield.
Capture.
And there's a lot more infrastructure maturation of that space. So we're exploring. Definitely have some calls and meetings lined up to talk to folks about it. But the big thing is we start with user experience and we work backwards.
Different question. It relates to tokenizing, though. And I don't know if anyone's done it to you yet. There's a real effort to try to start selling, to effectively tokenize private companies that are not in the public market yet, but to do it in a way that investors, not just in Europe, by the way, which has different rules, but even in the United States. You have a take on what's going on here? The whole idea of tokenizing everything, effectively.
I mean, that's like one of my favorite ideas, right? I'm all about markets on everything. And, you know, no one's tokenized Polymarket stock. And it's been cool that Robinhood has sort of put their foot in the water of doing this because people were very excited. And, you know, companies are going public later, you know, at a later stage than ever, and you want people to have upside early on, and maybe that leads to more liquidity premium, et cetera. I don't know, the downstream effects. Someone else is a professional at that, not me, but I'm super excited and passionate about it, generally speaking.
And then, in terms of profitability, so we keep talking, there's a lot of volume on the platform. You're spending a lot of money, though, to build the platform.
Yeah.
What does the line and the curve look like here?
Yeah, not profitable. But, you know, I think when you go and build a platform and you get strong critical mass and you get a strong network effect, that enables you, hopefully, one day when you do monetize, to make more money the first day than you would, you know.
So what is the model or the models that you were contemplating?
Yeah, I mean, look, it's interesting because I've gotten to meet a lot of the top sort of exchange people and talk to them about how they think about their taker-maker fee splits, et cetera. I think that you can expect when you have these retail platforms, you want a taker fee, because those people are just less price sensitive, and if they are price sensitive, they can go make a limit order and wait a little longer and provide liquidity to the book. And then, you know, maybe there's some sort of make a rebate, et cetera. I think what's very different about Polymarket is that Polymarket is the source of price origination. Pricing transparency for the majority of these markets starts on Polymarket, as opposed to if you're going and trading securities or options, the pricing transparency already exists. So you're trying to eke out margin, whereas we're trying to go and bootstrap liquidity.
Separate question about AI. I'm assuming at some point there's going to be a lot of trading by bots on your platform.
Yeah.
And I've always thought that your platform almost relies on the quote-unquote wisdom of crowds to the degree you believe the crowds can be wise.
Yeah.
Sometimes they are and sometimes they aren't. But I would assume that AI, if it's making these bets, would just be trying to extrapolate and therefore maybe even create distortions in what the wisdom of the crowd actually is.
Yeah, now we're getting into some good questions.
Okay, so what do you think about that?
So, you know, Polymarket is based on like disparity, information disparity, and disparity of opinions. So when one agent or person thinks one thing and someone else disagrees, and both people are confident enough to put their money where their mouth is, and then you have price as the great equalizer. So, you know, the agent or the human may say, oh, I want to buy this, and then the price goes up, and they say, oh, well, actually, you know, this is a bit too high, I'm good. And that's the dance, which is price discovery. You go on Polymarket, you look at the order book, and you can see it all day, every day. And that's really the business that we're in. And I think what's cool about agents, and what's also cool about Polymarket being built on a blockchain, is that it's globally accessible, and people can hack together, you know, an agent that can go and operate autonomously. And people have done that. You know, it sounds weird like saying buzzwords because that's not really what I do, but like there are people actually doing this and making money and running experiments. But what I think is coolest about it and what's so special about Polymarket is as we continue to open up market creation, where you can go and easily create a market on anything with less liquidity and, you know, less sort of visibility and eyeballs. You'll be able to go and have liquid markets, even if it's very small liquidity, liquid and accurately priced markets for the very long tail, because agents can go and reprice it.
Can I ask one really stupid question?
No such thing as stupid question.
This one maybe. What's the difference between you and Kalshi? What's the differentiator?
Polymarket is Polymarket, and they're a Polymarket copycat.
Let me ask you one final question. The FBI, they raid your place.
Yeah.
This case is now over. Good for you.
Thank you.
What happened that morning, and what's been happening the last couple months? What have you been thinking the whole time?
Yeah. Look, there was so much. I mean, you guys remember pre-election, there was just so much media and misinformation and the full shebang of like an opposition rollout against Polymarket. I mean, we'd read that Elon was using it to manipulate the election and that Peter Thiel had started it to go and manipulate. Like this is what was being written in real publications. Meanwhile, it's like a young guy who started it, who's like working his ass off and at his desk, like stressed. And so I think that there was a lot of sort of leads or rumors that, frankly would get people worried or would say people, hey, we got to look into this. And, luckily we were able to dispel all that and it was baseless. And I think that we ran an excellent ship and we've only been maturing. And I think, when you get all the facts, it's pretty clear.
They just say never mind once they looked into it?
Essentially. Yeah. I mean, I think that it closed recently, but that sort of consensus was reached a lot earlier.
Did you freak out that morning?
Yeah.
Like that's kind of a crazy.
Yeah, I mean, I think you got to make lemonade out of lemons. So that day was very crazy, but it was also an inflection and a milestone.
Shane, want to thank you for coming in this morning. Hope you come on back.
It's always a pleasure.
Really, thank you again.
Thanks for having me.
Thanks.
All right, up next, a check on the markets and some morning meme movers. We'll be right back. All right, welcome back, everybody. Let's get to Dom Chu. He's got a look at some of the global automakers and other stocks to watch this morning, and they've been on the move in a big way today, Dom.
Very much so. The two thematic trades a lot of traders are watching on Wall Street this morning involve those global auto stocks, specifically the Japanese ones, which closed in trading up anywhere from about 13 to 15% for Toyota, Mazda, Mitsubishi. Also watch the carryover effect for the European automakers like Volkswagen and Mercedes-Benz. And then, of course, the meme stocks. Kohl's, Open Door, Krispy Kreme, GoPro, 1-800-Flowers part of that mix now as well. So all of them exhibiting that same volatility. We'll see if it stays that way, Becky. I'll send things back over to you.
All right, Don, thank you very much. By the way, folks, we have a great show for you tomorrow. He played for the New York Football Giants for 16 years. He won 2 Super Bowls, and he's now venturing into a new business. Eli Manning will be joining us live, plus the New York City mayoral race getting some action here. Mayoral candidate Andrew Cuomo will be joining us. That does it for us today. Make sure you join us tomorrow. Right now it's time for Squawk on the Street.
Good Wednesday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with Jim Cramer and David Faber at Post 9 of the New York Stock Exchange. It is risk on as trade deals with Japan, Indonesia, the Philippines start coming into view. Earnings continue to impress with a high beat rate, and the meme phenomenon broadens today. It's Krispy Kreme and GoPro up 40 to 80%. Our roadmap begins with the U.S. and Japan reaching that trade framework. What's the new agreement about? What does it mean for both economies and the other countries trying to negotiate with the U.S.?
Plus, we're going to keep an eye, of course, on AI and XAI, that is OpenAI as well. Both are reportedly, not even reportedly, they're seeking additional capital as the race for expansion, of course, continues. And those meme names, Kohl's, Opendoor, cooling off a bit, but others are now joining in on the craze. We talked about it yesterday. We will continue that conversation this morning.
Let's get right to this trade deal with Japan. In a post on Truth Social, the president said Japan will invest about $550 billion into the U.S., which will receive 90% of the profits. Japan will pay reciprocals of about 15%. Jim, they're going to buy 100 Boeing planes, buy some rice, increase their defense spending with American contractors.
Well, look, I mean, the time-honored thing is to order planes from Boeing. If Boeing could make them, it would be better. Boeing's got one of the biggest backlogs in history, and what I think really matters is that it's template. If you take a look, everybody won on this. I mean, I think that you can easily say the United States won because it's still got a nice tariff, but the Japanese, the stocks are just flying, and what it does is it takes off the table something that I was very worried about, which is that the president would be really hard on these guys, and then it would be a ripple effect. And Japan's already got a government crisis, so these are dominoes that don't happen. And I think that people have to recognize. And David, I don't know, you can criticize his view, but some of these things are working. This was a positive for our country, positive for Japan in the end.
Yeah, I mean, listen, I think at one point if you had said there are going to be 15% across the board tariffs, or our average tariff rate is going to be somewhere approximate between 10 and 15%, people would be like, whoa, that's a lot.
Right.
At this point, we don't seem to be seeing it in the inflation numbers, at least not to the extent I think that had been worried early on. But 15% is still a real number. I don't know to what extent it damages the competitiveness of Japanese automakers, but it is down from 25, so and conceivably even higher. So a lot of this looks good. You can see the reaction, of course, in the names that we're talking about there that do export a lot of their products. Not to mention make a lot of them in this country as well.
Right, it didn't matter. Now, David, would you call this the art of the deal?
Would I call it the art
I'm saying
of the
that
deal?
you move the tariff up real high and then negotiate down. People feel like, wow, that was good.
I don't know what I'd call it.
I knew you wouldn't call it.
I don't know.
I
mean, we've got you cheerleading all the way. And don't I know what you're up to, by the way. I know what you're up to.
Well, I caught that Yankee game.
Yeah.
Pretty amazing.
What is he up to?
He's trying to become Fed chair.
Oh, yes, of course. Well, it's going to be open soon.
He has not yet given up that dream. And I think he's back on.
Although Bessent this morning said they're not in a rush on a nomination, Jim, so take your time.
No, I don't want that job.
It's the only job you would leave us for.
What, if I got
It's the only job you would leave us for.
Of course I'd leave you in a heartbeat. Like, sit here and just take your abuse versus being king?
You'll come on, though, right?
I'll come on Fox and then come on you. You know what I mean? There, all right? Sometimes things are... This worked out.
With Japan, the trade deal.
Now, Europe's going to be under a lot of pressure, but I do think that this was the big one in terms of like the huge car companies that you just did not want to see gutted. I mean, look, yesterday GM got hurt. I thought GM quarter was pretty, GM's numbers weren't bad. Now GM goes up. I mean, there are situations where everybody could win. I just don't know where we're going to get all these people. Another $500 billion. $500 billion seems to be the operative term of what you're supposed to invest here. We're going to get a lot of robots because holy cow. I mean, we don't have the people. That's a high-quality problem, but we don't.
Right. Now, this tariff is going to be paid by U.S. importers and ostensibly some of that maybe by some consumers, right?
Right. Well, I do think that it's going to be inflationary. That's what Powell's worried about.
It is.
But Andy Jassy said that so far the tariffs haven't hurt haven't heard Amazon.
No, we haven't seen a lot of commentary in terms of from companies, and we're moving into another earnings season here, which we'll get yet again. We'll be looking for that commentary specifically in terms of price increases or margin decreases. It's getting eaten somewhere, and a lot of it maybe, but margins seem to be holding up as well. So I don't want to call it a mystery, but we're still sort of waiting. And again, to your point, it's one of the reasons why Chair Powell has been hesitant to lower rates, even though there may be more dissent on the board.
I mean, we have heard about some weakness in autos from NXP. Today we'll talk about Texan.
Absolutely.
SAP's on the tape saying that clients in tariff-exposed industries are being more cautious on their cloud spend.
Yeah, I thought that stock would be down much more. It's a fan favorite. People really like them, and some people felt they were just being conservative. I've had them on a number of times. They're a very good company, but there is a sense that continued sense cloud software that is connected with software as a service down because AI is making it so you don't need to hire as many people, so therefore not that many seats. That is the area of tech that is weak versus the high-end semis that have software. And remember, the whole theme right now of NVIDIA is it's a stack with software, not just hardware. People like that.
We do have some sad news to report today. Former Honeywell CEO, longtime General Electric executive, and former CNBC contributor Larry Bossidy has died at age 90. A frequent guest over the years, especially on Squawk Box, which did a remarkable tribute to him this morning on the phone with Joe. Joe joked about his good looks, the mix of William Holden and Robert Mitchum, but his leadership acumen was just visible to anyone who tuned in.
Tough. I think the word rigorous would come to mind. But you know what? I got involved with him with a charity called Radical Hope, which is to prevent teenage suicide from grandson. And to be with him and to be sitting next to him and feeling about a cause that's close to me, because what my daughter works on. I mean, he was incredible. What he really wanted to do was raise a lot of money to bring to the fore teenage suicide, which no one else is willing to do because it's a taboo topic. And he wasn't afraid to touch taboo topics. And it was a joy to give money to his organization, and people who want to celebrate what he did or praise what he did or just remember what he did. It's Radical Hope. And it's a really good healthcare program. It's alive with NYU, and I just thought it was such a great charity. I couldn't help but contribute.
Yeah. Always just a great voice to have on our air, of course. Always so straightforward. Told it like it was, and obviously incredible leadership characteristics as well from his time at GE and Honeywell.
Yeah.
But certainly will be missed for so many reasons by so many.
We actually pulled a brief bit of sound from him. It was actually during the first Trump presidency, 2018, where he talked about where tariffs sort of line up in the toolkit. Take a listen to this.
My view would be that you would impose tariffs as the last alternative. In other words, is there a better way to bring these people to heel? We are being discriminated against. That is not in contention. The question is, what can you do to right this uneven trade? And the question is, are there other sticks besides an imposition of tariffs? If there are, I would favor them. On the other hand, if they've been examined and there aren't any, then while it's not ideal, maybe that's what you have to do.
Maybe it got to that. Maybe since that conversation it got to that, because we have been taken advantage of, and nothing stops these so-called trade partners other than tariffs. I think that if Larry were here, I think he'd say, you know what, all it has gotten worse.
Our thoughts, of course, are with Larry's family. Larry Bossidy was 90 years old.
come and make it count.
All right, welcome back. You know, I came back yesterday. We talked a lot about different news out there, but we didn't really talk about AI at all, and you can imagine how I felt. So I wanted to make sure our second block of the show today was all about AI, specific to the enormous amount of capital being raised by so many of these companies, led by OpenAI, but also XAI, that's the Musk company as well. OpenAI, my own reporting, some others out there as well, pursuing another $10 billion. Remember, they got the $30 billion commitment from SoftBank, and they have to raise another 10 against that as well. And they're doing it in different tranches. My understanding is perhaps as many as 4 different tranches. So you get $7.5 billion essentially from SoftBank, you find $2.5 billion from investors, but they're trying to raise all the 10 now, guys. $300 billion post money valuation, $260 billion going in. A lot of these numbers have been shared by others as well. And then you've got a story yesterday in the it was the Journal reporting about fundraising going on that would allow Elon Musk's XAI to purchase the million GPUs, or at least the processing power of the million GPUs. This is through, not directly from them, but through Antonio Gracias' company that would buy the GPUs and lease them to XAI. An interesting approach, but all of it, of course, goes to just the enormity of the capital raising from these companies that have to endlessly buy GPUs, not to mention put up data centers. Of course, I've talked to Musk about the Colossus 1 in Memphis and then Colossus 2, and I would reference again what he had to say. In fact, we'll play it right now, back in May, about their plans to buy GPUs. We didn't discuss how he's going to finance it, but the plan remains in place. Take a listen.
I think we have the most powerful training cluster in the world right now, which is over 200,000 GPUs training coherently.
You're at 200,000 already now,
Yes.
there in Memphis, that facility that you
Yes.
went to. Okay.
Yes.
And where are you going?
And we'll be at the million GPU level in the location just near Memphis.
Wait, a million GPUs for a new location, or 800,000 additional GPUs?
A million of the next generation GPUs.
That could cost upwards of $12 billion. I mean, Jim, the numbers just keep going. In its existence so far, OpenAI has probably raised some $70+ billion. Obviously, the numbers there, I mean, I'm talking to potential investors who are talking about revenues of $13 billion at OpenAI. Private company, remember, they're not sharing this openly, going to as much as $25 billion next year. You are talking about enormous growth rates. But remember, it's also a not-for-profit. It is in the transition phase. There's returns that are capped under the previous capital structure for investors. They're dealing with Microsoft, or trying to figure out a way to sort of redo their capital structure and or allow them to become at least a public benefit corporation. So a lot of different things going on here.
Well, I'm so glad you brought it up, because I've got to tell you, I spoke to Scott Strazik this morning from GE Vernova. Look, you may have trouble getting the GPUs from Jensen. Try to get the power from GE Vernova, which is the only one who really has any. Yeah. I mean, David, the backlog. I mean, you know, and look, he's talking every day to Amazon. He talks to well, actually, every hyperscaler, but the ones that are top of mind is Microsoft. And David, there's just not enough power.
It's unabated, the desire for the GPUs,
power.
and in that same interview, Musk said, NVIDIA is still where I gotta go. They're still the best. And to your point, and we can take a look after GE Vernova reports earnings, and you spoke to Strazik, it's power, power, power.
Yeah, they just look, I'll tell you how desperate they are. You know what they're doing? They're using Aerojet engines, tying them up with other ways to move power to be able to have some sort of stopgap power for people. And now those are gigawatts, the megawatt. I mean, Paul, it may be, and I saw Ben Wright just has a piece of claim that no, it's bigger like than the railroad moment, as he's saying. You can't get power.
No, I mean, Oracle yesterday, what was reported in terms of OpenAI and what they're going to do in terms of building data centers for them. You're talking about powering the equivalent, I think it's of over 4 million homes.
Yes.
So a mid-sized city is what these data centers.
That's just 5 right there.
Correct.
Yeah.
But there's good news. There's good news. TVA, they're building a new nuke plant. The NRC,
Tennessee
is
Valley
on the clock.
Authority? Who?
Yes, Tennessee Valley Authority.
Okay.
Yeah, I know. Back
Yeah.
to
Yeah,
FDR.
Roosevelt, yeah.
The NRC is on the clock, 18 months to be able to approve the plan. Once the plan is approved, bingo, it starts to be built. It's going to be built. Canada is being built. Scandinavia, they're building nuclear. So the hope is nuclear power.
That's a big turn,
Yes.
given where we've been the last few
Really is.
decades.
That's the hope.
We'll get Kramer's Mad Dash countdown to the opening bell. So many movers to get to. A lot of industrials. Jim mentions GE Vernova. We'll get to Texan, Otis, Freeport, Hilton, T in a minute.
Jeez.
Good morning. Good morning.
NBC Plus.
Welcome back. We got 9 minutes before we get started here with trading on what Jim and I like to call Hump Day. It's a Wednesday, of course. Opening bell 9 minutes, as I just said. Capital One's a name.
They know nothing.
They know nothing.
He's practicing for Fed chair. He's going to have that conversation with himself. Tell himself he knows nothing when he gets appointed Fed chair. That said, let's talk Capital One right now.
Still, I don't know whether we can go to one of those prediction sites, see where I am.
Yeah.
Okay, now get this, David. Richard Fairbank, often considered to be the actual dean of banking, and I bet you even Jamie, I know he's like, sure, would agree with that. He has put together a deal with Discover. It closed. I thought that this might never get the blessing of the Biden administration, but then Harris didn't win. So this gets approved. He's now got the second exchange network after Amex. David, he's going for it. He's going to go for a worldwide card. And I would not bet against Richard Fairbank. Hence why it is up $10 off a quarter that was very confusing, but is clearly going in the right direction.
Right, and as you point out, they closed the Discover deal. That's a while back, a few weeks back already at this point. So global domination.
Global domination.
Why wouldn't Visa also have something to
because
be
they're just an
concerned
exchange. They only want to take a piece. They don't want any of the.
Right.
They
so
don't
it's
want
more
any
the
credit
issuers,
risk.
it's more Amex that you think is in the
Right,
crosshairs.
but remember that multiple would still go up very big, and that's why this stock is roaring today.
Wow.
Yeah, I know. What's Richard Fairbank?
Well, you've liked it. I know you've been talking about it a lot lately.
I got it. And I nailed this one when it would look like the deal was breaking through, breaking down. Do you remember that? When it looked like there was somewhere that, you know, they spread the rumor that it was going to fail. Then
Yes.
we're going to have to talk about they, because I got a lot to say about they.
I bet you do.
Yes, I do. And believe me, once I become Fed chief, I'm going to investigate every dollar.
Okay.
I like that. All right. Well, we'll get
He
to
likes
those
it.
as well. Of course, some of these meme names, so to speak, a new crop. Opening bell. What do we call it? About 7 minutes from now. Don't forget, you can catch us anytime and anywhere by listening to and following the Squawk.
Mike, you'll eat anything.
Bell podcast.
What's up, Jimbo?
Good morning. How you doing?
How you doing? Hey, today I ain't got 6 hours worth of calls, or 8 hours worth of calls, or 4 hours worth of calls. So I'm doing pretty good today.
All right.
I've been freaking getting my ass kicked.
Well, it's probably that time of year, ain't it? Or it's just the way it goes.
Yeah, so our fiscal year ends July the 1st. So we had all this backlog of projects that we had pushed into like the back half of this month.
Yep. That's the way I feel about snowy days.
They suck.
Yeah, when it snows here, man, I got to work twice as hard.
Yeah, my company's actually based out of Lenexa, which should be somewhere close to you.
Nixon, Missouri?
No, Lenexa, Kansas.
Oh, yeah.
Should be like right on the border of Kansas and Missouri.
Yeah.
We have our main office is in Monet.
Monette?
Yeah, Monet. That's it. We have like 52 offices and 6,000 employees, but the very first office, the main office, they started the company out of Monet.
Yep.
It was a bank software company that they started in the 70s. They rented out like the back of an auto garage shop. It's an interesting story.
Yeah, that's where Microsoft started. In a garage. I was going to make start a homebrew business. I was into that, making beer for 5 or 6 years, and had a couple of real good recipes I was going to try to market, but it was just too much red tape.
Yeah.
In the end, the short sellers have the wrong target. A company with declining sales at a lot
Short
of debt,
sellers.
but not one that's about to fall apart, which is what you need if you're still shorting.
Coals. They're pumping Coals, they're pumping GoPro, and they're pumping, what is the other one? GoPro.
Hose is KSS, ain't it?
KSS, a Krispy Kreme.
Now, see, I can almost get behind the Kohl's pump because that's where my wife does a lot of her shopping, and every time we're in there, it's packed.
Coals?
Yeah.
Yeah. Yeah, it's a huge 5 and dime store is what I call it. That sells, that's where I got my dash, and I got this chicken dash there. Uh-oh. I finally got S's name. I've been calling him Sheba. It's Studio. Oh, I haven't voted in the poll? Initial reaction to existing home sales at 10 a.m. No big deal. Well, they'll probably be up then down. If interest rates are dropping, I'm going up and down.
If you think I'm not buying overnight puts next Tuesday, have you seen the economic calendar for next Wednesday?
No.
Jesus freaking Christ. There's so many red voters.
And we're up, market's up nice.
We're at all-time highs, and there's like 1, 2, 3, 4, 5. There's 6 red voters next Wednesday.
Oh boy.
I'm definitely going to.
I'm out of cologne. I gotta get me some cologne. I'm out. I voted.
Here we go. Just off the trend line that we've held since 5:30 this morning.
NVIDIA popping, Apple dropping, Meta up a little bit, double top on AMD. I'm gonna look at open. I want to go long and open. I'm just waiting for the right time. Pot stocks are up a little bit.
Selling volume for this 5-minute candle is at 87%.
China had a nice pop after hours. Baba. And then you got Nile. Nile hit my resistance at 523. I was 2 cents off of it. And listen, CID. Now that they are not as bearish on chips like the Democrats were, these car makers are popping. Lockheed Martin's got a price target of 440. And Boeing got some new contracts. It's a little bit pricey. Okay, SPX is at the VWAP/ES. Big pop on SPX. We already had it. So, SPY. $632 strike on the SPY. Let me see what this polygram is. Some punk got on CNBC this morning talking about a polygram or something. I had no clue what they were talking about.
Alright, I'm about to get in some master calls if it hits 4:15. There's 6,000 buy orders sitting there.
Spy calls. The 632's at 76. I'm going to turn my air on. So they were GoPro. KSS. Just kind of waiting. Mister looks like got a head and shoulders.
Yep, I'm looking at it. I'm staring at the chart. I was wanting it to get down to 414.50.
3 black crows with a hammer. Ascending triangle off just starting on the 1 minute. Kinda. Well. Maybe a rising wedge. Bear flag.
This one, I'm looking at the book map and it's got 14,000 buy orders sitting at 415. That's where I want it to get to.
If it can squeeze bond 418.91, 419, that's probably where I'd take it.
I'll show you the book map on it so you can see how crazy it is.
Yep.
That 415 level has 7 times as many buy orders as anything else on the whole book map.
There's 10 cents on the SPY from 76 to 87. Boom, right to resistance. Interesting. So you just use that for the, do you see anything on the chart itself, or you just use that?
I have the chart running on one screen and the book map on the other, just so I can verify the support and resistance levels that I have marked out match up with where I see the big orders sitting on the book map.
Yeah. It's kind of like the volume flow thing, in a way.
It's just a confluence for me to make sure that what I thought I saw as support and resistance really is acting that way on the order books.
This is what we're talking about, YouTubers. Nobody knows the trouble I'm in.
Take a peek at ES. Oh, God, dog. They've got a bunch of orders sitting way up at 63.86. 63.84 to 63.86.
SPY just knifed.
Yeah.
Could have a red day today.
Have you seen the hourly on ES?
No.
I think you need to peek at that head and shoulders.
I need to clean my chart up, but we still got the megaphone from yesterday.
We're in a real dangerous looking head and shoulders on the hourly.
Clean this up. I can't read it. Damn.
QQ's pretty ugly too. I think if we pull back or if we correct exit and lead it, this QQQ looks awful.
Yeah, watch the SPX here off the orb on the 1 minute. Per scalp. Man, them 6350s have 11,000 contracts. $175. With a
bull traps and big one master calls.
Okay, here we go. We're at support.
What is that?
We could get down to 63.18 today on the SPX. I'm watching the 63.50s.
Oh, that's why I have an alarm set. Existing home sales comes out in 15 minutes.
Yep. I think it'll be better than expected.
Yeah, but I think the market is, wow, yep. They're going to react to it. Alright, I'm getting in those master calls right here.
Got a new order bought. 105 to 63.50s. Strike. I'm going for it. We'll see how fast this takes. We got the 21 and the 9 as resistance levels. I'm up $100. 50 now. 0. Tight stop.
These sneaky son of guns moved those big orders from 415 down to 400. Glad I looked at that.
Yep. Same as the level 2. I like to watch the level 2 when I'm watching them things move around.
Okay, I think they're going to try to push it lower, so I'm going to hang back for a minute.
$125. So if you're a rookie, take profit. We're at the 21 right now. And I get out of these always too early, and then shit happens.
Shit does happen. IWM is at yesterday's high right now.
I'm up 320.
Which should act as freaking support.
Watch it fly. We got a yin yang resistance. We just hit it. So see if we come back and double bottom again for a second entry. We're squeezing between the 21 and the 9. I sold mine at 125. I had a compliment yesterday, and then I got a bashing yesterday for, damn, you're 100% early morning, but later in the day, it takes a little work. So on the 30-minute, let me see what this pink line is you got on here on your thing. What is this? EMA. 63 EMA. On /ES.
Mm-hmm.
And the 50 SMA. What's QQ? I should have looked at that QQQ. You had yesterday $500, 560.19 support after hours. I should have watched that there. 520 somewhere in that area. 560, I mean. 20. Okay, the 6350s are back at, we had a pull back here on the SPX. So, do you understand what I mean by yin yang? If you don't, I'm going to explain it to you. These are at $1, double bottom. You can almost predict your trades if you just know what you're looking at. So we opened up here at 63.26.94. And then we dropped below it with a double bottom. And I got in the trade in that previous support level, 63.26.94 becomes a resistance. So that's what I call yin yang. I jumped right out of them right when we touched it at the peak of the market. No, but and if we break the now, so now we've got to come back up and we've got to look at the bodies, which is that body right there, 63.26.27. If that breaks, we'll move up higher. If not, I'm going to put a stop on this if it doesn't hold the orb, because it could drop down here, 63.17. Or even 63. Now you got a symmetrical flag.
Yeah, you got 6.5 minutes till that data comes out.
Oh, I better think twice about this trade then.
Biggest buy orders are at 63.55 and 63.50.
It's funny.
Oh shit! What, bro?
So the 9 crossed over the 21. We're kind of very sure. Almost. Bam! There it goes. It dropped. I called that 63 out earlier, and we hit it.
Yeah. They cleared all the buy orders off the book at the 63.55. You just ate them all up. Now you don't have buy orders again until 63.50.
Yep.
And you got 300 sell orders. You got twice as many sell orders at 63.58. I myself am waiting for the pre-market low at 63.43.
Microsoft has a double bottom, high or low, from yesterday's low. Apple, new low on Apple at 212.48.
Minutes to beta.
We got the 200 on the 1 hour at 211.20 for Apple. No, I don't want that 12 there.
IWM is clinging onto that orb for dear life.
One more minute.
Yep. Get some volatility in 20 seconds.
I got a lot of news today. Home sales for June, lower. 3.93 million versus 4 million. Estimate. We're at support right now. SPX. Head and Shoulders from yesterday. Let's clean this up. I didn't get a lot of contracts, so we're going to see. We got a rising wedge support right now on the SPX. Turn down my error. Mister has a double bottom. Yesterday's low, 416.60 right now. I'm calling yesterday's low right around 1569. For 1589. We got to break to 21 on the 1 minute for the SPX. And then the 5 minute. We're at holding support, a little bit under the 9. Tweezer bottom on the 5 minute on IWM reversal. Double bottom right now on the QQQ. Triple bottom. With a fallen wedge. What's KSS? GME's pulled back. We've got a double top on SMCI. Nobody won? Oh, you're going to call it a no change? Okay, you're the one monitoring it.
IWM flew off that orb.
Yep. Need a little reversal here. I'm going to get out of this thing.
I see why so many traders make a living just off no moving averages, no nothing, just trading strictly off the orbs.
Yeah. I always say
Orb and pre-market low and pre-market high I've found to be the freaking most consistent reversal point.
there for a long period of time my moving averages were pretty accurate. And they still are, but
Yeah, they still are, but as far as just like playing out reversals, like big reversals, pre-market low, pre-market high.
yeah. New low on GME. I traded just the VWAP for about 3 years.
Milky uses the VWAP heavily.
Let's see if I got a video. Go watch my trade here at 85 cents. $95. Okay, we got a yin yang on a SPX, so if you're not comfortable with it, we just hit the resistance on it. I'll make it clear I'm not very bullish today. AMD's at the 200 twice. Got a head and shoulders on SPX on the 1 minute. Hike. I got a low support for the SPX around the 200 on the 1 minute at 63.1345. If we don't break the yin yang, and right now we're below support, fighting to 63 on the 1 minute. I didn't look at GoPro. And bind yesterday.
The rug pull on open continues. Damn it, of course. Of course.
Mr. hit my support. Been hovering around it for a long time here. Symmetrical flag out of 3 black horse. Okay, we're getting back up here again. 85 cents. If we don't break it the third time, now we got a triple top on SPX. So I think it needs to do something here soon, or tweezer bottom on the 30-minute on the /ES. It could drop more. It could drop to the 200. A little yawny this morning. AMD bounced off the 200 when I called that double bottom off the 200. Looks to me like we're going to have a sideways range today unless we get more news. Just taking its sweet time. Mister just keeps kind of squeezing out here at the end. We should know something in a couple minutes.
Didn't you mention something about open this morning?
Yeah. Said I got it on watch.
225, 226, which was the pre-market low, which is already hit today, is dead ass center of the golden fib zone.
If I trade this, I'll go long. Be like in my toss account for a year. There's some big orders coming in, big blocks, 18,000. Hey, Hunter, you got any speed, buddy? I need some. You got 1, 2, 3 on /ES here on the 1 minute.
Carvana's about to be in a golden fib zone too on the hourly.
Now we're back at resistance to break again on SPX.
Apple took a hit today. Holy shit, that's the first time I've seen that one.
Yep. I got 211.21 coming up. If it doesn't hold here.
Next fib zone where it's bounced 1, 2, 3, 4 days in a row is at 209.75.
We just now busted below support on Mister. Kind of right at it.
I thought they moved all those orders from 415 to 4.
Yeah.
Apple's got a pretty strong 38.2 fib that it's bounced off of a bunch of times at 209.75.
Got an ascending triangle on Apple also.
Did you know you could stick alerts on the actual fibs on posts?
Well, no, I can put them on there, but I didn't know you could set them.
Yeah, I did not know that. Like if you go to a chart and you fib it out and then you right click on one of the fib lines, you'll see an option that says create alert withdrawing.
Okay.
And then it'll tell you when it crosses the fib zone.
That's a good idea. Because I use the fibs.
Dude, I've been using posts for like a year and a half and just figured this out like 2 or 3 days ago. You can also do it with trend lines.
So let's take the fibs on Apple here. We want to set
So I do all my fibbing on the hourly. I don't know what you do yours on.
different time frames.
Okay.
Right click.
Right click on any of the fib lines and then do a create alert withdrawing.
.6 from the bottom. There it is.
Yeah, and like I said, you can do the same thing with trend lines.
So I'm going to see if I can move that down and put it on my triple top here. Nope. I can't move it around. I'll set another alert right here. We hit 95 on my Yeah, I don't think we're going to get most. SPX broke resistance. We'll make a salad today.
You're dead at a point of control on ES right here at 63.62. And your 30-minute is about to roll over.
Coal's dropped. We're at 1221. Anybody know what was it? Donut, D-N-U-T?
Yeah, it is. DNUT.
And then I'm going to put Nile on here because Nile hit my resistance. So we're just kind of sketching up here on the new high here on the bottom of SPX. So we're back at my even level. Now it's just my third trade of the day. And I'm just debating. Should have bought the dip 60 cents. I'd be up pretty nicely. I think I could have got 60, maybe 65 for sure.
So this 30-minute candle is a tweezer top, but the last 30-minute candle didn't have any wick whatsoever at the top.
Watch Apple here. I've been up since 1:30, 1:20. Seven and 20 minutes sleep last night, 7 hours. Yeah, it's kind of neat that you can set alert. I want to see if I got the alarm set on these alerts. If that comes up. Let me see here. Create an alert. Notify with sound and email. Notify with sound. Yep. It should. Let me change the sound here. We'll go with a ring. Now, tell me if this bothers your dogs. If we get up there. Yeah, I think it's going to be a blah blah day. I don't want to trade that two risky trades today. We got a 1, 2, 3 on the SPX. Off to 63 right now.
Alright, I took one right there at the bottom of the orb.
SPX, the bottom of the orb.
Up $20 a contract, so I took them. I took the 63.40s at 170. If it touches the 9, I'll get out.
China PDD popped. What do I think about RITM? It's up $1 in 3 weeks, almost 4 weeks. trying to figure out what SPX is trying to do. We're just going sideways. 5, 10, 15, 20, 25, 30, 35, 40, 45, 50, 60 minutes. 50 minutes. And we got Google tonight and Tesla. Coin's down almost 14 bucks. Mr. down 12. I'll be right back.
Alright, out at 190.
Slash ES is coming up to the VWAP. Says here, drinking alcohol more than 3 times a week can endanger your finances. Now, who in the hell would write something like that? What would that even come up? Waiting for the big trade of the day.
Oh shit, I didn't catch it, Yes, is doing my curl.
Mister?
ES is doing my curl, my little 1 minute curl.
tweezer top at the 21 on the 30-minute.
Squeeze steady. Yeah, we're squeezing right at the 63 on the 1 minute.
Market needs to do something here soon. We got 9 minutes till lunch, and I'm going to start making my lunch, so. Watching level 2 here on SPY. NVIDIA has an ascending triangle. IWM, QQQ reversed. We're at the, no. Thought we were at the 200 on that one. Open new low 220. They keep reminding us it might be a meme stock. It's weird how sometimes your worst day could be your best day, like yesterday when I got stuck in the SPX. It turned out to be one of my biggest paychecks. I'm not saying that could happen today, but I haven't got the guts to buy the dip yet. I'm going to go cook my chicken, get my salad ready, watch this from afar. Apple's still down here at the bottom. Been here since 8:50, and been here an hour and 4 minutes, 64 minutes. SPX tried resistance again. We're at the VWAP on the /ES. So if we break that, on the 1 minute, GoPro's up 67. And I used to try. I traded this when it first came out, and I thought it was really going to be a good one. It ran like a Dickens. Then it just never did anything after that. I thought it was a pretty good idea back then. You know, the 20-year ran up to $60. And ever since then, that was 10 years ago, 12 years ago. U.S. stocks likely to open higher as Trump seals Japan's trade deal. Oh, AT&T. That's got earnings this week. That would have been a good shot.
Oh, 2 minutes left on the hourly.
You got a new high on SPX.
Your hourly is at the 9 on ES.
We got a brick at 21. We got a tweezer top on the 30 minute. We got a double top on the 5 minute. We got an ascending triangle on the 2 minute. an ascending triangle on the 1 minute. And we're at the 200 EMA.
Are those bearish? Ascending triangles, are they bearish?
They're bullish.
Bullish.
Yeah.
Is an ascending wedge?
Descending triangle is bearish.
What about a wedge?
A falling wedge is bullish. Rising wedge is bearish.
Yeah, that's the one I was trying to think of. Rising wedge.
But sometimes it depends on the market conditions and what time of day it is. And I've noticed here that the descending triangles ain't been really proven to be that bearish like they used to be. I used to jump in them and they'd drop. But it's lunchtime for me.
Watch Master right here. It's got a chance to get above the 63 on 1 minute for the first time all day. If it does, I'll jump in calls there.
How does C look to you?
Alright, I'm in Master calls. Pick the 435s.
Very good.
It just squeezed and broke the 63.
Yep. I'm looking at C right now. C's at a high. So let's go to the weekly. God. I don't know. I get a little nervous on C. There's 70 cents on the SPX. 94.46 for C. Nile knife. I can see Vegas sent me a spy alert. Let me see it. Okay. GE Verona. My Sharoma. If you invested 100, Barclays maintains overweight on GE Aerospace. Price target 295. Hmm.
Yeah, I did, Randy.
Well, I'm not in big on SPX, so I don't know if I want to I just wait it out, but I really want it to hold this 50, the 6350s, but I'm not feeling very gutsy. Feeling actually real bearish. Been feeling like that all week long. Boeing's got a double top. AMD's at a resistance. Apple still down there, hovering down there at the bottom. I want to see Apple move up. Be right back. I'm going to the kitchen for a second and get my meal started. I'm really hungry. We're at the 63 on the 1 minute on SPX. Mister's got a double bottom here. High or low. Why is the marathon rising 1 billion without paying interest? Coin. Okay, we're at 40 cents. Alrighty. How's my YouTube channel doing? Good morning, Mafia Bull. Three black crows. Always clean. Hot, sweet, and sticky. I just can't even hardly listen to Schwab anymore with that girl on
However you
here.
want to call this one. Views on this one.
Yeah, GE Aerospace. So let me start with the fact that earnings had just recently come out. We may have actually seen kind of a key reversal in and around this $272 level. And again, the reversal came literally right off the earnings announcement. We've got some sell side activity. At this point, I wouldn't say
Okay, we're
this is
getting
an
close to
all-out sell,
support.
but I am going to hop on and just try to sustain myself for a little bit more of downside activity.
I think I'm going to add right here.
Maybe
Or move up to the
that bid under
3340s.
marketplace is no longer being sustained. There's going to be again. some
Yeah, I think
sell-side
I'll buy
activity in here.
3340s.
As such, I'm just going out to the August 15th expiration, so it's fairly short, like 3 weeks out. I'm just going to buy the 255 put, sell the 250 puts. It's a $5 wide put spread for a $1.50 debit. Just looking for some continued sell-side activity here in the near term.
Okay, all right. So, Rick, then take us through what you noticed about this chart. Yes, overall, it's been an outperformer year to date, but Don makes some great points about what he's noticing in patterns recently.
Hey, what goes up must come down eventually. Nothing goes straight up forever, in nature. And, we can see the point here that we had a notable high point here, our green line here, 257 or so, pretty close, 255, 257, that general area. Also, that coincides with our 21-day EMA near 255 as well. So a breakdown below that point could trigger a move back to the lower end of this trend line here. We have our notable low point here after a steep rally, connecting these subsequent lows here. That would give us a boundary roughly around that 250 level as well here. You can just duplicate the trend line, put it across the highs, happens to match up fairly well here. That's about where price topped out recently. That would be another potential resistance point to look for going forward here. You can also see that we have seen a situation where we had this very sharp rally off of these lows here from here to here, almost a straight shot to the upside, but it started to moderate. You can see the trend shifted to a more gradual upward slope, still trending upward to be sure, and still holding on above this old supportive area, but the momentum is starting to slow. We can see gradual lower highs on our RSI momentum indicator despite price making higher closes. Now we can see as well a green trend line in play as well. So a mixed picture as we kind of look to the next possible breakout area for this stock here. So if we were to look at our volume profile study, we can see that the volume is heavier around this 250 area once again. So 250, let's say 260 to 245 or so. Is an area where there's quite a lot to consider in terms of potential support. The standout areas in particular, 255 and 250. And then even moving lower, 235 would be a notable price area. That's where the volume really starts to drop off as well. If we were to take a look to the upside though, we've got our channel boundary and our old highs here near about 273. That would be another area to watch.
Love.
Okay,
has
so
a lot of
Don,
clicks.
that level that Rick just finished with 273 is a level to watch. Obviously, that's
Go, baby.
you would want to say. Any things that you want to consider as it relates to this? I know you do have a short time window with this one.
Yeah, no, it's a relatively short time window, and again, I'm just kind of hopping on this this most recent trend, which is a reversal from that all-time high.
3340s at 130, now at 160.
They're going to consolidate, in the near term and/or break lower. I'm actually going to take the break lower. That consolidation, down the road might actually lead to some new highs. But again, what's been really hot in this marketplace as of late isn't in just the last couple of trading sessions, and that's exactly why I'm hopping on trend here to the downside, GE Aerospace.
All right, let's talk about the next ticker on your list. That's XLU, Utilities ETF here. It has outperformed year-to-date the S&P 500. And you mentioned earlier that rotation pattern that you're noticing. I'm starting to hear that more and more from different people that we talk to. What's your view on this one?
Well, the XLU, the Utilities ETF, to me, this one's a little bit disconcerting. So why are we seeing utilities, which I think the dividend is somewhere about 2.64%? Why is this thing not just bidding up? I mean, this is a substantial move to the upside. So one of two things, is there just nothing left to buy and all of a sudden, that's it, we've got to put our capital towards utilities? I don't think you can make too many arguments right now. Nuclear power obviously has moved up, but utilities, this is completely old school, and it looks extraordinarily defensive to me. Now, even though I'm actually building a bullish trade here, as I said to you, I think it has, implications for the broader marketplace. The bullish trade I'm actually building in here, this one I'm going to give a little bit of time because, again, this could be a defensive move, and that defensive move could be underway for a significant period of time. I'm going all the way out to the September 19th expiration. I'm going to be buying the 85 calls, selling the 90 calls. This one's actually done for in and around $1 debit, although the trade may have already gotten away from us as there's some pretty good movement inside of all things utilities. You got to realize this is low beta stuff that we're talking about that is moving everywhere. This looks like some volatility in what has generally been a very low beta underlying.
Okay, all right. So, Rick, you're up next then. Don just mentioned that point about it being low beta. What do you see when it comes to the chart?
Pretty interesting setup. That's the first thing I thought too, is these are typically more of a sleepy type sector where you don't see the big moves here. But as we had this persistent ceiling around the 83 level, so first, even back here, it was more around 82 or so. Then we squeaked out new highs near 83. We tested them a couple more times here, and here. Then we formed what looked to me kind of an ascending triangle type shape here, where we have horizontal resistance and gradually increasing lows kind of bouncing back and forth between each other. Perhaps not the cleanest example, but really what I look for is just the general price movement here, the idea behind the pattern. I'm not really super worried if it matches up cleanly. We have horizontal resistance overhead and gradually higher lows, and then we had the breakout at that 83 point. So we now have a situation where, well, do we wait for a potential retest of this old resistance level that's now supportive?
160.
Or, on the other hand, we run the risk of, as Don said, kind of the trade accelerating to the upside more. You might not get that pullback that you were hoping for, and then you're just, out of luck then for that particular instance here. So 86 is the high point, 86.02 to be more exact here. 83 lines up quite closely with our yellow 21-day exponential moving average, so a bit of support around that general area to consider here. We can also see, if we were to look at our volume profile study, not really super surprising here that most of the volume is concentrated in this area, generally speaking, but really 81 is a relatively noteworthy level in terms of the activity. It also lines up with a few more of our indicators as well. The plus 2 standard deviation channel based on 1 year projects potential resistance around 86.77 at this time here, possibly.
Okay, all right, Don, let's talk about the final trade you've got on your list. This is over in the financials, and financials have had strong performance so far this year. We often talk about JP Morgan Chase, but you're looking at Wells Fargo. It's been an outperformer. Do you expect this to continue?
Yeah, I know this one absolutely pains me deep inside, but yes, I do expect this one to continue. You know, we've seen a lot of underlines, and this can be tech, this can actually be, you know, some of the financials. I mean, a pretty wide spectrum of underlines where they're approaching effectively their all-time highs, and they've got pretty substantial market cap, which of course Wells Fargo does. They've been breaking out to the upside. I don't see any reason why this should be any different. And it's doing exactly that right now. You break through 84 on Wells Fargo, this thing could have legs to the upside. And that's exactly how I'm going to trade it. Again, fairly short term over here because these, like what I call gamma squeezes, these squeezes.
WFC.
Near term, and we're right there. You know, 83, 84, we're right in that kind of wheelhouse. So I'm going out to the August 15th expiration. I'm going to buy the 83 calls, and I'm going to sell the 87 calls. This one's done for $1.
I need to learn how to trade like them guys do.
If you will, squeeze to not just all-time highs, but through those highs and some legs to the upside. I think 87 could easily be hit.
All right, Rick.
Okay, well.
What about this chart when it comes to Wells Fargo?
Yes, another key resistance level here. This red line, 8150, was our old high point from back here. That is where we broke above recently. Didn't get a huge surge, but a pretty solid pullback here. We solidified around our trend line, starting with those April lows there, and also pretty close to our 21-day EMA. For the most part, we closed above that indicator. Typically, support during uptrends, resistance during downtrends. Now prices once again crossing above that boundary here. We filled this small gap that we formed on earnings here, a bit of a give back here, but not really breaking any significant boundaries other than that 8150 level. So if we were to keep moving higher, 83.95 is that high. If we do get that situation, you know, think of it, traders buying calls, dealers have to sell the calls. On the other hand, then the dealers buy stock to cover it. It repeats. It creates a surge to the upside here. Stop orders get triggered when the prices break above certain levels here. You get the cascade and then the breakout here that can lead to, you know, runaway profits. It would be the hope. Nevertheless, momentum was trending downward here out of that overbought area, on the verge of breaking through to the upside once more here. If we were to consider some other levels based on our volume profile study, we can see the bulk of the trading is down here near 73. Not really any clear standout areas as well in terms of volume in the near term, but we can see our 77 level, a frequent stopping point for price, lines up fairly closely with the 63-day EMA to the upside, +1 standard deviation channel around 89.50 or so.
Okay, all right. Don, I'm going to give the
175
to you because you said this one pains me. Is it a personal pain point?
It really is. It definitely is. But you know what? Rick is actually spot on with this one. It's dealer gamma that often actually breaks these to the upside, and I'm just not going to stand in the way of it right now. I mean, the marketplace is still really strong on a relative basis. Look, we are seeing some fading inside of the Nasdaq. The Nasdaq is massively unchanged on the week, but that could change tonight with Google earnings. You know, Tesla to a lesser degree, Tesla tends to be its own animal. You start to look at Google, though, that could change the way we feel about the NASDAQ. Right now, we're actually seeing rotation, not necessarily towards tech. It seems like everything else, and Wells Fargo fits right into that.
Oh, you set up nicely. Our next segment, actually, we are going to be taking a look at the tech sector. We'll leave it there, though. That's Don Kaufman, co-founder of TheoTrade, and Rick Duquette, our lead market technician here on Schwab Network. Thank you both, guys. Coming up next, like Don said, we're going to spotlight big tech. We've got 2 members of the Mag 7 reporting after the bell today. That's Alphabet, the parent company of Google and Tesla. We will start out with a look at Alphabet on the other side of this break.
$2.
Brings traders the biggest
Take profit. double top. If we break the double top, this thing can go higher back up to this. Or this. This here probably better. Better get out now. Megaphone. Up. No. I'm still holding my 63.50s. I should have grabbed a bunch there at 35, 40 cents, but I would have bought the 63.40s. Hike. So we came down. I jumped in this trade right here. It had a higher low from the trend, my trend line in a way I had on here. And as I start to approach the triple top, I decided to go ahead and sell them. So as I was closing in on resistance, I got out in the heat of the moment. So you could see the trend. The 63.40s. And if we break it, 63.34 next. I guess I can listen to Schwab until that brunette gets on here, and then I just get totally depressed.
At the same time, you know, Alphabet Google has Gemini itself. So how big of a threat is it, or is it essentially, like, could it potentially be seen as friend instead of foe?
I think that's the way the company is trying to position itself, to be frank. And look, there are a lot of benefits that the company is garnering from AI, from more of like an operational perspective, whether it's, you know, automation. Frankly, if you look at the company's Performance Max platform, experts we've spoken to have consistently indicated that it's helped in terms of driving ROAS, which is the return on advertising spend, that, you know, advertisers and marketers using the platform, you know, they want to see the highest possible returns. However, I think it's pretty clear that, let's call it the days of Google search having 90% global market share, maybe in the past. I think for the first time in 15 years earlier this year, that search share went below 90%. I think it's in the mid 80s now. That's not a good thing. And so all things being equal, I acknowledge what you're saying.
Head and shoulders on Google.
Hey, look, there are some positives to AI, absolutely. But I think to a large extent, the consensus is that the negatives have been outweighing. And largely that's because it's just more of a competitive and dynamic marketplace for what Google is doing. And that obviously makes times a little bit more challenging from an operating and financial perspective.
What are your thoughts on the views that Google can offset search volume loss with stronger ad pricing, even including AI within that?
Yeah, I mean, obviously that's the narrative that
people are loud today
to articulate probably for months, quarters, and years to come. It's something we've consistently heard from experts that we speak with on this topic. We'll see to what extent they're able to do that. I think one of the challenges is, of course, being able to deliver the value that I alluded to. The reason that Google historically has performed so well as an advertising vehicle is because advertisers and marketers consistently derive value from the platform. If there are alternatives that are doing a comparable job for less money, then you're going to see dollars flowing to those platforms. Now, what's interesting is if you look at the competitive kind of set right now, I think a lot of people think about, OpenAI and ChatGPT, increasingly Perplexity. Those are not kind of advertising supporting vehicles. Could that happen over time? I think a lot of people are expecting you're going to see those companies, those products moving in that direction. In addition, like we've talked about, the AI overview functionality that Google is already providing, which I think a lot of people find particularly compelling, that is really not driving much in the way of advertising revenue. And so I think they're going to have to figure out the right way forward here. It's definitely a lot more complicated a landscape than they've navigated in recent years, I'd argue.
Okay, speaking of just kind of competitive landscape, what about YouTube, though, especially as it relates to, the potential for advertising growth there? I mean, YouTube is pretty sticky, and when you think about just younger generations, that's where they go.
Yeah, no, I mean, I think you're absolutely right on that front. People really don't watch television in the way that you and I used to, I'd say. I think a lot of times when you're watching a screen, especially as a younger person, you're actually watching YouTube. The thing about that,
Texas
though, is it's
Instruments,
solely about consumption.
bad reaction in earnings.
It's also about monetization. And YouTube has an interesting kind of dual monetization.
Texas Instrument declares a dividend.
Because on one hand, you have
Wells Fargo adjusts it to $195, so they lower the price target on this. Except for benchmark, they adjust it up. Sasquatch lowers it. Jeffries lowers it. Wells Fargo lowers it.
Streaming video advertising category.
195. Man, I haven't charted this up in a long time.
And I'm talking about streaming
years.
And monetizing with advertising. Obviously, Netflix and Amazon Prime Video have been at it for
years.
But only more recently do they have ad-supported tiers.
This is 1921.
Indications that those
1920
are disrupting and actually taking share. I'm not talking about viewership now. I'm talking about advertising dollars away from YouTube. And the one wrinkle which is really important to keep in mind is historically, YouTube has been very brand advertising focused. That is not the kind of advertising that people are seeking.
It's out of support right now.
With today's economic backdrop. What we saw during COVID, and this has continued, is a demand for performance advertising, direct response advertising, essentially advertising that's indicating, hey, we know this, that, and the other about you, searches you've been conducting, or what have you. Would you be interested in this specific item, this specific purchase? And it's incredibly effective for advertisers. It's not something that YouTube does especially well.
Okay, well, I know there were some who would argue that it does, just to play devil's advocate in this case. We'll certainly look forward to Alphabet Google's results after the bell and see what the AI threat looks like for them, if they are really, if it's more friend than foe. See if they meet on metrics and what the forecast is from here. Scott, we'll leave our conversation there for today. That's Scott Kessler, analyst, Third Bridge. Thank you, Scott. Coming up next, the disruptor, George Silas, joins us to take a look at Alibaba. It released its latest large language model. It claims to outperform ChatGPT and DeepSeek, plus taking a look at the latest run in the meme stock craze. We'll be right back.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Welcome back to Trading 360. I'm Diane King Hall live from the New York Stock Exchange. We're looking at stocks on the move. I want to bring in Sam Vadas, contributor on the Schwab Network. We're taking a look at the meme stock space, the meme stock making a comeback. You brought back the word YOLO. YOLO. I know the companies won't like to hear this, but it does feel like the YOLO trade is in effect here. Yeah.
Well, I'd sure like to know what Ozzy Osbourne's heaven's like.
Diane, as you and I have been talking about, obviously the meme stock craze making a bit of a comeback. Obviously, yesterday we were talking about Coles and also Open Door. Now, as far as some of the movers and shakers in the market, we are seeing a lot of attention and focus on D-Nut, obviously Krispy Kreme's up 6% or so. GoPro flying today, up almost 30%, so some strong double digits there. We are also seeing, as I mentioned, Coles coming off a 16% or so, and Open Door also down 24% after that run-up we saw yesterday. Remember, actually hitting a technical trading halt on that particular stock, and a lot of this, as I said, has been really generated by some of the coordination on social media, and I quote, YOLO D-Nut on one of the posts on Wall Street Bets reads. Obviously, because of that, it has very much been compared to GameStop. It's very much giving off those vibes, partying like it's 2021, as I've heard on the street. So it seems to be a lot of attention around this, but it was interesting when, I was listening to Nicole and Kevin even speaking about this morning. When she asked him what to make of it, he said, well, I have no idea. And I think that really just speaks to some of the head scratching that goes on here when you look at some of the notes that have hit my inbox over the last few weeks. As we've seen this sort of retail FOMO, those meme stocks are on the rise. It has been really some of the moves on absolutely no news, as traders say, just because they feel like it. And so what we saw with the issue with Coles, and you and I were discussing this morning, Diane, was the fact that these retail investors seem to have caught on to the fact that these are heavily shorted stocks. And that begs the question, and I've heard about this, in the sort of trader talk this morning here on the floor about, why these stocks are even being shorted in the first place. And you get a company like Coles, and some of the chatter is like, well, the fundamentals of this company looks okay. So why are we shorting the stock anyway? But they seem to
I need to go eat, but we're at 140, the 3340s right here.
And sort of jumping on the bandwagon here as to
on SPX. And I've scalped this for
Well, I guess so. I mean, look, Coles has
about 700 just a bit ago.
It feels like they're trading.
We definitely got a support right here. I'm going to clean this up.
This one caught my eye. A headline from Benzinga: Krispy Kreme enters meme stock frenzy with hot glazed hype. it gives us some great headlines, but it's certainly like, you know, these are, you have to be careful around stuff like this.
Oh, you know? Absolutely. I mean, you know, these retail investors are piling into what are really beaten down.
I want Caroline back.
You know, as you say, when you look at some of these
Please.
Yeah, it's
oh
very interesting as to what is
driving.
driving.
75.
Yeah.
Because of a 28% gain today.
Yeah. Incredible. It's making me hungry.
All right.
Krispy
Yes,
Kremes.
indeed. And flying there for GoPro. Thank you, Sam. That's Sam Vadas, Schwab Network contributor, with a look across the YOLO trade, the meme stock frenzy, making a comeback like it's 2021 all over again here in 2025. Time now for the Disruptors. Joining us with today's company is George Sillis, Senior Markets Correspondent. We are taking a look at Alibaba. This one's not a meme stock here. It is moving higher after some news around, its latest news around large language model. What are the details here, George?
Well, I mean, if you look at Alibaba, there's obviously a nice positive trend going on with this name, which really started off as an e-commerce giant, but it's actually morphing into this major conglomerate, which includes media, entertainment, but also technology, cloud computing, artificial intelligence, and even financial services. And we know that the Chinese stock market, irrespective of what's happened earlier this year around February, March with tariffs and such, has actually recovered quite nicely. Is making some new highs. Alibaba is still higher by about 44% year to date. They did announce that they launched a new open AI coding model, which has actually garnered some great success so far. But the competitive race in the artificial intelligence development areas of the technology stack is becoming more competitive, particularly in areas where there's now open source software where individuals can actually develop their own AI models. So with inputting their own language models. So this is a sort of a game changer for Alibaba. The stock is recovering nicely today, or moving nicely, based on this news. But this is a company that has, I think, benefited and will continue to benefit.
Not up now, mister.
Reprieve on tariffs, anything that...
Mister couldn't break resistance. 415.89.
Improvements, especially with export-led growth countries like
I got SPX
which it still is.
at 145.
Will certainly benefit Alibaba, but at the same time, the Trump administration seems to have been relaxing some of the AI restrictions in chip exports to places like China. So it seems like there's some negotiations on the political front going on with China and the United States, and certainly the spillover beneficiaries of that will be in companies like Alibaba,
Yay.
NetEase, and some of the other technology.
Now, if this thing breaks the triple top,
Okay, George, I know we don't have a lot
we might have a breakout.
How about you take us through an example trade for Alibaba?
Yeah, so I'm going to go with the trend. If you look at the 50-day moving average, the stock is trading.
So I'm going to explain something here of what I've changed around in my trading this week a little bit, done some adjustments. We're at 170. This is an exit idea at a triple top. Rising wedge.
September with 58 days expiration, I'm going to buy an in-the-money $115 call option. So this is a trend trade call option. Altogether, it costs you about $11.50 a share, or $1,150 a contract. So it's in the money. If you hold this trade,
there we go.
Even,
yeah.
58 days, $126.50 is the break-even price. But we're buying about a 70 delta, which is in the money. And ideally speaking, if that delta hits 85 or 90, you could consider closing this position or rolling it to further out in terms of time, but also a lower delta. So it's a trade that manifests if the stock goes higher. It holds its value well because it's in money and it's bullish. So again, if you hold its expiration, it has to at the very least hit 126.5.
Okay, all right. That's the example trade there for Alibaba. George gave you the parameters. That's George Sillis, Senior Markets Correspondent here on Schwab Network. Thank you, George. Okay, up next,
so this week I've been scalping, like if I'm going in, like if I was in the 63.50s.
And it's polarizing CEO Elon Musk. We've got perspective on the other side of this break.
And it's really worked out good. Yesterday I did it a lot. So let's say I was in the 63.50s and I had to cost average down a couple of times, and then it found support. And it'd move up a little bit, and I wouldn't sell it, and then I'd come back down and hit that same spot again. I'd start scalping that lowest one that I had in there, that lowest price. And I'd also move up the calls from 63.50 to 63.40. Now I've scalped this thing twice. We're at 175 right now. I get out of it with 300 bucks. The 145 calls. I mean, the 6340s at 145. When I got down here to the bottom of the 123. So that's your setup. You're at a resistance level. You got the 123 and the 123 right here on a rising wedge. So I would sell it at the 123, maybe hold a couple, see if it wants to go ahead and break out, because that third time's the sweet spot. And at 300, out at 180. Now we'll go on. Now we're going to break out. And I haven't added to the 6350s yet. And I don't have a lot. I have 5 contracts, so I'm not really hurting. 250 bucks. Now I'm putting a risk level on these trades, letting you know that I think they're a little risky. Like after about the third scalp or the second scalp, you can't. There's $2. I could have got $2 out of this thing. So remember the chart pattern. 1, 2, 3. 1, 2, 3, that's the sweet spot. And it has to break out. If it doesn't break out there, it can nosedive. If you ever played baseball, you know what I'm talking about. Like on a bat. Coach always tell you to hit it in the sweet spot. There's a certain part of the bat that if the ball connects, you can hit it out of the park a lot easier. If you hit it too low or you hit it too high, you could break the bat, or you could have a foul ball, or you go sideways with it or whatever. Many people break their bat when they hit it too low on the bat. Now these things are at 220. So if you ever find that sweet spot in a chart, which is the 1, 2, 3, then you got your bat right here. If you hit the ball down here a little too far, you could break your bat. And if you hit it up here a little bit too high, you could break the bat. Or you could hit a real sour foul ball with it. But if you hit it right here, you can get a real good hit, real good base hit. That's where I hit most of my home runs, was right in there. And that's the same thing with your 1, 2, 3. You could jump in here and scalp it up and create that top channel and then run it back down and wait for it third time. And that's the sweet spot. And if it doesn't break there, then you got to kind of say, okay, I need to move on to another trade and keep this one on watch. And that's a rising wedge. Look at them fuckers. Studio. Do it. Are you here? Get out. Yeah. We nailed it. Sell it. $6. Never doubt the wash. Take everything back. Take it all back. Tell the room I'm a wonderful trader. And send me $1,000. I want $1,000. I want 20%. Woo! That was sweet. Talking about the shit. Sweet spot, man. I'll tell you what, I need to record this tonight. I'm going to come back. What time is it on the tape here? Come on, studio. I'm waiting. Don't be shy. There's another $10. I just got a couple left. I'm out now. I'm glad I didn't go into the kitchen and make my lunch. So. When you're in doubt, give Washboardjim a shout. I'll make it clear, honey, dear. We had a falling wedge, hit the sweet spot. If you're ever in doubt, give Jim a shout. We broke out, I made my day. Hey baby, come over and we'll roll in the hay. If you're ever in doubt, give Washboardjim a shout. I'll make it clear, let's go have us a beer. If you're ever in doubt, Washboardjim a shout. I'll make it clear, and we'll have us another beer. Boom. The singing day trader does it again. I am blessed. Well, Beans, I'm going to show you what Studio said because he ain't going to put it in the room. I'm going to share it, Studio. He's calling me Jesus now. Woo! Oh boy, I tell you what. Did you notice I wasn't too shook up, baby? Take $1.40 and subtract that from 12 and times that times 10. Oh, and not times it by 10, times it by 4, and then 10, and then take 2. God, I guess it's not about the money with me. And I know it's always good to brag after a good trade like this. But it's more about the adrenaline rush. I don't have the body to go out and play basketball no more. I don't have the body to go out and box. I don't have the body to play baseball. You know, I could barely swim 5-10 laps yesterday because my body's been through hell. With sports. So I miss having that adrenaline rush, and I had to find something in life besides girls that would give me some adrenaline rush. And I started trading stocks. So I just had one hell of a spin on that adrenaline just now, coming this big breakout talk, especially sitting here talking about it, and then you get the boom on the sweet spot. Just proves my point. It's almost like instead of sitting here and getting stoned all day now, I enjoyed the adrenaline that I'm getting. So that's that. Whew. Oh, I understand what you're saying. Studio. I know what you meant by Jesus. I know you weren't comparing me to Jesus, because that would be bad. But I do believe having Jesus in your heart makes you a better person, at least if you live by the rules. I'm learning here lately. This morning, last Sunday, I took notes. Took a big old bunch of notes, and I went up to the Sunday school teacher and I told him, I said, look at this. I said, I'm taking notes. And then this week, last night, when I woke up, they were preaching about how to study, or how to have conviction, and that's the same thing with stocks, is some people just show up with their cell phones and, you know, Jesus looks down on that because you might have some porn on there or something, and some carry their Bibles, and then you got others that go in there and take notes. When trading stocks, I'm always taking notes, and I'm at it every day. So the more you study, if you read a little bit every day, or if you sit here every day, you start to pick up a feeling, and you start losing fear. I've traded with a lot of people, and a lot of people get like I myself for 15 years would always get shook up if I was down, and I'd breathe hard and it raised my blood pressure. So I had to start relaxing a little bit more and not breathing as heavy and not worrying as much, because I've seen it over and over and over again. You know, like, I think you understand what I'm trying to say. So I'm always at a calm state. They just bounced up $400 right there if I would jump back in them instead of talking. He's not calling me Jesus, so let's make that clear, room. Okay, I'm gonna go make my lunch. That was nice. Today might even be better than yesterday. Ringo, you know I'm writing these songs as I go. They just kind of spin off the top of my head. Thank you, Doctor. Kent Rad, Kind Rat. Thank you, Franchise. Whew. Unbelievable. That's what you are. So I'm gonna, all of a sudden I just got this song I want to hear. So get ready.
Kind of a stoic guidance, not anything aggressive or aspirational about. Here are 4 Wix Studio features you've got to know.
She watches TV, and if you ever wondered what it's like to be me, she takes all my money and leaves me no smokes, yells at my buddies and insults my folks. I'm breaking my back, doing the best that I can. She's got time for the dog.
Pissing up a rope.
You can piss up a rope and feel the pissy dribble. You can piss up a rope and watch me giggle. For the last 6 months, I've been packing your bag. You can wash my balls with a warm, wet rag till my balls feel smooth and soft like silk. I'm sick of your mouth and your 2% milk. And I'm no dope, but I've lost all hope. So hit the fucking road and
Piss up a rope.
You can piss up a rope and you can put on your shoes, hit the road, get drunk, pack your bag. I don't need the ag on your knees, you big booty bitch. Start sucking. You ride my ass like a horse in a saddle. Now you're up shit's creek with a turd for a paddle, and I can't come
Pissing up a rope.
You can piss up a rope and you can put on your shoes, hit the road, get drunk, pack your bag. I don't need the ag on your knees, you big booty bitch. Start sucking. You ride my ass like a horse in a saddle. Now you're up shit's creek with a turn
With a paddle.
and I can't
Hope. Pissing up a rope.
You can piss up a rope and you can put on your shoes, hit the road, get drunk, pack your bag. I don't need the ag on your knees, you big booty bitch. Start sucking. You ride my ass like a horse in a saddle. Now you're up shit's creek with a turn for a paddle, and I
Can't
can't
cope. Pissing up a rope. Yeah. Washboard Jim with We.
This is a 400-ounce bar of solid.
I mean, your band called We, you're going to go ahead and talk about P. Am I correct? Or Ween. W-E-E-N. Okay, well, it's nice when things kind of click together. Oh, incredible. I have 6 washboard gyms in here right now. What's this? Well, that was strange. Woo!
The trend as far as inflation goes, because remember,
there's
on
no
the CPI,
inflation,
we
you
saw a tick
dimbat.
up, even though the PPI was lower than expected, than the numbers had anticipated. We saw a tick up in CPI. That's what they're concerned about. We're going to find out more next week when the Fed meets. No rate change expected, but maybe they set the tone for a September cut. And the market.
Here's one last thing, Tom.
Yeah.
Here's the bad. Whatever happens, good or bad, Jerome Powell's getting blamed.
Well, you can say that again.
No matter what.
There is one common thing that we have here, Kevin.
Yes.
He will get blamed either way because
He will get blamed.
we don't need any more mistakes on that side. All right, Kev, let's take a quick break. When we come back, we're going to kick off our discussion on option strategies. We're going to talk about Alphabet. The Google parent stock has had 10 straight days of gains. It's lower today They report after the close today. Stick around.
I mean, that's probably one of the coolest. Out of 21 years, I think that tops probably one of the top 50 breakouts that I called out, and especially give a lesson about it at the same time and just watch it go. You know, people are in shock. They're watching, listening to me talk about a baseball bat, and all of a sudden relating it to stocks in the sweet spot in a triangle or any kind of pattern has a sweet spot, and every pattern has a pivot point. And it just kind of makes my day to see something like that happen after you sit there and you give a 10-minute lesson on where the most important part of the pattern is. And it's like what Funky says when he starts to see that curve.
Are designed to help
Correct.
you develop a deeper understanding of technical analysis, options, futures, and best of all, you can ask questions by chatting directly with an education coach. It's interactive. Tune in live or watch on demand.
It's amazing, ain't it, studio? Hopefully that worry will start to go away. And that confidence will start to build. Did anybody jump in that trade by any chance? Besides studio? I mean, I just jumped right in that sucker. I couldn't believe it. So some at 180, $5 and 12. I'm naturally higher than a kite right now, just on adrenaline. So I got to eat. I've been saying it for what, hour and 2 hours? Hour, 10:30, around 9:30. Now 11:19. Jesse, remember that sweet spot in them chart patterns. Starts 1, 2, 3. I'm gonna give you a video here. Oh, here's an old video of me in Vegas.
Look at their capex spending. Is it going to be 75 billion? Is it going to be more or less than that? We know those. What's the one thing that could?
Let me see if it's. Welcome to I Love Stocks, and today I want to talk about JFIN. JFIN. She had a great run today, and she's from China. She's a China play. Let me see if I can find it here. Jalen Group operates an online individual financial marketplace that connects individual investors to individual borrowers in China. It operates and secures an open platform that facilitates chart real fast. The dollar amount was about $7.20, and it had a high today of $14.95, which gave an over 100% trade, and that came from Vegas. And also, we have to give some credit to Tony. Tony was involved in this trade too, so we do appreciate that. So we're going to go straight into the chart and check it out. I'm going to use my EMAs. We've had a double top break, which was right here, right around this level right here at 1053. And that was when it was alerted around today too in the room, again, right around 1053. And we popped up to a daily high, and it did have a yearly high up here right around 30 bucks on a big old fat finger. So yeah, can this thing climb back up here? It probably could if the momentum picks up and the way it's been trading. We're going to go ahead and look at the 20-day chart, see if there's anything in here that we see. We did kind of have a peak right in here. Had a nice little breakout. It started on the 17th and then really took off on the 18th. And then she pulled back Friday, and then we had that retracement bounce back up. Would I have been able to call that support level on the pullback? Probably not, because I'd have said probably right around $7. But she pulled back here right around 765. We're going to put a little channel right in here just in case it does decide to pull back. We are pulling back after hours. As you can see, price is now at 1378. So where's support at this trade? I like catching these knives, so I think support is going to be a little channel, first one in a way, between this 1155 and right here between, let me get this in here, right there at 1196. Flash from the past. Here's an old video that I have. Be here for a long time. $14 years ago, Charlie Sheen breakdown on stocks. This one goes out to studio.
Hello, this is Wash at Wash Stock Talk. But actually today I'm Charlie Sheen. Breakdowns on stocks. Man, this looks like a good one, guys. I'm really a winner here. This is looking good for me, man. The tiger in me's, oh boy, come on, go up. Oh, no, don't go down. Don't go down. No, please, it's going down. I gotta sell. I'm almost broke. Come on, I'm gonna sell, man. I'm freaking out, man. My tiger blood's gone. I can't take it. I feel much better. Come on, go back up. Stock's going up. Oh, no, it's going back down. Oh no, it's going back down. Panic. Freaking out, man. Where's my dog? Here. I'm freaking out. Oh, help me, Lord. It's going back down. Oh, it's gone back up. I'm a winner.
Who's my dog?
I know I can do it.
Can I help you, Jimmy?
The Charlie Sheen incident that got to me. This is Wash at Wash Stock Talk. You'll never get in a stock that you can't get out of.
Okay. Unbelievable. So you get a breakout like that. That's just mind-numbing. I'm going to set alert off the VWAP on the SPY. That'll be $20 to the chip jar. You saw it 2 times? Look at the date on it, Chris. I wish every trade was like that. I guarantee you I'm probably the only one out there that shows this strategy live every single day. Get ready for the spy. I give you the alert. Whoops. I think drink water would help. Good morning. I sent you 3 quotes for my trip. Where are they? Where are they? I sent you 3 quotes. That includes airfare and transfer. The flights are most of the day. Keep in mind, the flights are most of the day. What? You gotta be kidding me. Well, I don't see them. Oh, beautiful morning travel. There they are. Okay, let's see what Punta Cana should give me. God. Hey, how many people am I taking? Right, this was what? Oh, Punta Cana. Well, where's the resort at? She's not giving me the resort because she knows I can. Oh, secrets. So she's wanting to charge me $2,100 to go to secrets. I can get it for well, when you tell somebody a budget-friendly resort, Secrets, let me see if this is the one. Secrets, Tides, Punta Cana.
$57.40 on the upside. So what Kevin did was the option market's priced in at about a $3.30 move either way. He basically put the short strike right by where that the stock's expected to move, but he did it to the bullish side. So he took that with this example on this one. Now, if you collect that 240 credit on this one, you still do have risk, and that's below above 58 and below 52. You've got about $60 in risk only on this. So the risk reward setup's really good. But Kevin, when you skew something like this, and you know, with only a couple days till expiration, you're going to have to probably close this because you might have some assignment risk. If it goes up there, you'll have one of those short options in the money. When you skew it like this, you'd still need that move to the upside because the break even here, 52.60, which is basically where the stock's trading right now.
Yeah, this is a slightly bullish play, and the attraction here is pick a spot that you think Chipotle is going to go, right? In this case, I picked the 55 straddle. If you think it's different, choose a different one, and then hedge it, make it a $3 line,
smart ass,
on the risk profile, and see if the risk reward fits your tolerance. Hey, you might want to do the 52 strike or the 52
maybe you want to
strike.
shut your mouth.
Remember, the strategy is what we're teaching here, but how you put it on, the strikes you use.
Earnings coming out on CMG.
Individual call on this trade.
Yep, break even 52.60 and 57.40 to the upside. So got a nice wide range here, but as I mentioned, you're going to have some assignment risk. So if this stock opens up at 53.5, 56.5, something around there, where you get the credit to kind of collapse a little bit because you know, implied volatility levels will most likely fall post earnings. Time decay is also in your favor. If it gets cut in half or goes down a little bit, you've got to start thinking about ways that you can close this ahead of the expiration date on Friday. So keep that in mind. The idea is you buy it back cheaper than what you sold it for on this trade. But a good look at the short iron butterfly for a nice credit.
Cohen just price target on Chipotle to 61, maintains a buy.
30% from those all-time highs that we saw in December. They report after the close also. This will be a big one also. Stick around.
Oh man, Secrets. Was that Punta Cana? Yeah, Secret Tides. I said budget friendly, and she sends me this. $380 a night.
Trading at Schwab is now powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals, you can spend less time searching and more time learning. Trade brilliantly with Schwab.
Trade brilliantly with Washboardjim.
Welcome back to Fast Market here on the Schwab Network. Before we take a look at Tesla, let's get a quick look at the markets. They have come off session highs, but still near the highs that we saw just a few minutes ago at the start of the show. Remember, Japan, 15% tariff deal. Rumors swirling, speculation out of the Financial Times that the EU is working on a deal of 15% tariffs also. You see there the S&P 500 up nearly 0.5%, the Dow Industrials up 380 points.
15% deal with Japan.
NASDAQ barely, fractionally in the green right now, so it's lagging for the second day in a row. Big tech, maybe on the back of those Texas Instruments earnings. And then the Russell 2000 up over 1%, so small caps outperforming in today's session. So we'll continue to watch these updates on trade news. All right, let's get into a discussion about our next stock. That's Tesla. Shares, as I mentioned, in bear market territory from those highs in December. Starting to consolidate around this $330 share level. But let's bring in George Tilla, senior markets correspondent here. Help us break this one down. George, you know, everybody keeps on talking about it. It's not an EV company. It's priced on the fact that they got humanoid robots, the robo-taxi, autonomous driving, that's going to be the driver. But you know what? You look at some of the data over the last several months, and it's not good. If you look at, Q2 deliveries and things of that nature, it's still pretty murky here for Tesla going into this report.
It is. This is a tough one. I mean, yeah. First off, you're right. If you look at the price action since late last December, stock is down about 30%. Even year to date, it's down. It's down about 28% as well. So this is a stock that's struggling. There's various reasons. Obviously, there's political reasons, which I'm not going to get into. But there's always the aspects of the top line sales requirements for Tesla, which is its vehicles. There's also some changes in regulations and, of course, congressional pullback coming up at the end of September. The EV tax credit is going away, and that's $7,500 for a new car. In fact, there's also one applicable, which will expire at the end of September this year for used cars, around $4,000. So that's going away. So there's a lot of negative aspects there. Vehicle deliveries have been down. Total sales, if you look at last quarter, year over year, we're down over 9%. This quarter, they're expecting $22.13 billion in sales, down 13% compared to last year for the same quarter at $25.5 billion. At the same time, EPS is also expected to be down to 40 cents a share, down 22% compared to 52 cents for last year. If you look at also, there's a lot of negatives here to consider. If you look at also the earnings estimates for this year, it's been cut down from around $2.60. Now it's $1.80. Next year's EPS is also down from $3.38 to $2.75. Sales estimates for next year also were expected last quarter at $127 billion, down now to $115 billion. So if you look at earnings estimates are moving down. Revenue estimates are moving down. Top line sales for the quarter expected to be down 13%. EPS expected to be down 22%. But with all that said, the stock is actually, I suggest, holding up considerably because maybe we're seeing the aspects of so many negative elements to the business perhaps being priced in. Now, when it comes to earnings multiple, this is, again, the gray area because we have to consider now at 95 times this year's earnings, 186 times this year's earnings, and 125 times next year's earnings. Obviously, this is not an auto company, even though autos represent the majority of the sales for the business. Ideally speaking, Tesla is a software company. But at the same time, these neural net software that Elon Musk is developing across all their platforms, which includes robotics, energy storage. We're talking about XAI and the artificial intelligence, not to mention Tesla vehicles are really electric software vehicles. And again, this is the mainstay element behind Tesla, which people are aware of. But right now, there's a lot of barriers to the sales and earnings because regulations are again becoming more strict, especially when it comes down to NHTSA's regulation on the robotaxi, which for the most part, which launched in late June, has been relatively successful. There have been some snafus, but it's not a perfect system yet. But the stock is really trading like it's probably going to be perfected very soon.
George, doubting Elon Musk is a bad sport to play. And understanding, sure, he's got declining revenue, he's got compressed margins, a lot of those self-inflicted. He kind of lowered the price himself. He's kind of a leader in lowering the price of his cars. The free cash flow is freaking. The earnings per share estimate's 40 cents a share on about 22.1 billion in revenue. It appears to me that those numbers will not take the stock higher. But guidance on robotaxi, robotics, energy, charging, XAI, investments in all this, that could take the stock higher with aspirations for the future. It won't be the earnings per share and revenue and those numbers from the car company. Tell me where I'm wrong there, George. What should we be really watching for?
Well, I mean, you're right on all those fronts. This is why I said initially when I started the segment that this is a difficult one because all of the factors, including the financial factors, the reduced estimate factors, valuation factors, sales decline factors, it's trading like Stellantis. Stellantis is, of course, the Dodge Chrysler in the United States. But they're trading down because they've got a lot of problems. But that's not a software company. Tesla is. So I think the reaction post-market is key. You look at last quarter, which was around the third week of April, it posted really bad numbers. The stock reacted favorably. But you have to consider the context of the market. The market was recovering at that time as well. So now we've got a market that's at highs. And we'll have to see how Tesla reacts outside of what's happening in the market as an impetus pulling Tesla to the upside. So, the delivery numbers and guidance, including model updates. The Model Y has got a new update, an extended version. There's talks about a smaller, more economical vehicle for urban transport. And then I think at the end of the day, they're probably going to be cutting prices aggressively to offset the lost tax credits. They're achieving scalability. Their net income margins are about 300 basis points lower than they were in the last 5 years. All of these metrics are down, so this may be a situation where positive enlightenment in some capacity, integrating the technologies in some capacity, could push the stock higher. But hands up on this one because, again, you've got the political element. That's a challenge as well. But Elon Musk has got a lot
I'm still here.
The business has a lot of scalability and is still a popular brand across all of their technologies.
Yep, and he's sleeping in the factory again.
How many imposters were there?
That's what shareholders want to hear, that he's focused on
One
this
guy
kind
sent me a
stuff. Thanks to
list of
George
about
Tillis,
12.
markets correspondent here, breaking down Tesla for us. Now, Kevin,
I had one guy sent me a thing, said, Jim, they had a big old long list of my names. I have banned all these imposters. Okay, well, I can tell this chick wants, there it is right there. 23.39? You gotta be kidding me, is you? Damn, she wants to send me to the best ones out there. I don't know. This woman's nuts. What's the next one here? I sent you 3, she says. God. The next one was in Jamaica. $2,300? You gotta be kidding me, girl. Secrets. And the last one, $2,300. Cancun, breathless. Did she not read my note? I said budget friendly with good food. I ain't paying that kind of price. The girl's trying to rob me. $2,300. The Punta Cana is $2,155. U.S. bans mercury-like preservatives from flu shots on panel's advice. Bloomberg. Ooh. Gasoline. That's low. 173 million draw versus 339 million. That sounds like the Biden regime. Well, it's been 2.5 hours now. Well, 9:30, 10:30, 11:30, 2.5 hours, so I gotta go get my lunch made. Then I'll come back.
Higher across the board, although
This is taking me a while to cool off on that last trade. I don't even have trade the rest of the day. I've done 4 times my average. $4X. Tesla's dropping here. I thought it was just up a second ago. You got a Head and Shoulders around 330.83. Now, see this trend line right here? Why didn't I put the line on that bottom right there? Because connection, connected, connect, 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 connect. And the top of that channel right there. So we hit the first support. You see this? Connect, connect. So it could reverse here. I'm going to set an alert right here. Then I'm going to go make my lunch. I'm going to get googly. We're at the first support, Tesla. Did I put up the wrong, did I do the watch list on the wrong one? Wow, I think I did the watch, I did the 25th. Listen to this. I thought that was odd. Tesla's not on there, is it? Wednesday night? I think I really made a boo-boo on this. I know I talked about Google and Tesla. No, I did it right. How'd I get the 25th on here? You idiot. #21st. ST. Well, I gotta eat. Okay.
Not only in the U.S., but fairly limited even globally. And so I think importance of nuclear has never been more dominant, especially as you can see from the stock price demonstrates exactly that. But also with a new type of strategic collaboration, Liberty Energy, which was announced earlier today for this integrated power deployment strategy for, of course, all things data centers. So this has been, I mean, one that garnered all of our focus about maybe a year ago, really was dominating the headlines. We saw also Vistra, Vistra was another one that was really a late player into the AI cycle that was so positive towards the end of 24. But now has chopped around both of these names. Oklo has also seen some volatility, but it's still, frankly, a really impressive chart. And I think further collaboration gives this name and the company really more credibility.
Yeah, no, it's such an important theme, as you say, because it really is part of that whole AI trend when you think about the data centers. And, you know, to your point about how people feel about nuclear energy, one analyst put it to me about a year ago when, you know, this whole kind of narrative was really gaining traction, that it's amazing what Silicon Valley can do as far as shifting some of those perceptions, because what we've seen is obviously these big tech companies partnering up with, you know, these energy companies in this space because of the reliable baseload power. And so, you know, with a company like Liberty's, obviously they're going to combine the natural gas capabilities with the sort of longer term nuclear reactors to really obviously achieve that reliable baseload energy for all those data centers. I mean, something's got to power all of it, but it also, you know, it helps out on the sort of cleaner energy front as well.
Yeah, and I will say that in this name, the one maybe concern of it is, and what differentiates it from, say, like, again, Vistra, which I just compare them both because they both rode this, like, nuclear wave of upside, but Oklo still, for that reason, is not paid, it doesn't have dividends. We also don't see any consistent profitability. So from a financial profile, it does carry some of that risk because, again, potentially higher growth, yes, but this one, I mean, like today, it moves, and it moves pretty swiftly in either direction.
Yeah, absolutely. I mean, to your point, up 7.5% or so, $4 and change. I mean, you know, it's points, but you know, obviously we've heard from a number of these energy companies, but we did hear actually from the likes of GE Vernova, just to sort of, you know, pad out the sort of broader energy conversation, which, you know, speaks to what we're seeing here with a partnership like this, that we're at the beginning of an investment super cycle into more reliable baseload power. So, you know, perhaps that's going to offer a bit of a tailwind to a company like that.
Okay, and next name is definitely in this quantum world. That is D-Wave Quantum, which is up now a whopping 9%. So yeah, some big moves we're looking at today. I guess that is what ties them all together. But this name's up now 106.5% on the year. I mean, even more amazing than that is we're up almost 1,680% over the last 12 months. We'll also still remaining off those highs here of $20.56 by about 6.7%.
Yeah, so obviously we've seen some price target boosts off the back of what has been some really positive developments around this space. I mean, you and I have spoken about this more recently, the likes of Rigetti Computing, for instance. We've seen these sort of technological breakthroughs that have provided some more optimism around this space. Obviously, we know that, you know, with a lot of these quantum computing stocks, investors have been watching these very closely. This has been some sort of, you know, very hot topic, you know, in the technology space. You know, even though we've had the likes of Jensen Huang, who earlier this year had sort of suggested that maybe they're a bit ahead of the time, although he seems to have walked back from those comments. But, you know, really the hunt is down to profitability now. So the big question for a lot of these companies, while we see these sort of technological breakthroughs that they've been announcing and all the hype around it, is very much around some of the commercialization of you know, what they're looking to achieve here. You know, who is able to, you know, go commercial, or who's effectively still stuck in the lab and working out things.
I know, the Jensen Huang commentary was so interesting to me because everyone was like, how can he do this? How can he? And it's like, it's what happens with everything. I mean, I think that the same would be said for like any influential business leader. I mean, Elon Musk, for example, says one thing and the stock sells off. I mean, it's just the nature of the business. Unfortunately for the quantum stocks, they were somewhat at the disappointment of his commentary. But then, I mean, they've rallied back substantially. And he's just one person. I thought it was so funny. The internet was so mad at his comments, which I thought he had a good point. We talk about these applications as if they're already here. And in real time, yes, some of them are, but not to the full extent that I think that they were trading at, which because you can make the argument they're still trading as if their real-time applications are just in our day-to-day lives, which they're not yet. So I mean, I think quantum is a world that is fascinating. It's wild, the depth of the intelligence there, but it definitely, for that reason, D-Wave has been so fascinating. Now, our last name today is QuantumScape, which has been personally the bane of my existence because it is not a quantum stock. I have said that about, I've learned very much the hard way, Sam, this is not a quantum stock. This operates in the advanced battery world. So I'm just saying it now for all of my future and past mistakes. This is a battery company.
Yes, I believe we made that clarification last week. I was to believe that this potentially was a quantum computing stock as well, but company. But yes, it is behind the technology for EV battery making. And we were talking about this one, as I said, last week as well, because it was rallying quite considerably. It's coming off now, obviously, as we look towards the earnings. These are the estimates here on your screen there. Obviously, this is part of the energy transition story. Solid-state batteries are very much being seen as some of the answers to the range anxieties that we've seen around the EV space. This is obviously part of the energy storage story as well. As I mentioned, it hit a 52-week high last week. They do like the positive developments, a lot of investors around this company as well, particularly when you look at its manufacturing breakthroughs with production capabilities, particularly around Cobra technology. That certainly has been the thing that has got many investors excited more recently. As I said, the rally in the stock, I've got to reinforce, last week, and we've been talking about it today as well, Jenny, seems to be a bit of part of the meme sort of FOMO retail trade. It did sort of seem to have been caught up in that. I was just talking to some traders last week as to why it was seeing such moves on a day of basically no headlines for this, and it seems that it had got caught up in a bit of a meme named storm.
I mean, absolutely, and especially because we have earnings day after the close. I would be very curious to see like what their prospects look like for the rest of this year, because I mean, you have to have fundamentals to support what has been a parabolic move to the upside. So yeah, I think that unfortunately, I do have some skepticism over the massive short interest. I mean, inconsistent fundamentals,
always
and also we're up 120%, while also still remaining off of the peak we saw just a few days, just last week actually, by 17%. So, and also today taking it on the chin, we're down over 9%. So had to throw in a name moving to the downside to keep it balanced. But earnings today, I think, are going to be a major test for the stock.
Yes, absolutely. Investors very much looking ahead to that report card, and they do want to get more updates certainly on the company's progress, where it's at as far as the solid state battery technology, which is really behind the EVs, and some say that they want more details before becoming more constructive, certainly on this stock. So hopefully they'll get their answers this afternoon, because while there is a lot of merit in sort of these important milestones that it's been making with sort of the Cobra technology, etc., there are some risks and concerns, as far as sales are concerned. It does expect its first customer launch next year, but investors certainly want to hear about that, where they're up to as far as an update on that space.
I need an update too, because I've been really grouping it in with the quantum stocks for probably weeks now, that I also need to clearly tune into the earnings call myself, which I definitely will be doing. But we'll leave it there. So appreciate your time and all of your thoughts, Sam Abadas, for helping us out on the top of our show today. Now, coming up next, we will look ahead to earnings that are reporting today after the close. Alphabet modestly lower today, about 0.8%, and IBM, which is actually higher here, about 1.7% on the session.
Trading at Schwab is now powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
Trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Not bad. That was real bad. I probably missed it here.
The Platforms and Tools webcasts are designed to help you broaden your knowledge
Let's listen to this.
of features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach.
That's funny.
Forgot such a thing, but Alphabet today.
Jenny looks like a librarian today.
The bottom half of the pack of the Mac 7, so it has underperformed, but it also has been still in a pretty nice recovery from earlier lows this year.
Yeah, still moving higher, still holding on above some key areas. If we were to look at our recent activity,
I'd have to put some meat on that woman.
Out here, 140.53 was our low point. From there, we have risen about 35%, so a pretty healthy swing back to the upside here. But we're at an interesting point right now. We did cross above this old level here, our green line representing these old highs and subsequent lows. You can also see it was once again near where we formed lows, then where we had our breakdown. It came back into focus as a resistance level, then once again support after the breakout to the upside. So you can see this is one of those price levels that we look out for where price repeatedly stops and starts around that same area here. So around 181 or so, that's the downside support. It also happens to match up with our yellow 21-day exponential moving average to give some extra weight to that confluence.
Double bottom on Tesla.
To the upside though, now if we were to look at a similar area of interest here, this is the high point that we established after our gap downward here, right around the 193 level. That's about where price got stuck the past couple of days. That's about the top of our channel you can draw. We could just make a conventional trend line going across the lows, best fit, best as you can there. And then if you duplicate it, match it up along the highs, oftentimes it matches up fairly well, and you can use it to project potential resistance here. So that 193 level could be a potential breakout point though. Resistance doesn't necessarily mean it's going to get stuck and fail there. It could be the start of another move to the upside. In that case, look for the point where the gap began. The low point of that gap was just below 203.
Okay, so as we do approach this earnings event, which I would say even arguably that Alphabet might be more important than Tesla, although I can't say what's more important to the overall market because both of these have a ton of capabilities of volatility, we'll say. But longer term here, I mean, I know the concern is valuation and what they're going to say as far as for their CapEx as well as just for their AI capabilities. But tactically speaking, I mean, does this chart give you any concern because of the way it's lagged maybe the rest of its big cap peers, or is this perhaps even maybe a bit healthier because we are not, truly at all-time highs?
You know, I see what you're saying too, but it's like, geez, Jenny, we got 35%.
I know.
What do you want here? But I see your point, though, and that was kind of a concern with the big banks, too far, too fast, or maybe underperforming certain areas, or what have you. Kind of a lot of questions about this type of rally. Is it strong enough? So where we stopped, though, it seems a pretty logical point for traders to take a pause as we head into earnings. Momentum commonly slows down. I say this often here. Earnings is an event risk situation where things are about to fall off. It's not really that crazy that maybe things would take a bit of a breather here after an extended rally here. But we can also see that the area about where we got stuck, representing this kind of gap area, this is also a relatively heavy volume area. And it doesn't stand out too terribly much from the rest of our volume profile here, but it is a bit of a peak that's more isolated here. The volume really starts to pick up again down here near 175. That's also where we have our linear regression line and our 63-day exponential moving average, both coinciding right around the 175 level. So some areas to watch: 174, 175, 180, 181, general area there, 193, and then finally 203.
And I will say that we're 8% off of all-time highs, so it's not like we're, 20% like we were. And we were firmly in correction territory earlier this year. So yeah, beggars cannot be choosers. I do feel like all of the criticism I've seen about Alphabet, I'm like, hey, well, I think better to be maybe pessimistic and have them surprise to the upside than the latter, which we've seen a lot so far this earnings quarter. So as we do look at this risk event type of situation happening after the close today, I will be tuning into this earnings call. I always think it's such a good read on the broader tech trends, really. But how do you think here about trading this name for example purposes, of course, when we do have a, of course, risky event?
I like to do different kinds of trades. It's good to mix up your trades, not have all bullish trades, not have all bearish trades. It's good to do a few different things. So this is a trade that maybe wouldn't be as conventional as what we talk about here. Very short term, selling a call vertical here, 200 to 202.50. So very short term, a couple days till expiration, taking advantage of those inflated premiums that we see on options here right before this earnings event here. So max profit, $60 credit that you receive. Max loss, $190. So roughly 3 to 1 in terms of reward versus risk. A lot of times these short option strategies, short calls, verticals, they can be kind of unattractive because of the mismatch between the risk and the potential reward. This one, I kind of matches up with that conventional guideline here. And if you see as well too, the risk that we would have here would be the worry that we'd hit that max loss area. Our shaded area, that's the expected move here. You can see it's completely in the max profit area here. So we would need a bigger than expected move to hit that break even of 260, which is right here. And that would be about a 5.7% move. We would need only a 3.5 move to hit the edge of that expected move wall there. So pretty big gap between where you'd start to lose money on this one. A high probability trade based on this metric.
Okay, and now to look at IBM, which we also have their report coming. And IBM has actually been such a surprise winner of all of the AI enthusiasm and the way they've reshaped a lot of their legacy business, which has been quite amazing. I will say that the story for IBM is they still have a profitable segment of their business that is not AI. They still have that legacy aspect that, like Broadcom, for example, I know that was a concern of analysts, but I think if anything, it gives you some insulation if you have doubts, of course, about AI as some do. But IBM has been, technically speaking, who would have thought that we'd see such a consistent performance from this name that I would have said was like a name of yesteryear, but they've been able to reshape and rebrand so well, where they're at the forefront of AI right now.
Yeah, they've really kind of shaken off the dust of that old perception here. I feel like before they were kind of a company more like Intel, kind of maybe not has been as maybe too strong of a word, but a company that had seen its glory days past and is kind of like trying to figure out a new direction here. IBM seems to have done that. Intel seems to have been figuring that one out still here. But as we look at our chart here, we can see 265 in this case was a notable price level, a high point, high point, high point. We crossed above that area a little bit, but quickly retreated. Then we had our breakout point there. So that you can see, as kind of we talked about with our last chart here, there was a gap up here after the earnings event. These are notable areas that can form highs and lows here. In this case, we did fill that gap pretty convincingly there. It was the April tariff news announcement, though, kind of a price shock event here. You can see things quickly stabilized right around that general level after the news kind of was digested here. We then continued our trajectory up. For the most part, we can see that price has been hanging out around our yellow 21-day exponential moving average. That moving average is right now near the 284 mark, just above that area. That would be a notable point to hold as we approach earnings once again here, but a rather narrow range to consider in the shorter term. Highs here near 295 at our red line, a persistent ceiling that price couldn't really break. Saw some bearish divergence there, momentum broke down. We had a small pullback here, but really nothing terrible at all. We merely kind of went back here to 280 to these old highs and have been hanging on for now. A bit range bound here, but we have a potential catalyst here now.
True, and as we say, I mean, like, this is not abnormal to see things start to somewhat moderate ahead of earnings. So not abnormal, but at least a bit off of these all-time highs. So again, as we zoom out, watch some bigger picture trends. What else are you seeing for IBM?
A few encouraging things for a bullish perspective here would be, perhaps they might say that one is that we've held out near this volume node area. This was a potential support area. Two is that we also held out above our recent relative lows for the most part. Three would be linear regression line of best fit, lines up right around that 280 level. Linear regression line is an idea of fair value that some traders use. So that's something else that would be more of a supportive number for traders to consider there. So a lot of confluence there. Notice as well, volume really dries up once you start getting below that area. Doesn't pick up again here until that 260, 265 area that we discussed previously. The upside, though, volume picks up once again near 290, so that could be a little bit of a hurdle on the way to those old highs near 296. Plus one standard deviation channel comes in just below 308, so some other levels to consider.
Okay, and last but not least, as we do think about IBM, for example, trade purposes, walk us through the thinking, because again, we are a bit in more of a point of strength than, say, Alphabet, but earnings do provide that risk.
Yeah, so this would be a more bullish trade example here going out to those August monthlies. This would be more of an unbalanced call butterfly type of trade. What you would do specifically would be you would buy one contract of the August 15th 300 calls, you would sell two of the 310s, you would buy one of the 315. All that would come together, at the time I was looking, around a $2 debit. You could try to fiddle with the price a little bit. That was about where things ended up. So the way this trade would work, break even at 302, max loss is debit paid of 200. If you were to get to that 310 strike at expiration, that would be a profit of $800 because that's where those short calls line up. If we do start to move further here, you can see that expected move. That shaded area is where our profits start to trail off a little bit. If we were to move beyond that 315 level, we would just keep a flat profit there of 300. So that would be a 50% profit on our original debit paid there. And nothing is risk-free, though. This would be more of a less high probability trade than our last one, but greater potential for profit here. Both risk defined, though. Both are situations where you wouldn't take
IBM earnings coming out
here. You would need about a 5.2% move to hit that break even there.
Yeah, and obviously both of these trades highly customizable. So depending on your conviction, you would assess.
Let's see what Jimmy says about IBM.
Risk definement, because that is something I think so important as we approach earnings, because a lot of times the options market will imply a move.
Up right here to this head and shoulder line. Right
coming
here.
In very well.
Your left shoulder, your head, and your right shoulder. And we're going to have the 21 and the 9 support if things get nasty. 590, 168. Well, I don't like it. I still can't be biased because these tariffs have not affected. Airlines are really in play. So I'm not going to be too bullish on this one. Some IBM, but I think this 100 and something. This thing needs to pull back. IBM, Warren Buffett couldn't even trade this thing right. Now I bet he regrets getting out of it. If he's still in it, I think he's all out. But it just didn't do nothing for him. Now look at it. He's trading this around 100 and something. So your support level to hold is going to be the 9. And then we got this right off the 21 channel right here of support between 262 and 267. We would stay in bullish at 277.59 for a double top up here, triple top at 292.93. We stay above the 9, we're bullish in IBM, but I think this thing can drop to around 267, just 262. Then we got O'Reilly. O'Reilly's just a monster. Just a monster. It's always been a monster. So support 84.71. Stay bullish 88.88. And resistance to break 94.53. Honeywell. Another nice breakout. Everything broke out. You heard the fat cats whining and crying. The market's going to go into a recession and tariff this and tariff that. They've been full of shit. The guy said last week that he's getting out of tech and he's buying small caps. And then we had the killer run last week. All the numbers that came out, the CPI, the PPI, they're all good. No sign of recession. Then they just get in there and they try to nitpick, try to find something, one thing, which in Biden was in office, they would say this market's bullisher in hell. You're dealing with a bunch of progressives at Wall Street. I've been around long enough to listen to them talk. 21 years every day watching these guys. I think they will. I think they're going to be excellent. Then we've got DPZ, Domino's Pizza.
I was wrong about Lockheed Martin.
Everybody likes pizza but me. Again, you know, it's something that I don't eat much of. I'm staying away from carbs. We got a support gap right in here. That's the first thing I saw right there, and that resistance got a yin-yang. So we're going to go ahead and put a price line right there to stay bullish, 443.32. We're even off to 63. Raise it up just a little bit. Right there on that candle right there. If we stay above 462.29, we're bullish as hell. Then we got a triple top up here. We've got another resistance to break right here. $476.40. If we can break 476.40, we'll move higher.
$476.40, we went higher. We dipped right to my low support. Monday. They're called out in this video. Warren Buffett doubles his stake in Pizza Maker. Domino's When did he do that? Yesterday. Or he probably done it before that. They raised the price target. Gordon lowers the price target, maintains a buy to 520. Benchmark 540, raise it from 535. Loop Capital raises it to 574. Bernstein raises it to 490. Outperform market rating, perform rating, maintains a buy rate. Everybody's a buy on this. Earnings came out and dropped. Tesla back to my low support here, 329.66 for right now. If I ever see this thing at 303, I'm going to buy a ton of it.
Fabrice, when you your bathroom can feel like a revolving door.
Well, that's hot.
investing. We're now discussing all things Hasbro, of course, the maker of Play-Doh as well as Nerf blasters, which is really why it should catch your attention. But today, moving modestly to the downside, despite the fact that there was a lot to actually like about its recent report. So joining us now is Diane King Hall, of course, host here for the network. Diane, I thought we were moving higher here. So now seeing, I mean, like the outlook is the concern, but we're modestly lower on the session.
We are.
And then look, so to be fair, some of it may have been profit taking because leading into today, Hasbro shares were up more than 35% year to date. So it has been a strong outperformer this year, especially compared to the S&P 500. But look, the company did beat expectations on both the top and bottom line for Q2. EPS on an adjusted basis came in at $1.30. It did post a net loss of $855.8 million. That was tied to a $1 billion goodwill impairment in the consumer products segment. We'll dive into consumer products. There was also tariff-related pressure there. Revenue hit $980.8 million, also better than expected. What was the MVP? That was gaming. It's all about Wizards of the Coast, digital gaming division. There's this Magic the Gathering and Monopoly Go. Those are driving momentum. Magic the Gathering has been gaining steam since for the past several years, honestly. In terms of Wizards of the Coast and digital gaming, that division generated $522.4 million. That's up 16% year over year, so strong growth there. The CEO put it this way, in talking in particular about Magic the Gathering, it's, quote, not just a one-off moment. The community is stronger than ever, and that's to the point of that gaming momentum that's been occurring in that segment. But it also goes to show just changing times because you had weakness in consumer products, and that wasn't just about tariff pressure. There's just been trends of consumers buying less toys. Kids don't play with toys as much, sadly, as they used to. So you saw consumer products revenue drop 16%. That was way down both by retailers delaying orders because of uncertainty around tariffs. And then again, that ongoing softness in toy sales. That's just a trend that has been continuing there. And keep in mind, about half of Hasbro's products are sourced from China. They are aiming to reduce that by 2027 to about 40%, Jenny.
So this is a really good point. I think also a good explanation of why we are seeing some pressure, as I do think there's lots to like, yes, but I think there was still like a degree of pause here from a pretty mixed report. So great insights as always. Dan King Hall, the host of Morning Movers, appreciate it. Now to shift gears entirely and look at the latest craze of meme stocks, which is fun because there's some new players right now and part of the conversation. Welcoming in now Dave Mazza, the CEO of Roundhill Investments. Dave, thanks so much for being with us. I mean, what a week. Kohl's chart, first of all, is ridiculous, but also Open Door. Now we have Krispy Kreme. I mean, walk us through your thoughts on some of the meme trends we've seen this week.
Well, it's interesting. In many ways, meme stocks have never gone away, but we're clearly seeing this week kind of a huge pushback with what we'll call meme 2.0, with a lot of behavior that reminds investors like myself of 2021. So started with Open Door. This is a company that flips houses, that's certainly been under pressure with what's going on in the housing market, trading below $1, potential delisting. And then all it took was a hedge fund manager to come out and label it a 100-bagger, and the stock rapidly is 100%, 200%, 300%. And now we're seeing that come off. To your point, Kohl's was another one, Krispy Kreme. But really, they're all emblematic of the fact that I think retail investors especially, when they identify, a stock that has high short interest, in some ways low float, then they can take advantage of it, particularly with sort of the Reddit forums and the potential for everyone to get back on board with a particular name. And it certainly helps that a lot of these companies, particularly your Kohl's and Krispy Kreme, are household names and they're sort of well loved. And I think in some ways people feel like, fundamentals aside, these stocks shouldn't be trading at such low prices.
Well, and right, I mean, I think that is the concern and the risk that someone that is so driven by fundamentals like myself.
Tariff deal, market's going to go nuts.
Say, hey, the common grouping here is they are somewhat all failing businesses. Not to say they're not, well-known brands, to your point.
Damn, girl, you got to eat. The 6340s are now at 1040. And the 3750s are at 370. They were at 35 cents, and I got in at 40, and I got in at $1.45. And what else? I sold them already, but I mean, geez. So here's another thing to look at. Yesterday's high, triple top. For into close.
Welcome back. The Dow and the S&P are hitting new session highs right now. Dow's up 462 points as this market continues powering higher. Different story for Berkshire, though, having its third straight negative month despite being up 1% today. That would be Berkshire's longest streak of monthly losses since 2022.
Well, they're horrible traders.
11% since May, when Buffett announced he will be stepping aside as CEO. And check out the divergence between Berkshire and the S&P during that time. The S&P up 11%.
See, I trade totally different than these idiots. I trade like he does, but I also get out when I'm at a resistance, and they don't.
Businesses like Geico and Berkshire Hathaway Re. Joining us now is Brian Meredith, Senior Insurance Analyst at UBS. Brian, welcome.
Thanks for having me, Kelly.
Does the underperformance catch you by surprise?
Not really, just because coming into the annual meeting, Berkshire stock was a little bit on the...
So imagine this girl here playing in a treehouse with me when we were 8.
I think it maybe gave an excuse for some people maybe to pare down positions. That said, the company itself still has all those huge competitive edges that it still had when Buffett was CEO.
It surprised me to hear Bill Smead, who's been a longtime admirer of Buffett's, a longtime investor in the stock at the top of the hour, and he said he's exited his position. He just doesn't, he thinks there was a Buffett premium in the stock that shouldn't be there anymore.
Well, he's wrong.
I don't think there was a Buffett premium in the stock, to be candid with Kelly. My analysis going back, looking at the valuations, there wasn't a Buffett premium. And the other thing that I think is incredibly important here for investors to understand is that the same, call it strategic advantages that Berkshire had exist today with or without Buffett. That is the fact that you got permanent capital, an ironclad balance sheet, $350 billion of cash in the balance sheet, all sorts of huge advantages, as well as these great businesses.
From the sort of insurance or fundamental standpoint then that you're combing over, because a lot of people will go, come on, of course there's a Buffett premium, but what would you say the business is throwing off in terms of numbers to justify the valuation or the level that it's currently trading at?
Yeah, so what I would say, if we look at our price target, right, which is still get a reasonable amount of upside here, we do this sum of the parts analysis of it. And if you look at kind of where their non-insurance businesses are running right now, you put kind of a market multiple on them, you're going to get, a good value for them, as well as if you look at the insurance businesses and you just look at what the generating, earnings out of those are, which handily Geico and a couple of the other businesses are seeing some improvement here. You actually could start to see some upward estimate revisions, kind of like we increased our estimates. So I think there's a lot of good earnings power still here for Berkshire Hathaway. The other thing that is really important to understand here is Berkshire's call it this great company in an uncertain environment, macro environment. It's very defensive, but also a number of businesses that will actually do quite well in improving economy. So in my view, it's a really good business to hold on to here.
I'm rooting for the insurance business to do worse because, as you know, premiums are a huge headache for all Americans right now. I mean, do you think, I don't know if they're using the term hard market in the industry or not, but do you think that we've seen an end to these price hikes? And if so, what would that mean for the shares?
If you keep Trump in office, yes.
Two pieces here. One, Geico, which is personal auto insurance. The personal auto insurance market is absolutely getting more competitive out there. In fact, I would argue, Kelly, go take a look at your auto insurance policy and get it repriced. You may get a better price here than you did, call it 6 months ago. But that said, Geico is now in a position after going through a massive systems overhaul and fixing its profitability in business that they're leaning into growth. So you're just now at the inflection point of growth for Geico right now, which I think is going to be, really compelling here. As far as the commercial insurance premiums, where Berkshire is a huge player there in reinsurance, pricing is let's kind of peaking out. We're getting a little bit of competition back in the marketplace, but still healthy level of pricing and very attractive margins in the business.
Well, it'd be fascinating if both Berkshire shares could do well and we get a break maybe on some of the auto premium or the commercial side. Big deal for inflation too, by the way, just kind of bring it full circle. Brian, a pleasure. Thanks for joining us to give us your thoughts today.
Thanks for having me.
Brian Meredith with UBS. And coming up, it's not just Meta poaching AI talent lately. Microsoft making some big plays, hiring around 24 staffers from another Mag 7 name. We've got all the details next in the talent.
May I ask everybody a personal question? YouTubers? Someone say yes. Does anybody French press their coffee? Does anybody French press their coffee? We got to know. We got to know. We got a franchise says yes. Sparks, does you Kirk? Richard says that's an awful personal question. YouTubers? Anybody out there French press your coffee? Ivan? Megaphone on Spy? Dr. Kindrat, do you French press your coffee? I would rather trade the Spy. The Spy is a creepy little stock. Sometimes it really likes to rock. No, it's not a megaphone. Kinda is. It'd be a deep one. It's a 1, 2, 3 right now. Dr. Kindrat does French press his coffee. That means he grinds his own beans. Right now I'm having Sasquatch coffee. Cool it down here so I can drink it. See that there rebound right there? Ivan? 1, 2, 3. You come down and hit it. Boom! You know what kind of candle pattern this is? You know what that is? It's an inside harmony with almost a tweezer bottom. I'm making coffee in Turkey. What the heck is that? Did you misspell something or something? Making COTURKA. Turkish coffee.
Hi there. I'm going to show you one of the most delicious ways to make coffee, Turkish coffee. Turkish coffee goes by several names, which vary from region to region. Everyone has their own style of making it, and each style produces different results. Remember, the most authentic and correct way to brew coffee is the way that you like it best. Here's what you'll need. A metal pot, also known as an ibrik, preferably made from copper, but other metals are fine. Some grounded coffee, and if you like, some sugar. Sugar is optional. It's important to use medium roasted and finely grounded coffee. This is absolutely essential. You can buy this from most supermarkets and delicatessens. The coffee needs to be ultra fine, like powder. Or you can just grind the coffee beans yourself. if you do grind them, make sure it's powdered like flour. Otherwise, the texture of the coffee won't be right.
There's mine.
I'm making coffee for 3 people, so I'm filling the pot with 3 of these cups of water. These are Turkish coffee cups, which are like espresso cups, but with vertical sides. The water I'm using is room temperature. I'm adding 3 teaspoons of sugar, 1 for each person. Let the sugar sink to the bottom without stirring. As it heats, the sugar will caramelize and disperse through the water, which will give it a very palatable taste. Add 1 heaped teaspoon of coffee for each person. You can vary this according to your preference. If you like your coffee strong, add a little extra.
God, 3 scoops? That's a little strong, man.
Place the pot on the stove with low heat. Don't stir just yet. Let it heat up for a minute or 2, and then stir slowly. After a few minutes, the coffee will come to the boil. Notice the ring of foam forming at the top. Remove the pot from the heat before it overflows. Spoon a little of the foam or crema into each cup before returning the pot to the stove. For most aficionados of Turkish coffee, this is a benchmark of quality. The more foam, the better the coffee. When the coffee froths up a second time, remove the pot and pour the coffee with the remaining froth into the cups.
Then add cannabis butter.
Do this nice and slowly so that you preserve the texture of the crema, the foam already in the cups. Turkish coffee is best served with a glass of water to clear the palate before taking the first sip. This will allow you to really enjoy the rich flavour of the coffee. If you found this helpful, please feel free to leave a comment, like, subscribe or share this video.
I shared it with a bunch of people. Okay. Get back on track, Jim. Ain't that right, Angel? Say yes. Let's add another pop on the spy. Off the 21 EMA. C popped pretty good. Yeah, it did. It didn't touch my support. Richard's going to give me a reprimand. Domino's Pizza has pulled back. I have wondered. They have a buy rating on it now. I'm gonna look as the SPX might get a new high. Can you imagine how you were feeling when this stock was down here? And now look where it is. Like I said in my video, I said play the pullbacks that I am bullish and the fat cats are bearish. I was wanting to listen to CNBC, but had Kelly on there, so none of the why. I like Kelly, but the other ones I can't stand, especially Sarah. And I'm getting to where I don't like what's her name, Becky Quick. She was my favorite. This week they came out with that Buffett news that he was going to buy the railroad, and then it was false information. So this is what I did to CNBC this morning, yesterday morning. Would they take it down? Wow, I can't find it. Interesting. New high on SPX. And now the time is near. I'm waiting for the final virtue. And now, MSTR, where are you going? And I'm gonna look at the 90-day and find a new support, oh Lord. Well, give me this, I'll trade it my way. And now I'm gonna change the time frame, and that for which I'm certain. Well, I'm gonna wait for Mr. LLY. LLY had a bounce today. $30 from that. We missed it. Bounced yesterday too. What's this here? Medications and delivery, a $6.5 billion blow to U.S. grocery spending. What? GLP-1 medications are delivering a $6.5 billion blow to U.S. grocery spending, with weight loss drugs. God, I'd hate to be young these days. I mean, the pickings would be slim for me. Back then, pickings were everywhere. My day. This girl jumped in the pool last night, and I swear the water rose 3 inches. Damn, please don't do a belly flop. We won't have no water at all. I don't think she understood what I meant. I said, honey, don't dive, please. Let me get out of the pool first. And go down the block where I know I'll be safe. Then a whole family of them come out, and I'm going, oh my God. Did you like my joke? Uh-oh.
I'll make your bubs bounce. I'll make your bubs bounce. Let's go.
Bounce. Make 'em bounce now.
I'll make your bubs bounce. I'll make your bubs bounce. Let's go.
Bounce. Make 'em bounce now.
That's pretty funny. I have another one to save. Wonder what I'm going to call that one. Jimmy Bounce. Jimmy Bounce Baby.
Oh no, here we go. See,
I.O. from the Peanut Gallery.
I heard that.
Thank you.
Courtney and my wife went to rival high schools today. Ooh. So there's like this thing. We have like a fun.
Elk Pride never dies.
See, this is what I get. Courtney, nice hairnet.
Yeah.
Courtney, thank you. All right, great piece on a big part of America. All right, what is best for your portfolio's health? Some investors ditching healthcare stocks in exchange for big tech, but is that the right move? Buy low, sell high? We'll talk about it coming up.
No, I did not call the Blake out. I did say it was higher high. You know, Richard, studio, have you looked at them options lately? Don't ever doubt the wash. Oh, yes, I did earlier in the day. So may I have a grade, please? Very good. Jimmy said dip and break out. Studio gives me an A+. We're going to have a tune here before I get back into trading. So prepare ye in the name of the Lord. Amen.
Press one online from your phone.
Perfect. I got mine in my pocket. Oh wait, it's on aeroplane mode. Here we go.
Uptown got its hustlers, Bowery got its bumps. 42nd Street got a big gym, a walker here, a bull shooting son of a gun. Yeah, he's big and dumb as a man can come, but he's stronger than a country house. And when the bad folks all get together at night, you know they all call Big Jim Ball just because. And they say you don't tug on Superman's feet, you don't speed into the wind, you don't pull a mask off an old Lone Ranger,
And you don't mess around with Jim. Boom, 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 yeah,
But out of South Alabama from a country boy, said looking for a man named Jim. I am a bull shooting boy, my name is Willie McCoy, but down at home they call me Slim. Yeah, I'm looking for the king of 42nd Street, driving on drop top Cadillac. Last week he took all my money and it may sound funny, but I come to get my money back. And everybody say Jack, don't you don't tug on Superman's feet, you don't speed in the wind, you don't pull the mask off an old Lone Ranger.
And you don't mess around with Jim. Boom, 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 boom.
But a hush fell over the pool room, and they become rockin' in awful streets. And when the cutting was done, the only part that wasn't bloody was the soles of the big man's feet. And he was busted about 100 places, and he was shot in a couple more. And you better believe us on the double gun story when the weak Jim hit the floor.
Beat in the wind. And you don't mess around with Jim.
Find out where it's at, not hustling people strange to you. Even if you do got a two-piece custom-made fool to you. Hey, you don't tug on Superman's king, you don't speed into the wind, you don't pull the mask off an old Lone Ranger, and you don't mess around with Slim.
And you don't mess around with Jim.
maturing, moderating, but still, making up a quarter of that number. So I think there is a broader opportunity. And I think there is a point right now where we can both be bullish and mind the downside.
Why are you uncertain, baby?
As usual, great point earlier in the show when we had a guest on us talking about small caps, and you sort of alluded to the fact that people get burned by every time we hear small caps are back.
Yes.
We get burned.
It's like the
every freaking time they do it. I've been here for 21 years. I can tell you at least 20 times they've done that, where they try to call the rotation in the market. And if you'd have listened to them and sold all your big caps and all your runners, you'd be losing big time. They did it when Europe. They done it with Japan. They done it with China. I'm putting my money in China. Tanked. I put my money in Europe. They had a deep recession. I'm putting my money in Japan. Everybody lost their ass. Every time, and listen, do you see what she just said? It's okay to be bullish, but also be, you're going to be one or the other. Time to get defensive. This station is so freaking annoying. If you'd have listened to them and not got in the market when I called the reversal off the 200, you'd still be sticking there with your thumb up your butt. And why did I listen to them? I wouldn't want any of these people holding my money. Vegas and I we're like permanent bulls. Randy is too. Randy got a little scared, didn't you, Randy? Here I go, Swash on a rant. It don't take very long for me to get on a rant with CNBC. Especially somebody that doesn't know what the hell they're talking about. This guy's smart. He's about the only decent one on the show. I used to love this guy. I still do. I mean, I can't listen to him anymore. My mind just gets altered, and I go, God. And same thing with the tariffs. Look here. Headline. This hard-hit emerging market could rebound if Trump's tariffs are found to be illegal. We've already rebounded, you idiots. Who wrote this? Kenneth Raposa. Let me see if he looks like a liberal. He's a foreign affairs reporter. He writes of the global business trends. Yeah, he looks like a big liberal. Looks like he's had too much dick in his mouth. EU seeks 15% baseline tariffs for USA trade deal. Global markets rise. He's seen enough bull markets to be worried now. Who's this? Lance Roberts says Trump's trade policies could trigger a correction soon. Now, we've been hearing this for a freaking year. Just negative, 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 negative. He's still sitting on 50% cash. So we got billions and hundreds of billions of dollars coming into America. And that could trigger a correction soon. And governments stop forking out trillions of dollars like Biden did his first 2 years. They love that. I would talk to this guy and I said, would you rather have Biden's policies where we bankrupt the country? Okay, let's get back to trading. I'm done. We have a 1, 2, 3. Yep. Yep. I agree. Do 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 do. Uptown markets. Okay, we got 17 more minutes. So we got Tesla earnings tonight. Look at that rebound on Tesla. Jimmy called 329.66. We hit 335.71. Mm-hmm. Nice rebound for Jimmy. Earnings coming in. Does anybody want my autograph? It'll cost you $20. I'm going to put this out there. I think I've put studio through some hard times here lately, mentally, and I want to give you my apologies. Jub. Beers. My wife can't stand me anymore. Half my hair's out of my head. I'm gonna lick it open. You cannot see. So YouTubers, at approximately 12:21 p.m. here in Missouri, I called out Tesla. And at 1:44 p.m., Jimmy mentioned Tesla at 12:21 p.m. Boing, now 1:43 p.m. Boom. I've about made up my mind on my resorts. Some of these things can get up there pretty big. Do, 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 do.
This stock a buy. Greg Dukes, Vice President of Aquinas Wealth Advisors.
We're at the
and
200
John
right
Freeman,
now.
Co-founder, Senior Analyst at Ravenswood Partners. Thank you both for being with us. John, you said it looks attractive, Alphabet, at the current PE. Is that still the case? And if it pulls back on these earnings, I guess you really get in and buy. Is that right?
Well, actually, recently, so we've kind of changed our view on Alphabet and recently exited our position. I think it was kind of attractive at 17, but at 20x, and honestly, this is really more of a fundamental call. We just started building evidence of some really existential risk that OpenAI and ChatGPT and that generative AI in general opposed to the whole search business model. And I don't know what the probability of that of it taking out search is, but it's high enough and plausible enough and disastrous enough for the stock that we thought that the upside didn't really justify the downside risk.
Let's dig into that a tiny bit more, and that is if there are eyeballs being taken away from Google, Alphabet, is there a buy point? Is there a point where you say it is attractive now? And what would that be?
That would be 185.
I think that's, like I said, I think it might get attractive at 17 or 15, something like that in terms of the forward multiple. I think right now it trades at about 20 because
20's not bad. 20's not bad. But I'm not a fundamental trader like this guy is. I'm a chart pattern guy, and we've got what you call a quad top breakout to the 200 SMA on the 1 hour time frame at 185.29, and that's Google. So when it dips tonight, I think ads are going to be down, and we're going to get a little knife, and I swear 185.29 will get hit. We'll find out tonight. Google search is under a microscope as Alphabet reports earnings. Studio's gone. And the video's back up. No, we could bounce up a little bit, but Google's had a real good run, so I really think it's going to pull back. It's priced in. Google parent Alphabet reports second quarter results on Wednesday. 2 AI-related issues will be under the microscope. Expecting earnings of 218 versus 189. If that happens, we'll have a bounce. Let's see if I'm right. I think pullbacks do, but just a little one, and then a bounce back up. We got 3 minutes to power hour. Hike. Today will be 1, 2, 3 day. Onebus, tubus, freebie. Boom. Oneness, tubus, freebie. I'll tell you, this is how I draw it up. Okay, remove drawing. Take the body of that candle right there. And take it to the body of that candle right there. 1, 2 bits. Free. There's your resistance right there. 1, 2, 3. Now, you always retest once you break out. It's Tesla. I don't want to trade Tesla. I want to trade my baby. We got a 1-2 straighter here. Gonna mess around, you mess around with my dear. There's a triple top, there's a quad top. 1, 2 bits. Freebie. 4, 1. So somewhere in here has to hold. You got 1, 2 bits. 1, 2, 3. Boom! Called that one out. It was about at 800 and run up to 16. 15 something. Does anybody know what that is? It's yes, Horseshack. What is it? It is a rising wedge. And if you can count to 3, you can trade with me. And if you can count to 4, you might make a little bit more. 1, 2, 3. 1, 2, 3, 4. Boom. On the 30-minute time frame, we have 3 tweezer tops. 1 tweezer top with 3 30-minute candles. 3. So that reminds me of a song. I think news will be fun tonight.
One on the flip here, GE Vernova
Shop our
has more
vast
than
inventory of safety
14%
products at
clearly.
Ranger.com. Call, click, or just
Counting to the number 4. Oh, you're counting, counting.
1, 2, 3, 4 chickens in the shore.
I love counting
To number 4.
counting
to 4.
Let's count some more. 1, 2, 3, 4 chickens just back from the shore. 1, 2, 3, 4 penguins that were by the door. 1, 2, 3, 4 monsters walking across the floor.
Counting to 4. I love you.
Counting to 4.
You're perfect. If you can count to 4, you might make a little bit more. If that's true, will you show it to me again, Jim? I love that song. Well, here we go. Are you ready? 1, 2, 3, 4, you might make a little more. 1, 2, 3, 4, you might make a little more. 1, 2, 3, 4, you might make some more. We're at support. I want it right here. I'm going to create an alert. You psycho. This ain't Sesame Street. What do you think we are? A bunch of kindergartners? I didn't run him off. I'm just joking, Michelle. He probably had something to go do. He made big money. He made real big money today, so I am not mean. Don't ever say that to me again. I'll have to come over and spank you. Wow. 1, 2, 3, 4. Come back 4 more. No pun intended. Dadgummit, I wasn't paying attention. That's my bad. No, that's perfect. Well. Did my alerts trigger? Do I have an alert set? I don't think so. I did nothing. I made him a lot of money. Well, shoot. That was a good trade right there I missed. Jacking, watching Sesame Street. I charted it up. I said we're going to pull back in that channel. Look what happened. We landed right in that channel. Perfect. If you can predict the next move, man, like that, that's happened a couple times today. These are up. Yeah. That's beside the point. Let's go and smoke a joint. Do you link the 6360 calls at 55 cents? Now what? 6360s. Nope, not yet. Wait until 2:30. See if we drop below here. I'd wait. I'd look at the 63.55s and see if they drop to a buck. You see that? Are you in here? You're not on voice? Oh, I meant not 63.65, but I meant the 50s. 50. Let me see here. I got the wrong one on there. No, 55. What did I say? I meant 55. Prepare ye in the name of the Lord. Rod, a straight stick, also called a staff, used for punishment. God used a rod in a miraculous way to call Moses into service and deliver the Israelites from the Egyptians. Now remember, these fat cats are very bearish, the billionaire liberals. They were getting close. I want to see if I can get a buck. So I'm going to roll. Nah, gummit. Yeah, JM all rounder. There is a delay on YouTube. I'm glad you're in the room, but some people can't. They have to use YouTube. Office restrictions. We got to 135 and we're at 175 now, so I missed that entry. We're wanting a buck.
Can trust us as a provider. And so I think the combination of the investment we've made in the network, the desire for consumers to get all of their connectivity from one provider, and that promise that we can make to them has really just led to this sustained momentum and high quality customer growth, even in a marketplace that you've noticed is definitely more competitive.
It certainly is, and you know, all data indicates, and even just my own personal belief, that we want more efficiency.
Oh God, she's back on here.
Transparency. So you know, if you can offer, it certainly appears that people are pleased with it. I want to make a big pivot here, though. Talk about the second half of the year. You know, it could be a potentially difficult second half of.
Oh God, shut up. I can't stand her. I really can't. She's worse than Sarah. Sarah Lutt. I really can't stand her. Everything out of her mouth is negative. And we'll come up to these triple tops up here. Support if everything's getting nasty. Always my lifesaver. I mean, I wanted to short it, but we pulled back. But, you know, fat cats really love Netflix. Instead of tariffs and deep, let's go ahead and put that there at a yin yang at 334.93. So if we can break that off the 200 right here, right around 21.83, and a strong support to hold, I think it's come out with earnings and drop down, buy down here off the 200 SM, come out with earnings. She run up $9. Calling out last year, and we had a nice big bounce on it. She run up $9. You know, this thing could easily come out with earnings and drop down here to a double bottom off the 200 EMA and SMA and be a very strong buy. So let's go ahead and put a price line right there, just right above that 200 EMA, and support to hold. I think it's going to be right in here to stay bullish, right around 26. Let me see if I get this in here. $26.35, but it kind of had a pullback already. So 25.42 I think would be a very strong buy for this stock right now, and then 26.35 to keep it bullish. And then if it wants to run up, it's got to break the 9 and the 63. So somewhere right around 27.38 to break resistance. It'll be one to watch. I think it's kind of overbought. So if it comes back down here, hits the 200 on the daily, I'll run it back up. Verizon, I know they're making a shitload. $27.38, what did I say? A very strong buy for this stock right now, then 26.35 to keep it bullish. And then if it wants to run up, it's got to break the 9. 25.42. 26, right 27.38, 35, and 27.38. It'll be one to watch. I think it's kind of overbought. So we hit the first support at 26.38 today. And on the 5 day. So yeah, I mean, that was perfect. I wish I'd have saw that. With a 25.42 low. And we hit 25.85. So I would have probably jumped on this morning. No doubt. If I was watching it, I'd have bought it at 26. Oh well, can't trade them all, but my videos are fairly accurate. I've only had one off so far. And then I have Verizon. VZ, this is one I don't trade well. What time is it? 2:32. Verizon had a bump, so I wouldn't know how to trade this one. We did hit my resistance at 43.49.
So if it comes back down here, hits the 200 on the daily, I'll run it back up. Verizon, I know they're making a shitload off me. I've never been good at trading this company. I've tried. I think my win record on this one's like 30%. So I really don't like trading it much. If it comes down to 39.42 off the inverse head and shoulders, I might take this trade and swing it to the upside. Again, that's 39.42. Resistance to break at 41.24. Coca-Cola is another good one.
Yeah, I was wrong. I got the resistance right. They ought to make a Hunter Biden spokesperson for Coca-Cola. Definitely at my low support. Yeah, I can't listen to this chick. Oh, this guy's kind of funny. Siegel.
That if things go south, I think it's worse for Fed independence if he doesn't resign.
All right, we'll leave it there.
That's just my opinion.
We'll leave it there.
And I know there's now others that have joined. I mean, Mohammed Al-Arian said the same thing. And he is also a believer in Fed independence. I'm a believer in Fed independence, but this is a particularly unique time where, you know, the Fed has been under a lot of criticism. They haven't changed their models and thinking for 50. I mean, listen to Kevin Warsh, who's an
listen to this guy. He's right.
Wednesday. You know, I thought from him on Squawk Box, I didn't agree 100% with everything he said, but a lot of things I think do need to change.
See, I like this guy. I mean, he wanted to cut him off because some of these people on here think Fed's done a great job, and they act like they've been trading the market in real time 50 years ago, and they screwed that up during the Carter years. Interest rates were at 19%. To buy a house, you had to pay 19%. I mean, the Fed is behind the curve, and these idiots don't see it that way.
Closing bell's coming right back.
I think he's does a horrible job. didn't take me long to get, I like that guy. Siegel. Okay, here we're at support. Knife catch to the 200. Let me see where my option is here. We're at a buck. If you ever saw a buck, I'm gonna get into this trade. I'm gonna have it made in the shade. Can't you see me rock? I'm in this stock. I'm gonna rock at 95. Take a ride. Can you count to 4? 1, 2, 3, 4. I'm at 120. It's time to sell. I waited for a buck. Don't you think I suck? $125, baby. Jim, you waited 3 hours to take that trade. What'd you think about that? C? What should I call you, C? I got 2 C's in here. What do you want me to call you? The name is Crypto Baby. I'll call him Cry. Oh, Cry. I'll call him Cry Baby. Just joking. Joking. No, I can't see the name. I just see C. Okay. I'm funny, ain't I? On a scale of 1 to 10, am I the funniest person you ever met? Michelle. I got a 10.5. That's a good score. Okay, he's watching again. We're at 95.85. I don't know, I just don't feel like I want to get too carried away. unless we get a big knife down here. And it's getting late in the day. The 200 EMA, SMA, and a trend line all together. I think I got my phone knocked out. Oh. Man, look at that. Dadgum. Mm. 85 to 125, 135, 150. Well, I nailed the support, you have to say that. I got one scalp out of it, but now, I mean, I could have got... Can't wait till the day's over with. Been one high up and down day. Man, look at that. She's depreciating. $11 more minutes left.
after the bell today, and then more of the mega cap techs Wednesday and Thursday. We get 4 of them. That's going to be a really key test to
Who
see
are
if
they?
this sell on the news actually does exist. But after we get past August 1st, after we get some of these trade deals, let's see what happens with the EU. We could get to a point.
Who are the
in
big ones
early
on Thursday?
Time frame or so that we've gotten most of the earnings out of the way. We priced in a lot of the good from the trade deals. The economy looks good, but
Hello, retail traders.
we
This
don't
is the
really have
sneaky
another
snake.
catalyst to push us higher in the near term. And then that's when we potentially
Intel.
could get, some kind of a mean reversion digestion of some of these, spectacular gains we've had.
All right,
American
so lots to unpack
Airlines.
here. First, let's
I know,
start
right? I'm
with
sorry.
trade deals. You mentioned trade deals. We did get one today with Japan. We're hearing rumors of a potential trade deal with the EU. What's the market reaction here? What you expected it to be?
Well, I don't expect to hear your bearish mouth talking all the
I
time.
do think that because the Japan tariff rate was 15%, that was perceived as better than expected.
Yes.
If it would have been like 20, 25, we may have been in a different camp there, because I felt like if you go back to last week, it seemed like a lot of these tariff rates, based on all the commentary from the administration, was we might be preparing for a somewhere between 19 to 40%
No, we
tariff
weren't.
rate on these countries.
I never thought that.
Some of these deals have come in, and I've got to give
You guys are idiots.
put together some really good deals for the U.S., where Japan is investing $550 billion, 15%. I think that's a good rate for the U.S., and where the market feels like it's not too hot, that we don't have to worry about that rate too much, at least not yet. It is higher than 10. Let's see what happens with the
It's higher than 10.
But having
better than 3.
established some of these deals with the likes of Vietnam and Japan, perhaps EU has a better sense of where they can find some middle ground. And if it comes in 20,
And saying going to
25 on the
195.
EU, or if the EU still remains reluctant,
Probably higher than
can
that.
create some volatility in the market, because we still don't know what 15 to 20%, let's just say that's what it's going to be for most of these major countries, 15 to 20%. We still don't know if that actually has any impact on inflation. So I'd say net it's a positive based on expectations, but let's see what happens with the EU.
Yeah, certainly, and we seem to be in this somewhat sustained rally, minus a few pullbacks. We seem to be just generally moving up. What do you think some of the bullish and bearish forces are at play, in addition to tariffs?
There ain't none.
Talk.
Yeah, so, okay, look, on the bullish side, it's been, hey, the economy looks great. The inflation hasn't shown up. The Fed isn't giving us rate cuts right now, but that hasn't really mattered. They're kind of on the back burner. You're seeing a lot of these CapEx binges, so to speak, within power, AI, et cetera, and the like, and that, you would think, is going to be that kind of investment. Industrial's new all-time high today. That kind of investment is going to be good for the economy ultimately. So that bullish narrative is that basically we have this resilient economy backed by these secular growth trends with a benign inflationary backdrop and momentum and technicals working in our favor. That's the bullish case, and that's why you've seen like this persistent march to new highs. And then on the flip side, if you're bearish, you would say, well, yes, but we're coming into bearish seasonality in August and September. We have full valuations. We don't know what the impact is going to be from these higher tariff rates. If Chairman Powell were to exit the Fed early, somehow, some way, either voluntarily, or if some news around that were to surface and long-term yields reacted negatively, meaning the 30-year started to move back up towards cycle highs, you better watch out for that. That could be enough to really get or shake the bullish confidence that we have right now. And so I think it's just those two paradigms that we have there. You could say, yeah, we've moved too fast. We priced it in. Therefore, we're likely to get sell on the news, or at least some mean reversion. We have bearish seasonality. And then on the other hand, you're saying, yes, but we continue to see evidence that the economy is really strong. Therefore, stay with the trend. The trend is your friend. And so it's just this, there's always a bull-bear battle, but here it feels a little bit more tense near all-time highs.
Nate, we really appreciate it. Thank you so much for being with us. That's Nathan Peterson from Schwab Center for Financial Research. And coming up,
Wow. 270. Okay, well, I missed out on that one. Let's see what earnings are going to be like here. We've got Tesla, Alphabet, IBM, Chipotle, Alaska Airlines, ALK, O'Reilly's, and United Rental. So let's go to CNBC. I don't want to listen to these idiots.
I'm John Ford alongside Morgan Brennan. Ahead, a long list of earnings coming your way, including the first two of the Mag 7
Man, she's a
names,
fox.
Alphabet and Tesla. We're also going to hear from Chipotle, IBM, ServiceNow, and T-Mobile.
Well, speaking of T-Mobile, we'll have an exclusive interview with the CEO, Mike Siebert. That's ahead of the company's conference call.
Plus, the CEO of Chipotle following its results as the stock continues to underperform. But before we get to all those earnings, let's begin with the markets as the S&P hits another all-time high. Progress on the trade deals and better than expected earnings so far this quarter, continuing to fuel optimism. Joining us now is...
Did he say better than expected?
CIO and head
Look
of
at Google.
And fixed income. Sarah, welcome. So, I mean, all-time highs, keep pushing here. The meme stock type feel had...
That guy was bearish on Google, and look at it fly.
Investors are definitely experiencing FOMO, and the market's supported by three
I'm not-
drivers. That's retail buying,
You are.
earnings, and Liberation Day news. So first,
They say they're experiencing FOMO. Jimmy hasn't. Jimmy called the bottom. And now you guys are chasing it. Because you're sloppy, don't bring it out on all of
tech
us.
is going to lead the way in continuing to beat that. Then Liberation Day 2.0, due August 1st, but what's trickling in has not been a disappointment for the markets. About 15% tariffs is within expectations, and that's why the market has
right.
hit its 12th new high.
That's
for
a
the year.
lie.
Alphabet earnings.
You said 15% was too much. Now it's what market. That's what they expect now. You're a liar.
Investors out there right now.
Well, Alphabet, what we're going to be looking for is pressure on their search results because of companies like ChatGPT and other search. But also with Alphabet, though, looking at Waymo, also their cloud business, and YouTube, that pretty much equates to the enterprise value of the stock. So it is not an expensive company at this point. The pressures on search are probably already priced into the stock. So I think tech can continue to lead. We'll see with Alphabet. Of course, Tesla, a bit of a different story.
Yeah, Sarah, we'll probably have to cut you off.
Why is
here
it a
as we
different
get those
story?
results, but in the meantime, shares of
'Cause you can't
Alphabet
stand
are
him?
trading higher right now. To me, one of the most interesting things in the trading session today was that it was all of these power-related companies, and actually, I'm already going to cut myself off. Alphabet earnings, we're ready to go. Mackenzie Sagalos has them for us. Hi, Mac.
Hey, Morgan. You've got Alphabet shares surging in the after hours, up about 1.3% now. Let me get you those top and bottom line numbers for Q2.
185.29.
$6.4 billion.
And I'm gonna buy some.
That is a beat. The analyst consensus was $93.9 billion. On the bottom line, second quarter EPS was $2.31. That's also a beat. The market was looking for $2.18. We've also got another key figure, which is cloud revenue that landed above analyst expectations, coming in at $13.62 billion versus the $13.1 billion analyst consensus. They want to keep digging through these numbers, and I'll come back to you. But for now, shares actually now trending a little bit lower, down 0.5%. Back to you guys.
Mackenzie, we'll be back to you as you get more. Sarah, I want to get your reaction to that with a beat on the top and bottom lines, but the shares under a little bit of pressure. We know there had been a little bit of a rally into this name ahead of the print.
It's going to depend on the conference call and what they say about the pressure on search versus the other areas for them that are growing quite quickly, like Waymo and also YouTube and their cloud business. That's going to be what matters. The stock is not extremely expensive here, but tech stocks have rallied quite handily going into this print. And that's what we've seen with the market recently. Momentum and
Boom, baby.
had actually started
Perfect.
to roll over before today as people had been moving more into value stocks as the economy had remained strong. So one main question is, can momentum and tech continue to lead? I think that it can. Tech right now, the Mag 7 is over 30% of the S&P market cap. but the earnings growth driven by AI should continue to deliver, including AI investments, which we should hear more about with Alphabet, which has signaled $75 billion in AI investments this year.
Yeah, I mean, speaking of these giant CapEx numbers from Alphabet and others, some of the biggest winners in the trading session today were these energy-related and infrastructure-related plays, whether it's GE Vernova or Baker Hughes. It came up with Baker Hughes. Even some of the other HVAC-type system companies as well. Is the meaningful trade here around some of these AI infrastructure names as we start to see more and more money actually go into the ground?
Public and private interest for infrastructure has been a top pick for our Global Investment Committee for many quarters now, not only based on AI data centers, but also more building coming back to the U.S. in terms of infrastructure. I think that's a great play to offset a continued investment in the winners within technology stocks. AI is alive and well. It's a trend that's not going to go away. It's going to increase productivities for companies and their revenue levels, and we're going to need the infrastructure to build that. So that is a really nice derivative play that I think will continue for the infrastructure space around AI.
On the straight up AI front, we've got a couple of interesting companies reporting here in overtime today, ServiceNow and IBM. IBM, long considered a sort of old guard company, but it's been on a very interesting run lately with software comprising now a much bigger percentage of its business post Red Hat acquisition. And then ServiceNow, when the market's not rallying overall, had been one of the few software players at scale to continue reaching new heights stock-wise. So how should investors think about the difference between different types of software companies, you think, how they should invest in them, how they should play them, what they should watch for in these kinds of results?
I think software companies, actually, we are less positive on those and more interested in semiconductor companies where inventory is finally being cleared out. I think the semiconductor cycle from a supply side is going to improve in the second half of this year. And then hopefully we'll see demand.
I don't understand how these people make money. I really don't.
Able to implement AI into their business models and whether that will be a positive or a negative for them. So we're less positive on software companies, more positive on the trade in semiconductors.
Yeah, I know we're waiting on.
You're an idiot.
YouTube ads, 9.8 billion. The TAC, okay. And Mackenzie's going to bring us some of the other numbers. So we're going to go back to her. Stay right there, Sarah. Mackenzie, what do you have for us?
Hey, Morgan. So two other numbers we're looking at is Google search and other revenue. This is a key read on both the ad market and the shift to generative AI. That was a beat. That segment coming in at $54
So I thought ads would be down.
The street was looking for $52.8 billion. We also saw the company revise up its full year guidance on what it's going to spend on CapEx to $85 billion. And that's really big with respect to the competition as it looks to close the gap with AWS and Azure. I'm going to keep going through these numbers, and we've also got the call starting in about 20 minutes, Morgan.
All right. Mackenzie, thank you. Shares are down about 2.5% right now. Sarah, I want to get your reaction to that, especially that CapEx number that's now been boosted to $85 billion. Also, this commentary in the release that AI is positively impacting every part of the business, driving strong momentum.
Pleased to see the increase in CapEx spending on AI. That $75 billion number I mentioned, which was their prior guidance.
IBM's about to hit my support.
Before, so not surprised to see that continuing to
just go work for.
That is behind our thesis that the AI trends growth rate is going to only accelerate from here. I think the other thing, though, is search for Google. Seeing them beat on that is very positive for the company. That's their core business. That's the one that we're worried about could be under pressure because of competition from other AI companies like ChatGPT and beyond.
All right, Sarah, thank you for kicking off the hour. And in the meantime, IBM results are out. IBM beat on the top and bottom lines. Guidance is a raise on free cash flow. I spoke with CEO Arvind Krishna about the quarter. We'll share what he told me, but first the numbers. Revenue was $16.98 billion versus $16.59 billion expected. Non-GAAP EPS, $2.80 versus $2.64 expected. For the guide, IBM reaffirmed constant currency revenue growth of at least 5%, but said cash flow will be more than $13.5 billion. That's a change from about $13.5. Here's what CEO Arvind Krishna told me about the quarter. On the segments that did best, he said, we did well in software and did really well on the mainframe. Those are probably the two standouts for the quarter. Now, of course, because those two are both where the last dollar is much more profitable than the first, that results in then the bottom line being beat, and we're carrying forward some of what we beat, but a bit more. So we're raising guidance on revenue for the full year, and we're raising guidance on free cash flow for the full year. Consulting was flat, better than negative, which it was in the first quarter, and I think that just given where we are, but also where others are, I don't expect a lot of improvement this year, but I do expect next year to be better. I asked him if the days of bottom line growth and top line stagnation for IBM are officially over. He said, you cannot engineer free cash, okay? And I said,
yes, you can.
Revenue growth, that's what he's referring to when he set the targets for the street. You can't hide revenue growth. You can engineer earnings, you can do other things, so that's the reason I picked those two metrics. He's talking about free cash flow and revenue growth. So now the third part, we are very clear in our model. Software will approach double digits, so 7 to 10% is the range we're going to be in. Why do I feel comfortable about it? 80% of our software
at 290, 293. We stay above the line. We're bullish on IBM, but I think this thing can drop to around 267.
267.
262.
Nailed it.
Then we got O'Reilly. O'Reilly's just a monster. But it just didn't do nothing for him. Now look at it. He's trading us around 100 and something. So your support level to hold is going to be the 9. And then we got this right off the 21 channel right here of support between 262 and 267. We'll stand bullish at 277.59 for a double top up here, triple top at 290, 293. We stay above the 9. We're bullish on IBM, but I think this thing can drop around 267.
Whoa!
Just 262. Then we got O'Reilly. O'Reilly's just a monster. Just a monster.
So there's your answer. 267, Jimmy said. Here's Tesla.
Revenue coming in at $22.5 billion, a little shy of the estimate of $22.736 billion. Just going through the investor report right now, we don't have a whole lot of details, but they do say that they have sufficient liquidity to fund
that's shocking them.
Laid out, and that the plans for a new, lower cost, more affordable vehicle, if you will, coming to production this year, remain on track. What does that mean? Well, you've only got so many months left in this year, but that's the latest in terms of what we're seeing with the Tesla report. Don't forget, we're going to have more in a little bit. We'll come back to you guys as we get more details, especially with things like the automotive gross margin, excluding zero-emission vehicle credits. But the conference call is really what people will be focused on in terms of what
Not
Elon
really.
Musk has to say when it comes to robotaxi, human.
You're so wrong.
Speaking of earnings, we're going to continue with this train. T-Mobile earnings are out. The company topping forecasts on both the top and bottom lines, handily beating estimates for postpaid wireless mobile additions as well. The company also
said this one would drop.
Customer and financial guidance. Shares are moving higher right now. You can see up more than 4%. And joining us exclusively before the conference call is T-Mobile CEO Mike Sievert. Mike, it's great to have you back on.
They ain't up
Let's start
4%.
right there. It was very much a beat across the board, and you raised guidance. What gives you the confidence to do it?
Well, no one should be surprised by this, Morgan. I mean, this is the effect of one company able to simultaneously offer the best network in the country and the best value.
Nailed my
Customers
support.
are going to T-Mobile. This was an all-time record Q2 for postpaid net additions and postpaid phone net additions. Huge record for us, but at the same time, financials beating expectations, and we're moving guidance up. So it really shows that the model, the durable advantage.
Hogwash. So T-Mobile, you want to listen to somebody with an earnings report, you listen to Jimbo. How many people watch my earning videos? None of you?
calling out last year, and we had a nice big bounce on it. She run up $9. You know, this thing could easily come out with earnings and drop down here to a double bottom off the 200 EMA and SMA and be a very strong buy. So let's go ahead and put a price line right there, just right above that 200 EMA, and support the hold. I think it's going to be right in here to stay bullish, right around 26. Let me see if I get this here. $26.35, but it kind of had a pullback already. So 25.42 I think would be a very strong buy for this stock right now, then 26.35 to keep it bullish. And then if it wants to run up, it's got to break the 9 and the 63. So somewhere right around 27.38 to break resistance. It'll be one to watch. I think it's kind of overbought. So if it comes back down here, hits the 200 on the daily, I'll run it back up. Verizon, I know.
There you go. Chipotle, CMG, see what they got, see if they're going to make me
Action,
mad.
also the biggest since the second quarter of 2020. Chipotle, though, reporting a return to positive comparable sales and transactions in the month of June. Its restaurant level margins right in line at 27.4%. The company noted inflation across several of its
I got
key ingredients, primarily
45.36.
steak and chicken. For the full year, it's cutting guidance to about flat for full year comp sales. That's down from the prior guidance of low single-digit growth. In a statement, CEO Scott Boatwright said the company was seeing its momentum build as it rolled out its summer marketing initiatives and comparisons ease. You can see the stock is down just under 9%. And joining us now to hear more about the quarter is Scott Boatwright. Scott, thank you so much for being here.
Hi, Kate. Thanks for having us on today.
Great to see you. So I do want to talk about the trend that you mentioned in June in this release. Last quarter, you said you felt the company could get back to those positive transactions in the back half of the year. You did see that trend last month. Do you think it's sustainable?
I do, Kate. You know, we saw some real consumer softness that was really unexpected back in the May timeframe when we saw consumer sentiment drop to an annual
Weekly on this one here, see if we can see anything that would excite me to take this trade. On the weekly, we're at support. We're definitely at support on the weekly. So if this thing doesn't hold, we got an inverse head and shoulders down here. And that'll be your support level. Right around under 50 bucks, right around $50. So this could bounce off 50, and if earnings aren't that good, it can easily be a very strong buy down here off the double bottom. So let's keep that in mind. Right off the 200 or right off the 50.
45.36.
50 bucks. And then resistance to break, of course, if they're good. Now they were priming this stock up last week. People like to eat here, especially the younger crowd. I don't like them. I had a free Chipotle burrito one time, and the thing was bigger than a donkey dick, and just slushy, and I just didn't like it. I just didn't like it. I'd rather make my own. So this is definitely a market maker, but the fat cats love this stock. I don't. $50, we're going to put in a little work right down there, and if that holds, we stay bullish. What is that? I said that's the inverse head and shoulders. Like type note in there, and then I'll know that's on the weekly. I'd rather use the weekly than the daily on this one here. The daily, where it definitely hits support off the 50 SMA. So you see this here, all these resistance levels right in here. Let's go ahead and draw a little price line or trend line from that body right there to that body right there. And that's where we pulled back last Thursday. And that's right off the 50 SMA. So if we can hold that, we can come up and hit a 1, 2, 3 right around $58, $5 bounce. But we got to break that 200 at 55.8. Whoop. There's your little pivot point area right in here. We're going to bring it right above that too. It's hard to say. I like that wick right there, so I'm going to somewhere around 55.72 to break this coming week. If we can break that 55.72, 55.72, we can run it up to 57.12. And then maybe take it up to the triple top up here right around 58. This will be a good one to watch next week. Although I don't like it, I still can't be biased in my stocks. I've learned my lesson from that. And I'm sure not biased when it comes, I'm biased when it comes to politics. I hated Biden. And I support Trump. But I also traded well during the Biden years. I didn't let that bias get into my trading. Although I knew that there was a that it was market was artificially raised by the printing of $14 trillion in 4 years. Love, we got Southwest.
So I'm waiting for 45, I guess, on CMG before I buy it to swing it back up. I really don't like this company. I'd rather eat at Kava. If I had a chance to eat anywhere, it'd be Kava. I just love these salads. I love them. Spicy lamb and avocado. Geez. Once I started seeing these salads, I started making my own because I had one today. If I had one of these around me, I'd eat there for a month straight, nothing else. Lee Summit. I'd have to drive to Lee Summit. And that's 2.5 hours. I picked up a quarter pound in Lee Summit before for myself. I never sold cannabis. I just bought it for myself. Okay, well, I think I'm done. Okay. Hope we had a good time today. I kind of, once I made that big chunk, I kind of said, I'm going to take a break. And I got to thinking about Studio said that my accuracy in the beginning in the morning's 100%, but later in the day, I need to wait, have more patience. And that's the way I did it today. I missed a couple trades I could have took that I called out. So it's hard to listen to these people anymore because they're so bearish. I don't get it. So, matey.